Alrighty. Are we live? Wait for it. Wait for it. Oh, there it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on that video. Make sure you're subscribed. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream Alerts boot camp and real estate course. But, ladies and gentlemen, welcome to the final week of March. Today is Tuesday now, but today is very interesting. We are keeping out to see if the bank stocks can recover for day two. There's a little bit of back and forth. It seems like people are thinking the banking problems are about to go away. However, they are quickly focusing on rate hikes and the odds of the next meeting. So it's getting kind of interesting. We got a little bit of data. We also had some pretty big news overseas, and the big one is BABA. They are up about 10% right now, and it is on the news that they are going to split up BABA into 6 different companies. So pretty much 6 little babies, 6 little baby Babas. That's what it is. 6 little baby Babas are better than one big Baba, and that'll make Mr. Winnie the Pooh, he'll be happy about it. So it's very, very good, but we're going to see how that plays out. And then you even had a raid of France banks. It's an unrelated thing to the banking crisis. We'll see how it plays out. And then we'll find out if really that'll add any pressure to any of the other banks. But very interesting morning so far. Again, right now, your debate is very simple. Do we worry about the banking crisis, or now do we go back to worrying about inflation and rates? It is quite interesting. And on top of it now, we will be getting a House testimony with the head of the FDIC, Michael Barr of the Fed, and then also another one of the heads from the Treasury. So we'll find out what happens. It's going to be exciting. I'm glad you're here. And let's close out the quarter, ladies and gentlemen. Good morning. How are ya? What's up, baby? What's up, Match? Match, you said you found some boss? What's going on, man? What's up, Jake from State Farm? Good morning. Charlie in the tray performs a more party trav. Good morning. There it is. There's the Yuto. What's up, Candy? What's up, Maria? Laker J. Oh, good morning. Good morning, Sarah Sosa. Good morning, Nepal. What's up, Zeke? Blue Peterson. KVS Million. Let's go, Vic. What's up, Casey? What's up, Ario Junior Aguilar? Good morning. Open face sandwich in the house. Robbie's ready to play. Sipping on in and goes. What's up, baby? Good morning, Alaskan Assassin, Dylan Jordan, Ryan Urbanic, Nathan Lowy, Jason Say, Gregory Ruiz. Oh, Patrick Bacardi Haswell. Oh, good morning, baby. What's up, Peyton? What's up, Doug? Good morning, Mr. Miranda. I know Josh was ready to play. I know Last One woke up bright and early. Inverse King. Oh, he's ready. He's ready. Osama, he's ready, baby. What's up, Sarah? Bright and early. Matto, CYB, Mr. Silva, Kenny Miranda, Drew Raz, good morning. What's up? What's up, Mr. Ortiz? What's up, Mr. Leach? How you living, Jesse? Battleborn. Good morning, Brandon. Good morning, Wally. Tony Garlinger. Oh, what's up, Gregorio? Oscar, man, the chat's going fast. Martin Scully, it's going fast, baby. It's going fast. Adele, it's going fast. Sinan, it's moving out here. What's up, Carmelo? Oh, Carmelo, good morning. Good morning, Aki. Hey, Jesus Moreno, God is great. Oh, tell him, baby. What's up, Wesley? It's beautiful. Mr. Malone, it's beautiful, huh? It's beautiful. Good morning. I'm going to wake y'all up and drive today. I'm just saying, I hope y'all woke up and drive. I told you yesterday I was getting hyped. Now it's Tuesday, so I don't even know, man. Good morning. Wake your ass up. It's here. You're here right now. Oh, man. Oh, I got some pre-market movers for you. Hold on. My levels are coming in. All right, I'll get those saved. Oh, perform. Starting it off bright and early. There you go. What's up, Greenwill? What's up, Among Us? Among Us. Oh, the strong and the Chad. The strong, the Chad. The Chad is resilient. I don't know if that's confidence inspiring or not. We'll see what happens. But let us get to the news, and then I got something else to show you. But France, they're fighting. Actually, let me update this. Let me see. Maybe let's get one more refresh. One more refresh. France financial prosecutor raided 5 banks, including SocGen and BNP Paribas, as part of a probe into a tax fraud and money laundering related to dividend payments. HSBC, Natix, BNP Exane unit were also searched. The prosecutor said combined fines may total more than 1 billion euros. The raids related to a dividend arbitrage strategy known as Cum, where shareholders transferred a stock for a short period of time to avoid a dividend tax. I'm just reading the news, man. That's what it's called. That's what it's called. Alibaba. They plan to split up their $220 billion business into 6 main units encompassing e-commerce, media, and the cloud, each of which will explore fundraising or IPOs when the time is right. Group CEO Daniel Zhang will head up the cloud intelligence and nod to the growing role AI will play in e-commerce lenders' portfolio in the long run. Shares rose pre-market. Treasury yields gained for a second day. Futures and European stocks were mixed. The dollar fell against most major peers. Oil fluctuated and gold rose. Credit Suisse urged Swiss clients to keep their accounts as they sought to soothe takeover worries. More fallout. Top Treasury domestic policy official Nellie Liang will tell Congress regulators are ready to repeat steps taken after the recent failures. She testifies today with Fed Michael Barr and the FDIC head Martin Grunenberg. A bipartisan group of senators wrote to Jerome Powell questioning whether the Fed used its full legal powers to supervise SVB and other banks. Meta, they are planning to lower bonus payouts for some staff, the Wall Street Journal reported. Shanghai Bourse called off a hearing tomorrow about Syngenta's proposed $9 billion IPO. Albemarle's $3.7 billion takeover bid was rejected by Liontown. Google asked a U.S. judge to dismiss a Department of Justice case against its dominance in the digital ad market. Binance Defiance CEO Changpeng Zhao shot back at the CFTC, calling its lawsuit over alleged violations of derivatives unexpected and disappointing given compliance efforts and cooperation with regulators. His firm does not trade for profit or manipulate the market, he said. This suit has an incomplete recitation of facts. Credit bull Jed Lasaukitz, chief investment officer at JP Morgan, is bullish on high-grade corporate bonds following bank failures on both sides of the Atlantic in what's probably the largest allocation ever in his multi-asset portfolio. He is overweight on IG credit, a position funded mostly from cash. The debt he's buying generated about 125 to 150 basis points over the 5-year Treasury. Around 13 companies are looking to sell U.S. high-grade bonds today following yesterday's 10-deal barrage. Safety first, balances at the Fed's reverse repo facility climbed even as rates in the private market rose as much as 15 basis points above the central bank's offering. 98 counterparties parked $2.2 trillion at the RRP, up from $1.7 billion from Friday. Overnight GC repo closed at 4.8, curvature said, and the companies with and that compares with 4.5 to 4.9 market rate. But during crisis, investors like to keep their cash in safe places. Oh, we do need the poll, huh? Oh, please hold while I connect your poll. Is that weird? No? Okay, please connect your call. The marketee will close. Ba-da-ba-ba-ba. Like the video. Okay, green. Or remember last time I put yes or no? You know, sometimes I don't think right. You know what I'm saying? Because I can like talk while I typed. It's really weird. But then I'll just end up just putting some weird shit out on autopilot. I blame my ChatGPT update. I mean, what? What? Your name? What? ChatGPT, bro. I got to watch the South Park episode. That was fun. Let's see. Uproar in Israel calms down a little bit. 9 a.m. U.S. January FHAFA price index. 9 a.m. ECB Lagarde and Nagel speak at BIS Innovation Hub. 10 a.m. March Conference Board of Consumer Confidence. 10 a.m. Fed Barr testifies before Senate Banking Panel. 11:30 $30 billion 7-day CMB auction. 1 p.m. U.S. to sell $43 billion 5-year notes and $45 billion a 17-day CMB. Canada's Finance Minister Chrystia Freeland delivers budget. Earnings include Micron and Lululemon. The Fed will try to avoid harming the economy any more than needed as it confronts inflation. Governor Philip Jefferson said it's going to take some time because there are components of inflation that have turned out to be quite persistent. For example, services excluding houses. U.S. consumer confidence measured by the Conference Board may have declined in March, shaken by banking sector turmoil. Investors in Brazil will watch central bank minutes to see if officials have dialed down hawkishness, according to Bloomberg. Rob Joyce, head of the NSA cybersecurity arm, said TikTok is China's Trojan horse and poses a long-term strategic cybersecurity threat. U.S. and Japan agree to a pact on critical mineral supply for supply chains. Prices in UK soared to another record high. Grocery price inflation reached 17.5, a fresh record according to Kantar. Separate figures from the British Retail Consortium showed food prices rising 15% in March as fruit and vegetables fell into short supply. Overall, the BRC said shop price acceleration accelerated to 8.9, a fresh peak from an index that started in 2005. French unions are holding another day of nationwide strikes, calling for Emmanuel Macron to return to negotiations on pension reformers. Rail operator SNCF warned of severe disruption. Hungary's central bank kept their benchmark interest rate unchanged at 13% after escalating clash with government. Terror attack in Northern Ireland now highly likely, the UK says. China plans to crack down on harmful social media content in a sign that internet forums already rolled by previous curbs will face continued scrutiny. The steps include rectifying the spread of certain content on short video and taking action to control teenage addiction to those apps. North Korea is ready to use nuclear weapons anytime, anywhere, Kim Jong-un said before the arrival of the U.S. aircraft carrier in South Korea today. The RBA may hike by 25 basis points next week and is unlikely to pause anytime soon, said L&T Finance Group economist Rupa Regionastur. The bank has raised their key rate 250 basis points since May. Fumio Kishida is preparing a policy package to address Japan's faster-than-expected fall in births last year. Ideas include compulsory paternity leave, canceling student debt for parents, and payouts for a third child have been touted. Damn, they're paying you to have kids out there. They said student debt relief if you have a child. That's pretty wild. Philippine eyes military pension to avert fiscal collapse. Australian banks are in talk with borrowers on home loan relief. Oil consumers use the recent slump in prices to lock in protection against a possible rebound. Swap dealers positioning a proxy of producer and consumer hedging showed that the second biggest increase in bullish Brent bends last week. RBC pointed to activity from airlines. OPEC Plus is showing no signs of adjusting oil production next week. Saudi Arabia has said publicly that the alliance should keep supply steady through 2023 as they navigate a fragile recovery in demand. Delegates said privately that online meeting of key ministers on Monday is set to hold position. EU energy ministers backed a plan to extend reduction in gas demand by year-end until the end of March 2024. The EU today may endorse a proposal that allow members to effectively ban Russian LNG without implementing new sanctions. Oil fluctuated while gold recovered. Losses to trade little change, and tin led an increase among most base metals. The spread between hard and soft red winter wheat widened to a fresh 12-year high amid worries about U.S. crop conditions in the key growing state of Kansas. Only 19% of the acreage is in good or excellent condition, the USDA said. That's not good. Kurdish officials headed to Baghdad to resume oil export talks. BP and ADNOC will form a natural gas joint venture and made an offer to take Israel's NewMed Energy private in a deal worth $2 billion. SocGen is trying to sell part of their loan secured against a portfolio of German apartments. MasterCard and Visa are among firms negotiating to buy Pismo, which provides cloud-based payments and banking platforms. The deal is valued about $1 billion. Clearlake co-founders Badad Eghbali and Jose Feliciano are mulling a bid for a minority stake in the NFL Chargers. People familiar said. Sportico reported yesterday that Dispanos Berbian is looking to sell 24% of the team. 24% stake. Apollo-backed software. Sofinova launches digital medicine venture fund. Disney axed a 50-staff unit developing metaverse strategies. The Wall Street Journal reported part of the broader round of cuts announced yesterday. The first workers will be notified over the next 4 days, with more in April and another round before summer. Americana's current and former CEO will testify in a congressional meeting in Brasilia today. The senator aiming to dig the events leading up to their sudden collapse. Adani Group stock suffered to erase over $6 billion in market value, the biggest decline since early February. Walgreens beat consensus for fiscal second quarter in sales. Goldman-backed Peter Schill posted a $453 million loss for last year after marking down the value of their investment. Twitter's For You feed will not recommend unverified accounts. EU officials signed off on a deal for ESG. Walgreens beat estimates with expanding primary care and focus. MasterCard and Visa are among firms in talks to buy fintech Pismo. Walgreens' second quarter adjusted EPS beat estimates. Microsoft probed by German antitrust regulators over dominance. Disney cuts metaverse unit as part of layoffs. JFTC says Microsoft Activision deal does not limit competition. Mexico toll road operator paid $232 million in dividends. Merck Keytruda chemotherapy improvements of PFS in endometrial cancer. And then U.S. schools need to overhaul the entire process if the Supreme Court offends ends affirmative action in admissions to improve racial diversity. They'd have to scrap prefaces for student athletes and legacy applications. The study found indigenous students' populations would still suffer. The solution may be going back to the K-12 education system. The CFA Level 1 pass rate ticked up to 38% of candidates passing. That's up from 36% of those who sat in the exam, but still below the 41% average pass rate in the past decade. Lockheed's second hypersonic missile test was marred by the weapon's failure to transmit in-flight performance data. People familiar said the warhead successfully separated from its rocket booster and proceeded into flight, but the data link failed. It's a setback for U.S. efforts to catch up with China and Russia in the key weapons capability. The late Ivana Trump was being probed by the FBI over allegations about her connections with her native Czechoslovakia in 1990. The nature of her inquiry is unknown, but it was highly sensitive. Excerpts from her FBI file show the probe spanned several countries over at least 2 years, though she wasn't accused of any wrongdoing. Synthetic fuels aren't the future. They may appeal to well-heeled Porsche and Ferrari drivers, but they aren't a viable way for Europe mass auto market to achieve carbon neutrality. They're the champagne of propulsion due to their cost, Iveco CEO Garrett Marks said. At the heart of Sweden's woes is a dysfunctional housing market. Property prices have surged by almost 250% in 20 years, both cementing and exasperating social divides. Cheap money, economic growth have helped paper over the problems until now. That's the big take of the day. And then on this day in history, Constantinople was renamed Istanbul in 1930. About 6.5 years after the creation of Turkey, the name probably derived over centuries from a combination of Turkish and Greek words meaning full of Islam and into the city. The strategically placed city began a small fishing port called Lagos, switching to Byzantine around 700 BC. Wow. Quite interesting, huh? Quite interesting. So, I got a couple of plays for you, but let me break out the pre-market movers first. Or, excuse me, not the pre-market movers, the pre-market levels, my friend. There's a lot today. Wide range. Wide range. I think you got about 150-point range. So, welcome to the volatility. Welcome to the uncertainty, my friend. So, here's your levels for the day. Very similar to yesterday. So, that 150 points, it's not like it's anything new. You know what I'm saying? It should not be anything new. Let me get my pre-market movers for you. And let's see what we have. Let's see what we have. Alibaba shares rise 10% pre-market, set for their biggest gain in 3 months after the e-commerce company planned to split into 6 units that will individually explore IPO. Array Technologies, ARRY, gains 4.2 after Truist raises the solar equipment manufacturer to buy from hold. Carnival is raised to equal weight from underweight at Wells Fargo. Shares gain 1.8. Sienna Corp, CIEN, shares are up 3% after Raymond James upgraded the communication equipment company to a strong buy from Outperform. First Republic rises 1.1 and set to extend yesterday's rebound as hopes of more support from U.S. authorities lifted sentiment towards banking. MPC, Marathon Petroleum, slips 1.1 as J.P. Morgan cuts the recommendation on the oil refiner to neutral from overweight. Occidental, Oxy, advances 1.5 after being upgraded to outperform from market perform at Cohen, with the broker saying oil and gas company stands out for its superior exposure to oil pricing. Oscar Health, OSCR, named Mark Bertinoli, the former head of Aetna, as their next chief executive officer, bringing seasoned industry to the upstart insurance company. Shares gain 40%. Oh, man, they like him. PVH surges 12%. The parent company of Calvin Klein and Tommy Hilfiger issued stronger than expected forecast of revenue growth. Paramount Digital, Para, shares are up 6.2 after Bank of America upgraded the media company to buy from neutral. Viking Therapeutics, VKTX, said they plan to initiate a phase 2 study of VK2735 in patients with obesity in mid-2023. Based on trial 1 results, shares gained 36%. And Virgin Orbit, VORB, falls as much as 19% pre-market and is set to extend losses following a record 33% slump on Monday after the launch provider placed workers on furlough as they seek rescue financing or bankruptcy. Hot dog. That one is not good. That one is not good. That one is not good. So, Chattadonia, let's see what happens. But we got a little bit of time here. I think we got a decent amount of time. So, I want to go over something. But give you your final one. I'm going to go over some of these comments here before we begin our day. So if you're on the community post on Stock Market Live, drop a play or something. Show me what you got, baby. Show me what you got. But I will be right back. I will be right back. There are your levels. There's the market. And God bless America. And welcome, baby. Good. Welcome.
Sending a letter to Powell questioning whether the
loud.
Fed has used its full powers in supervising lenders. Team coverage of this incredibly important hearing starts right now. Bloomberg's Anne-Marie Hordern alongside Kaylee Lyons down in Washington, D.C. Kaylee, I want to start with you. Right, we are looking at the hearings that are set to begin, I believe, in about 45 minutes' time. What is the tone? What is the goal of these particular proceedings?
Well, the goal of this hearing is to unpack what happened and why, and what regulation and supervision may need to change in the future to prevent something like this from happening again. These three testifying today are going to be facing some very difficult questions, particularly the Fed's Vice Chair of Supervision, Michael Barr. As you were just illustrating, a lot of question around what supervisors knew when. He does address that in his prepared testimony that was released yesterday. He said that staff were actively engaged with SVB, but ultimately the full extent of the bank's vulnerability was not apparent until the bank run actually happened. He also goes into detail around that 2018 rollback of certain Dodd-Frank requirements and says that the Fed is looking into how more stringent measures being applied to SVB may have prevented its failure. That is also a subject touched on by Marty Grunberg, the FDIC chair, who basically says that these failures show that banks with $100 billion in assets do have implications for financial stability, and as a result, prudential regulation of these institutions merits serious attention. So it's going to be a lot of conversation about how regulation and supervision need to change to prevent this in the future, but also how do you stem the bleeding right now as we are still concerned about deposit flight from smaller institutions to those deemed too big to fail, which is where the question of the FDIC insurance cap comes in. Should it be raised? To what level? Should it be lifted indefinitely? For what period of time? Those are going to be the kind of questions faced by those testifying today.
A lot of people also looking to what kind of policy response is implied by the questioning, implied by the aligning of different camps in Congress. Anne-Marie, what are you learning about what the camps actually are, what some of the politicians are hoping to get out of this?
Well, listen, what this is going to be is a hearing with a lot of questions, but also, Lisa, a lot of statements.
A lot of questions and a lot of statements, Chatadonia. So, let's get into it. I got some cool things for you. We're going to do it a little different than your plays. Some of you might remember this. We would do this on the watch list, but I posted this last night. I wanted to have a little bit of fun with it. This is what I was telling y'all yesterday, just the night before, going to post headlines, and I'm hoping to, again, because this was posted at like 8 p.m. Pacific time, and then as you see, some of you guys were posting it on there. I loved it. You guys were posting everything from the Baba stuff to everything else we got going on there, so I thought it was great. Post any plays here. Let's just see what we got. Thank you. God bless you, George Anthony. I'm just going to go through it here. I already went through it a little bit, and there was a couple. I like the format. See, Jesus is keeping it live there. Oil 5%, watching future contracts, CL to gauge demand, waiting for inventory numbers. I feel like oil could tell us about the state of the aggregate demand economy. So, again, and even the update that we got off of it is pretty important. What was it? The hedging activity on Brent has rose the most in like 2 years. Oh, we got a random play too, baby. Let's go. Let's go. Long-term, baby. Let's go. Quarters nearly over. Soft landing looks grim. With that in mind, Chad, think of the UNG play. My position is 125 shares with the average of 1350. I think so. Again, everything got sped up. So if we do get a faster rate cut, I do think UNG and oil, I think it all comes back there, baby. So let's see. Love the post. We love you, baby. God bless you. Let's go, Darian, Rebecca, Nate McAllister. Amen. I say under him all things were made. Amen, amen, amen. Be okay last night. Again, Jesus with it. We don't see rate cuts with the old playbook with central banks would rush to rescue economy as recession hit. The strategist said we see a more nuanced approach of curbing inflation, less fighting, but still no rate cuts. Okay. I feel the safe from the horn here, or not playing currencies, looking forward to bond rates and locking rates in May. This is dope. You're dope. God bless you. Chatadonia forever. The community tab is sound and resilient. Who's with me? Who's with me? Oh, yeah. Oh, yeah. Mad Money. First Citizens takeover of SVB won't solve the bank run problem. Jim Cramer says the banking system is salmon. Oh, no. Oh, even Jim Cramer. I guess maybe it is if Jim Cramer's saying the opposite. Oh, no. Bop, 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 bop. I'm loving it. Thank you for the info. U.S. Great Edition. 5-year no auction, 1 p.m. Eastern. That's what I'm talking about, baby. Banking system is resilient. AMD puts weekly for March earnings on Tuesday. Hey, Josh. What's up, EdgeX? How you living, baby? I love you guys. And then Ollie Bob, why did this show up at the bottom? This a man posted it early, man. Alibaba business units can pursue fundraising IPO when ready. Not bad. Not bad. So let's see how this works. I'm expecting y'all to post a little bit on there too. And I'm going to just get these to you the night before. And we could use this to update throughout. So even if the chat's not live, we could use it as a thread. And the best part is, I mean, a lot of people, if you want to flex a play, if you want to flex news, post it in the comments. I got a timestamp. It's easy to give credit where credit is due. So there you go, baby. There you go. God bless you. And thank you, hey, Jesus, and everybody else who posted on there. Love the updates, baby. Let's go. But Chattadonia, it is time. You know what time it is. Here at the Cult, man, before we do anything, before we try to chase a dollar, before we try to enrich ourselves, oh, yes, we must pay homage to a very special group of people, a group of people who have sacrificed more than most of us ever have and ever will, and I'm talking about the veterans of the United States of America. So on behalf of the Cult, the people here, the people not here, I want to give a huge special shout-out to all the active servicemen, past servicemen, anybody who has served this country, even down to their families. I hope you know we love and appreciate you. Thank you for your sacrifice, and I encourage all of you, day in and day out, to show love and appreciation to all of your veterans out there, baby. And anybody out there helping out their local community, all the doctors, nurses, teachers, firefighters, police officers, garbage men, janitors, people volunteering with the nonprofits. You know what I'm saying? For real. I hope you know you're appreciated, and thank you for your service as well, ladies and gentlemen. But, ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Son of the Jets! Oh, it's game time, baby. Or nah, let's go. Oh, let's go. Good morning. Are you awake? It's Tuesday. You better be awake right now. Let's go. Baba splitting into 6 units. Everybody talking about it. Do we worry about banking? Has it healed? Or do we worry about rate cuts and inflation? It is quite the back and forth we are waking up to this morning, and then House testimony should be beginning here in about 30 minutes. So we'll get 30 minutes without anything, and then we are going to begin listening to that. I would advise you to watch the banks during that testimony. Again, Fed Chair Michael Barr, Vice Chair of Supervision will be there. Then the head of the FDIC, and then the other head of the Treasury that is not Yellen. So we will see, my friends. We will see. But I wish you all the best. Make sure you like the video. We got 1 minute till we start this game. You know what I'm saying? So show some love. If you have any questions, let me know. And let's go. Let's go. Ba-da-ba-ba-bop. So far, oh, man. The devastating school in Nashville. I did. It was very, very sad. I actually... somebody from one of my friends' church, they were actually there. So it was very, very sad. I mean, you know, prayers up to all of them. Always very, very sad to see. But, yeah, there's a lot. There was a lot. And then there was something else, too. I'm blanking on it. But we will see. I have my plays. I didn't even tell you my plays. That's totally unrelated. But I'm going to be watching Baba, EUFN, Procter & Gamble, WWE, Walgreens might do a post-earnings play. Lyft, the CEO left, stock is up 10%. Then EBS, I have that on there for the PDUFA. And then Disney. Let's see how it continues. And then BMEA. It's a biotech who just got positive data for their diabetes drug, which was pretty interesting. SVB, they got SIVBQ. Well, that's a good sign. Why are we going down? I mean, the data kind of had a reaction, but everybody's kind of just on ice right now. So, again, even China to Europe was kind of back and forth, and everybody is just debating whether or not the bank situation is over. But if it's over, that means we worry about inflation and rate hikes again, or does the banking situation get worse? Round 1. Fight. So let's see. We're barely down, though. We were up a lot more. Even then, when I made that post last night, that one was, what's it called? The market was up at that point last night. So we'll see. But watch regionals again here in 30 minutes. They will probably take over. Again, NASDAQ is down a quarter. Dow is in the green. Small caps are down. That's probably weighted because of regional banks. And then S&P is only down 0.1%. But watch the tech moves today. We need to see if tech is actually, with whatever happens with the banks, you want to see how tech does indeed react. Where's that meta? Oh, the meta went up a little bit. We'll see if that actually holds up. Bonds clap. Bonds are, again, and everybody's debating bonds now too. So Alibaba surges 11%, most in a couple of months. Splitting into 6 units is the headline. Las Vegas Strip gambling revenue rose 18% year over year. Watch MGM. And then again, Lyft is up 2 from the CEO. Meta's already down 1.5. And then don't forget, again, Baba just keeps killing it. Watch out for Walgreens. Oh, it's already up 2. 87. I'm kind of down. Top tick Josh in full effect. All right, it's a slow mover. I grabbed 100. Oh, wow, that was a shitty fill. I grabbed 100 shares of Walgreens, 33.90. Again, the earnings were good. I thought it was going to move big yesterday, and it didn't move big. So, I mean, I'll take it, but it's a very slow mover. So even if it goes back to break even, that should be $1. Yeah, Meta's under 200. Our options are up, but not as much. Check all the incoming divvy payments for the long term. Ooh, is it long term? Or even then, I think some of our swings too. We might even get paid on that. Deutsche Bank, yeah, they were doing their thing. Again, kind of back and forth. Again, regionals and all bank stocks should take the spotlight in the next 30 minutes. No bank news as of yet, but again, that testimony, that will be big. That will be actually very, very big, and I think a lot of people are going to be waiting for that one. Coin, they were trying to make a way up. Again, SPY's just coming down here. First 3 minutes, bonds are down, trying to make a way up. TLT is more green than IEF. TLT going back down. It might. I mean, I think right now, I don't know how low the bonds can go if they reverse, but the debate right now is, do the bonds go higher, a.k.a. do yields go lower, and it is pretty wild. So that's kind of the debate that we're having right now. The diabetes drug approval was BMEA. They were already up 50% pre-market. So now they're still up 54%. BMEA. But again, diabetes drugs have been running, though. I mean, people like them. Tesla first look 188. Coinbase, watch if they break 60. Tesla 190. I mean, that's pretty bad. But I guess you were down at 187 yesterday. Again, just watch out tech. This is what we're saying. If tech loses that safe haven, that's not good. I mean, Apple's not down as much. But Google and Meta are down 2% right now. So you got 75% on the Meta contract. That's decent. I guess because it's in the money. Google about to break 100. What did Uncle say when you don't buy the dip? When the 3-month is on the fall. I got a theory for you. Shit. Oh, I got a great bond theory for you. So hopefully you liked the video and we could get to it. Oh, yeah. Y'all slacking on. Okay, no, it updated. I was like, y'all slacking on the likes. I got a cool thing to show you related to bonds in the yield curve if you'd be interested. I'm looking for a quick 1,000 on the likes. And then we could run that. Tesla keeps going down. Where's NVIDIA? Oh, NVIDIA down 1%. Dude, tech is getting clapped. CDTX, you got to work a little bit. He got to work. What's the other one? EBS. Again, they were up 9%. They just flipped, but PDUFA there on the 29th. We are still inverted on the yield curve, yes. Hurry, quickly, get to the yield. So Meta, first little bounce there. Oscar, they're up 40% on new CEO. And then Walgreens already flipped down. It was like 60 cents a share. Even Square came back down. That one was doing good from yesterday. WWE's not down too much. Coinbase still holding pretty decent. First little bounce kind of on the SPY. First green candle of the day. Boeing looking IHG. Buying more TYD. Not yet. I want to wait a little bit, but because I'll show you what I'm talking about. I have a Boyd. They had good sales numbers, but I have an interesting theory I'm going to show you. I thought Walgreens earnings, it was good, but it wasn't like it kind of makes sense why it's not moving. I was a little surprised, but it was good, but it wasn't like, wow, like it wasn't a big change. So that's really going to be the question. I mean, sadly, it'll probably respond more to analysts than not. Watch out for oil. Oxy keeps going up here. Again, the oil names are, people are talking about the hedging going on and just the recent moves that we've gotten with oil. Oxy. What's the other one? Baba's slipping. Oh, Baba. Meta's going lower. Tesla broke 190. I think if it breaks 180, literally 180, I think that's your money zone. Or 185 goes down to 182, but then 177, the 170 price seems good, and that's pretty much where it was from the earnings. Eli Lilly has diabetes drugs for sympathy. It's going as well. Good call. Baba slipped off 2% from the top. SPY's at VWAP. NASDAQ down 0.5%. Bro, big cash open sell on tech. Then SPY's down 0.25. Dow is just right at break even. And small caps are still down. Procter & Gamble moving up. Meta, Microsoft, Tesla still 2. Even NVIDIA, I mean, that's how you know tech is down, because even NVIDIA drops. So, damn. So, the options protecting our gains here, but those Tesla Meta gains not looking so hot. I guess it's keeping me my $1,000. SCNA up 935. All right, we got that. Microsoft down 1% now. Yeah, Google's dropping. I think I'm just gonna clear both of these at the same time. Maybe we'll give it. What time is it? It's only been 8 minutes. Google's still jumping. All right, I'm selling the Facebook shares. We're gonna take 500 profit on that, but then the idea is take the profit. So I sold Facebook shares, and then we're gonna take the profit there on the option in a little bit. Okay, I gotta do that now. All right, so $1,000 net on Facebook, but I think the most we were up was 1,400. I didn't cut Square, no. I don't know. I think we are off next Friday. That's we were talking about that yesterday. Disney and Apple. Disney had good news yesterday. Again, dude, tech, that's a fat sell-off. 2% to just, wake up and sell. That's a lot, Habibi. Habibi, that's a lot, you know? All right, thank you, Meta. You did good. And then, yeah, I'm still in the square there. So there's Meta. High ticker rotation or recession safe sectors are happening. GG on the meta. I'm not. I like it, but it sucks because I want to hold the meta. But remember, I was telling you how shitty that put was yesterday. That's why I was like, fuck it. I'll just take the $1,000, 400 off the top of like the max gain on the shares. But because if it bounced and like stuck here for like an hour or so, or like half the day, I would be down on both, and then it wouldn't work the same. XBI continues uptrend. Google sub 100. Square is bouncing up a little bit. And then we only made Walgreens. Meta. Coinbase is in the green. They're bouncing. Whoa, what was that on bonds? KRE new high. Baba's on the low. No way. Yeah, KRE is bouncing, so good call on that. Even XLF. So banks are waking up. Energy's best in the day. Industrials number 2. Staples number 3. And financials are about to go green alongside healthcare. Worst on the day is communication and tech once again. Where's that? What was it? 3M? Air 101. Tesla keeps selling. So Tesla, another low, down 1.8. KRE and the regionals are moving up, so that's a good sign for now. Whoa, whoa, whoa. WWE? Yeah, big pop on that. I think we're green on that one now. Yeah, that just brought us green. Oh, whoa, just came back down. Let's see. I'm not seeing anything. Class A shares are up most in a couple of weeks. That's a fat pop. That's 3% in a candle on WWE for some reason. That's actually very wild. Baba hit 300-day move. They do 300-day moving averages? I thought we only had 200-day. When we get to 300-day, dog? WWE on CNBC? Is that what it is? That's a fat pop for WWE. But again, they have been working their way up. And then we're still waiting for the McMahon stuff. And then he just reimbursed the company yesterday. That was the big headline. But I'm not even seeing any news. Oh, multiple suitors are interested in WWE, says Faber. Multiple parties are involved as possible suitors, said David Faber in an on-air report, citing sources who described the company's sale process as pretty hot and heavy. So there it is. So CNBC, pretty much a lot of people want to buy WWE. I keep messing with moving out. That's cool. I didn't know they had 300 days, bro. So I was like, what? Yeah, the betting on pre's. 90 seems to be a very big resistance for them. And then if they get above there, you might get like $2 or $3. That was the last highs, but we'll write out that. That's crazy. That one went positive instantly. And then Walgreens is bouncing back up a little bit. TYD barely in the green. Walgreens is working its way back up now. And then just watch coins still. Microsoft is down 1.2. Apple's still at the low. Again, the tech carnage is real. Amazon 97. Not bad. SVB, yeah, in like 15 minutes, the House testimony will be beginning. Atlas Power price target cut to $10 from $13 at UBS. AMD, I mean, chip makers actually got beat today. It was interesting. Tesla tanking. Macy's is popping. NVIDIA's on the low. Yeah, Macy's up a decent amount. I mean, Calvin Klein and the other names did good. So maybe that could be SGML. Amazon's popping. Bonds are coming down. So, again, watch out for bond moves. I brought that up on the watch list here. I'm telling you, that's going to be my, even my other theory I got to show y'all. Y'all still haven't hit 1,000 likes yet. I'm sorry. But it's okay. I love you. I'll show you it. So, like the video. God bless you and good morning. But I'm telling you, man, the bond market back and forth in this debate everybody is having, there is like, it's very stressful. I mean, I'm sure it's stressful as a trader, but These back and forth swings are just telling you how fucking crazy this whole thing is. Excuse my language. But this is what I wanted to show you. As of yesterday, this was the U.S. yield curve, the 2s and 10s, the one that I look at. It has uninverted, or it's steepened the most since 2008. So this little move I was showing you, we even brought it up on the watch list now. This is the most since 2008. So here's my theory. Are you ready? And this is why I think it's going to be wild. McKinsey starts cutting 1,400 jobs. They're private. SPY popping up here a little bit. We'll be adding the bill after the ex-divvy sell-off. I'll get more cash, but that's about it. Damn, Oscars up 58%. Shout out to Oscars. So you see this, right? The uninverting, but look at how it happened. This happened a lot in 2007 through 2009, and pretty much that's my theory. What I'm expecting here, I think we are. This could be a false breakout on bonds. I think we're gonna go back to heavy yield curve inversion. It's gonna uninvert a heavy again, and then from there, we find out what happens. But essentially, the bonds are about to get fucked up. But just watch out, because the yield curve, I am expecting about 2 to 3 more in the next 12 months, and that lines up with our yield curve timeline. But there's going to be a lot of false signals on the bonds, so I do think we are going to get one. I think you're going to get one floor killed on the bonds eventually, but then I think after that it's going to rocket back up, just like what you saw happen. Like, you see what I'm saying? Bonds went up, they got murdered, and then you're going to get another surprise one. I think we have one more move like this left, minimum, until we see what happens. Yeah, Oscar is up most on record, intraday record of 58%. WWE, watch for the 90 breakout. That's what I'm waiting for. God bless you on the likes. Have you seen the bond market move like this before? No. Even this shit makes 2020 look like nothing. That's the crazy part. This makes, all of the TLTs we hit from 2019 to 2020, none of them look like this. And the bonds didn't even move like this. That's the wildest part. So we made 30,000 to 50,000% on bonds, and it wasn't even, they didn't even move this big. So, like, your intraday swings, this makes, like, even the changes on the 2-year, this is probably double the size of the intraday moves on the 2-year bond than what you saw in 2020. So, and then, again, the last time you've watched, the yield curve uninvert or steepen in a short amount of time, last time that happened was 2007 to 2009. All this front running makes bond. Yeah, it's just everyone's swinging too hard. So it's like the moment the bonds turn up, everyone's like, the Fed's going to cut. And then the minute everything calms down, they say the Fed's not going to cut. But it's like every single bond, like, front run is very aggressive. Nobody is front running bonds with a margin of error. So that's what I'm saying. You're either going all in or you're shorting the shit out of it. It's a very wild concept. It's like, yeah, exactly. Just swinging for the fences on every single move. And that's what's kind of creating this environment. So get ready. Get ready. TLT reverse. Well, right now, even bank attitudes, people are calming down. Like, they're trying to call this the week of healing. So let's see if that actually plays out. But they've said the week of healing, and now, like, even this morning, just the fact that nothing else died again. And we are going to hear from FDIC, Fed Vice Chair of Supervision Barr, and Treasury today very, very shortly. But the idea now is that some people are debating, okay, and this is where the bonds come in, do we go back to debating? Do we go back to debating now the effects of higher rates and inflation rather than actually being worried about the banks? What time are they speaking? I believe on 30. I think in like 10 minutes. It should be. And we got house prices just came out, or an hour ago. That didn't even move anything. But we have conference board of confidence in 10 minutes too. So by the time we get them, you're also going to be getting data. We did have the pre-writtens yesterday. So keep that in mind. Pre-written statements for Congress we've already received. So they're going to tell you the banking system is sound and resilient. So don't expect anything less. NVIDIA is flushing now. Amazon, so a little push and pull now. Amazon's bouncing. Banks are bouncing. Amazon's there, but then like Tesla, NVIDIA, Amazon's ripping. Amazon's up in there, and then Apple is still at the low. Apple's running into the low, and then Microsoft's at the low. Tesla kind of holding on. Airlines are on the high. There's Wally World. We got $7. Woohoo! Did Square come back up? Apple's hitting a new low right now. Again, SPY is just right at opening candle. Again, we have a lot of levels here. A lot of levels, a lot of range. Oh, shit. Why did I put Square? 39 stem. So we are next to the 39.60, which is still decent, but this is pretty much the gap fill from yesterday. And then, because I think next level will be 39.60, and then if 39.60 doesn't hold, 39.48. Square's taking a cheat clay. All right, we're getting ready for it. There's a lot of eyeballs on it. I already have analyst comments on this thing. So that means analysts are covering all of this. AMD's on the low. Was that the Qs are up? The Fed is fixing. Well, that's what some people were saying. Someone said it this morning. They said right now with the Fed saying everything's stable, that's just a clear-cut sign. They're going to try to do whatever they can to make sure they get their job done. And then that's it. It's usually a sign of an emergency. It's what I told you guys a couple days ago. The only way this ends is an emergency meeting. I don't think Powell will give up on inflation until something like really, really gets clapped. All right. I sold Square, 128 net. We had 200 at the top. But again, I don't want to trap myself on too many plays. Like I said, I'm trying to go neutral. Big volume on Amazon. Yeah, NVIDIA's first day ever. Why is Rita up? Rita's been up. Rita's just been doing that little weird dance every day. Again, for post-biotech, like we said, give it a week, and we're on like week number 2 or 3 now. But it's ready to go. But I rolled over the options. We should have a decent position. Melt up, maybe. I mean, Walgreens is going up there. That's a small play with like $20. Gamble, Walgreens. LAC could be related to, what was it? Is LAC, somebody bid on lithium, Albemarle. They had like a bid rejected or some shit. Netflix is due. Remember, but Netflix did that little melt up, but then it quickly came back down. But all tech is starting to move. Again, this is the gap fill point of yesterday. We're starting to move up off of it. WWE still up. Coinbase in a weird middle. What's up, Josh? How you living? How you living? Follow the Senate banking. Okay, it hasn't started yet. There are already several pieces of legislation in the works for SVB aimed at executive clawbacks of compensation. Democrats are looking at various ideas to increase FDIC insurance. So we're going to get a shit ton of comments here that can move banks. Just get ready. There's a lot of hype. Bonds are moving up. There's Amazonian. Coinbase is working its way up, about to break out. Who the hell's buying Netflix? Okay. I'm going to put like a little bit of audio on so I could hear it when it starts. But just watch. I didn't turn it up too loud, but you might get scared. Because I get scared. You know what I'm saying? When that audio come in, like, you know, it's just get mad scary. Baba. Okay, I sold my Procter & Gamble for a $250 loss, but then we got paid like one something on dividends. I like it, though. I like it as a defensive, but again, trying to get to neutral here. I had Procter & Gamble shares from beginning of the year. I just eliminated them. Or is it? No, we still have all Bulbas. I love you. God bless you. A little Chicle. All right, I made $4 on Walgreens. I thought it was 30, but then they just scammed me. I'll take it, though. I'll take it. You know what I'm saying? I'll take it. Yeah, chips are actually responding negative here. It's quite interesting. SPY's coming down again. More chip activity. Coinbase is there. Josh getting jumpy. No, not at all. I mean, I'm executing the plan I told you the other day. My idea is to go neutral. So then even anything here, even like WWE, I mean, today was a blessing. It's actually, I know, the whole NQ was going to go last. Ex-Starbucks CEO to testify before Senate. So we're letting it work. Again, we're still positive. I mean, realized over $1,000 today. A little bit less now after the loss, but then the net dividends help out. Puts on FC. No, I would be careful. FCNA literally just became a powerhouse. So just keep that in mind. What good? I think I'm not worried about good news or bad news. I'm just in this environment, like I've been saying, the uncertainty level, you're going to want flexibility. And that's exactly what I'm trying to get right here. And I don't want, again, especially if we have pain and other things. So I like it. And again, a lot of old plays came back, like Procter & Gamble. That one's quite old, considering it's been already 3 or 4 months. So to get out of them would be good. But realistically, I just want to make sure we could go very, 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 very light so that I could go in and out, not get tied into anything, and because we are going to be headline driven. Bank stocks face another hurdle with Jeffrey's earnings. Uh-oh. Apple 0.3 hitting lows. Coinbase is starting to drop now. Down for the year. Futures, I've lost on futures so far this year, but shares were actually up. It's kind of wild, actually, believe it or not. So I still have unrealized losses on shares, and they're pretty decent, and it cuts into the gains. But realized gains on shares, we're killing it, and there's more realized gains than even unrealized losses. Oh, Elizabeth Warren coming out. Bring them out. Bring them out. Remove the NQ. Yeah, well, I mean, I'm still up from last year. I mean, again, that close. Don't underestimate how hard we went at the end of last year. So even with any bigger losses on any of the futures. I mean, we're still playing with the house's money, but at the end of the day, though, I still think I think we could do a lot this year, but I want to make sure we don't get trapped too heavy on anything. That's it. And then I want to see maybe we double dip on the bonds, get something good. It could be fun. It could be fun. Is this Wi-Fi? Consumer, no. I did actually. Came in 151 present situation. There was no expectations. Then 73. The consumer confidence actual didn't come out yet, though. I think it came in at 102 or 104. Yeah, 104 point. Came in better. Conference Board of Consumer Confidence was positive, seemingly all across the board. Present situation declined a little bit. And then Richmond Fed came in -5. Estimate was -10. And last month was -16. So then Richmond business conditions came in very bad. So kind of a mix of everything, but I don't think that data will move us. But we did react to data a little bit in the morning. And then watch how bonds move, because that could get things going. I mean, Apple is still going. Big money rug pull. Again, we have this is the Senate testimony. See what happens. Just tell us you go insure all the deposits in the banks. That's it. You just keep a lookout for that, because any comment talking about insuring deposits, the bank stocks are going to run. So keep that in mind.
Senate Committee on Banking, Housing, and Urban Affairs will come to order. Thanks to the New Deal and the hard work of our regulators today, most bank failures, of course, never a good thing or generally not a big deal. But the quick collapses of Silicon Valley Bank and Signature Bank were no ordinary failures. In less than a day, Silicon Valley Bank customers pulled $42 billion out of the bank, fueled by venture capitalists and their social media accounts. They created the largest and fastest bank run in history. In the following days, Signature Bank lost $17 billion. Regulators, both Republicans and Democrats, came together to prevent the panic from spreading. They increased liquidity. They promoted confidence in our banking system. They protected the deposits of customers and small businesses, not notably the investments of executives and shareholders. I spent that weekend on the phone with Ohio small businesses and banks and credit unions. Ohio small business owners simply wanted to make payroll. They didn't want to see years of hard work go down the drain because of venture capitalist panic.
Yeah, banks will run, not like a bank run.
2,000 miles away. One woman told me she was terrified she wouldn't be able to pay her workers the next week, and I heard that
bonds
story
are
over
being
and over.
volatile since
Ohio
the data.
Banks and credit union institutions that are sound and well capitalized didn't want to see deposits flee their institutions
Boeing's killing
for
it.
the biggest Wall Street banks. For anyone who lived through the global financial crisis, it's impossible not to think of 2008. Once again, small businesses and workers feared they would pay the price for others' bad decisions. We're left with many questions and justified anger toward bank executives and boards, toward venture capitalists, toward federal and state bank regulators, toward policymakers. The scene of the crime does not start with the regulators before us. Instead, we must look inside the bank at the bank CEOs, at the Trump-era banking regulators who made it their mission, again, to give Wall Street everything it wanted. Monday morning quarterbacking aimed only at the actions of regulators this month is as convenient as it is misplaced, coming from those who never met a Wall Street wish list they didn't want to grant. Many who are the first to scold the regulators for their failures offer ready ears whenever bank CEOs line up at their offices complaining about out-of-control bank examiners. Remember some of those complaints at our hearing with Fed Chair Powell over the Fed merely reviewing capital just 3 days before Silicon Valley Bank failed? How soon we choose to forget. When we ask who should have known how the risks were building in these banks,
you fill the gap at 39.77.
Silicon
Boeing
Valley
is
Bank
running.
almost quadrupled in size over 3 years. Signature Bank more than doubled in that time. The principles here aren't complicated. Banks should be prudently managed, should be mindful of the full scope of risks they face, should diversify across companies and products. The committee must consider how these banks exploded in size in a way that was clearly unsustainable. Some explanations will focus on complicated sounding concepts.
No, I got out of square
like
this
balance
morning.
sheets, balance risk, and moral hazard.
BMEA halted 83%. That's the diabetes drug
really,
from
though,
the morning.
It comes down to more basic concepts. Hubris, entitlement, greed, and always, always, always with big paydays.
And then watch if bonds start flushing, you might be able to go up, but this could get uglier.
The CEO's own pay was tied directly to the growth of SVB. At SVB, executive bonuses were pegged to return on
running.
equity, so they took more risk by buying assets with higher yields to make higher profits. When those investments started to lose money, they didn't back down. It won't surprise anyone that Silicon Valley Bank went nearly a year without a chief risk officer. Venture capitalists fueled the bank's growth by forcing the companies they invested in and advised to keep their money at Silicon Bank. And then those same VCs turned around and sparked the bank run by telling the companies to pull their money out, creating more chaos, more panic. Signature Bank found itself in the middle of a Sam Bankman-Fried's crime spree at the crypto exchange FTX. The bank let him open multiple accounts. They ignored red flag after red flag. It's all just a variation of the same theme.
There you go. That's what I was waiting for.
Most of our economic problems. Wealthy elites do anything to make a quick profit and pocket the rewards. And when their risky behavior leads to catastrophic failures, they turn to the government.
Finally, somebody
asking
says
for
it.
help, expecting workers and taxpayers to pay the price, and too often workers do. Even though no taxpayer money is being used to save these depositors, I understand why Americans are angry, even disgusted at how quickly the government mobilized when a bunch of elites in California were demanding it. People have a pretty good sense of whose problems get taken more seriously than others in this town. Of course, we have to prevent systemic threats to the economy, but corporate trade deals are a systemic threat to towns like I grew up in Mansfield, Ohio, and across the industrial Midwest. So is a Wall Street business model that rewards short-term profits over investments in innovation and workers. And those threats are not only tolerated, they've been actively pushed by the same crowd that this month clamored for the government to save them. Just as there are no atheists in foxholes, it appears that when there is a bank crash, there are no libertarians in the Silicon Valley. I hope that from now on, those who have no problem with government intervention
no atheist in a
protect their
foxhole
own livelihoods will think a little bit harder about what their warped version of the free market has done to workers in Ohio.
Y'all are making fun of him. You told him to drink lotion. That's so foul.
The problem was those arrogant executives. But there'll always be arrogant executives. That's exactly why we need strong rules and public servants with the courage and guts to stand up to bank lobbyists and enforce those rules. The officials sitting before us today know that their predecessors rolled back protections like capital and liquidity standards, stress tests, brokered deposit limits, and even basic supervision. They green-lighted those banks to grow and grow and grow. Too big, too fast. There are important questions about deposit insurance we must consider. Whether the current amount works for everyone, including small businesses whose real goal is to meet payroll.
All right, new high. You have filled the gap, I'm pretty sure.
Basic principles of bank management.
Almost.
To know they can't grow a bank by over-concentrating business in specialized area, then pay themselves huge bonuses right up until things blow up. That's not being a trusted partner to your customers. It's taking advantage of them. These executives must answer for their bank's downfalls. I've called on the former CEOs of those banks, those failed banks, to testify. I thank Ranking Member Scott for joining us.
Amazon's giving up, man. Very weird rally here.
Real consequences for their actions.
So something's kind of flip-flopping. Industrials are killing it,
these banks into the ground,
as well as energy.
Are barred from taking other banking jobs. None have had their compensation clawed back. None have paid any fines. Some executives have decamped to Hawaii. Others have already gone to work for other banks. Some simply wandered off into the sunset. It will surprise no one in Ohio that these bank executives face less accountability than a cashier who miscounts the cashier's box, the cash box. That's why I'll be introducing legislation to strengthen regulators' ability to impose fines and penalties, to claw back bonuses, to ban executives who cause bank failures from ever working in another bank. We need to look at bank regulators' ability to not only identify risks and problems at banks, but also be empowered to actually make the banks fix them. Today, my colleagues and I are asking GAO to follow up on a 2019 report where they highlighted communication failures and the extent to which senior bank management fully addressed identified
Bond's about to
deficiencies.
break on the 10-year.
Looking forward to hearing
Watch how the
from our
market reacts.
financial
Again, this should be the
watchdogs
gap
today. We'll be
fill.
watching them to make sure they assess the damage, hold accountable those responsible, fix what is broken. Last, I asked my colleagues
gap
to
has
work
been
together
filled.
to make
So you're
sure
right where we
that
closed
our financial
yesterday,
system is
near the
stronger
lows of
after this
yesterday.
crisis. Americans have watched the same pattern over and over and over again. A crisis occurs. Some of us push for reforms. If we're lucky, we'll be able to seize the moment and actually pass some. But then the bank lobbyists go to work, and they are so good at their jobs. Politicians spend the ensuing years rolling back reforms.
Regulators
right
are
up until
singling
the
out a
next
trade on
crisis.
Deutsche Bank
and that
CDs.
crisis happens because
They
you
believe
guessed it,
fueled a
we
global
rolled back
sell-off on Friday.
regulations in this body, enabling the regulators to roll them back even further. And we know who's the first to get help in any crisis. It's little wonder that workers in Ohio and around the country don't trust banks. They don't trust their own government. It's time we proved them wrong. Ignore the corporate
Zion's on
lobbyists
the high.
and put workers in
So
their
watch some of
families
the
first.
regionals here.
Senator Scott.
He hasn't said shit,
Thank you,
but
Mr. Chairman. Today we are here to understand just how we found ourselves in the middle of the second and third largest bank failure in the United States history. Though our questions are nowhere near answered, this is an important first step in providing transparency and accountability.
Boyd is up
necessary to
again.
the
They had
American
good data
taxpayer.
today this morning.
I'd like to thank Mr. Chairman for taking the time.
A
and working with
WWE
me to
report
try to
is
bring
getting
the bank
circulated again.
CEOs into this hearing. I think it's incredibly important that we hear from the folks specifically and uniquely responsible for the failure of these banks, the folks who manage them. By all accounts, this is a classic tale of negligence, and it started with the banks themselves. Without any question, that's where the buck stops. So it is imperative
Netflix is up one.
that we hear straight
Netflix is the
from
best as far as
horse's
tech.
mouth,
LVS
so to
on the low.
speak, to find out
There's good Vegas
why
numbers.
these banks were so poorly managed and so poorly managed the risks. Unfortunately, the bank execs aren't the only managers we're missing. The Secretary of the Treasury and the Chairman of the Federal Reserve are also not here to testify. I don't mean to offend the witnesses that are here, but it is hard to believe that the Biden administration
He said, y'all
seriously
second string.
is concerned about the failure that we're seeing when they themselves are shielding the top official.
He said, who the
at
hell is
Department of
Liang?
Treasury.
Give me yelling.
The same official that briefed the president and invoked the system risk exception. Nor do we have Chairman Powell here. Instead, we have the Vice Chair of Supervision here to use the committee as a platform to talk about the wrongs under his supervision. As the Federal Reserve has already announced, he is conducting a review to assess any supervisory failures, which is an obvious inherent conflict of interest and a classic case of the fox guarding the henhouse. The Fed should focus on its mission and not the climate arena. This is a waste of time, attention, and manpower. All things that could have gone
Again, Bond's still
into
at the low on the 10-year.
bank supervision.
Just watch out. Bond
Banks,
volatility will be key.
like any
Square
other
breaking out.
businesses,
I'm a schmuck.
must manage their risk and be good stewards for their customers. But unlike other businesses, banks are highly regulated. Sometimes banks even have their regulators sitting in their banks and continually monitoring the risk and activities, as is the case with Silicon Valley Bank. For the last 2.5 weeks, the regulators have consistently described Silicon Valley as unique and highly idiosyncratic, meaning the warning signs should have been flashing red and SVB should have stood out as what it was. Absolutely a problem child. Clear as a bell were the warning signs. In fact, reports indicate that these warning signs
UPS and FedEx on the
were
high.
already flashing.
Oh, they're killing it.
And on March 19th, the New York
McDonald's,
Times wrote
too, again.
that Silicon Valley's bank
Ronald is
risky
attacking.
practices
Again,
were on the
defensives are
Federal
booming
Reserve's
today.
radar
And then another sell-off in
more
tech.
than a year. Moreover, Silicon Valley suffered from extreme interest rate risk due to investment in long-term securities that declined in value because of soaring inflation. Of all our supervisors, the Federal Reserve should have been keenly aware of the impact interest rate hikes would have on the value of these securities, and it should have been
and watch if Baba slips. VKTX, they started phase 2 trial.
Hedging their bets and covering their risk accordingly. But now we know, based off your testimony, Mr. Barr, that the Fed was aware. In fact, in 2021,
Home Depot's breaking out. They're running, again, a lot of industrial defensives.
And its management, resulting in 6 supervisory findings. Later in 2022, supervisors then issued 3 findings related to ineffective board oversight, risk management weaknesses, and
banks are doing decent. They're on the highs. The indexes are, but there's a lot of individual names that are barely moving.
Thinking.
So overall, good for banks now, but
some
are up 1%, some are barely break even.
Can take any supervisory or enforcement action it deems necessary to address unsafe and unsound practices. Recent reports confirm what we already know. Your priorities and your work with the San Francisco Federal Reserve Bank President Mary Daly centered on climate change, an issue wholly unrelated to the Federal Reserve's dual mandate and role as supervisor. Given SVB's social and climate agenda, one must ask if SVB's investments in climate cause the regulators to be a bit more permissive of its risks. If you can't stay on mission and enforce the laws,
all right, another breakout.
As they
bonds hit a low already, 3-4 minutes ahead of that.
How can you ask
Dan, you're about 13 points from the low about 10-15 minutes ago.
With a straight face. To that end, I hope to learn how the Federal Reserve could know about such risky practices for more than a year and fail to take definitive corrective action. By all accounts, our regulators appear to have been asleep at the wheel. In addition, I also hope to learn more from the FDIC about the role in the receivership and sale of both SVB and Signature Bank, especially on the auction and the bid process. I'm very concerned that private sector offers appear to have been submitted and yet were denied. If Silicon Valley Bank had been purchased before it failed, the panic and the shock to the market and to market's confidence we've seen over the past 2.5 weeks may have been avoided. If Silicon Valley had been purchased over the weekend of March 10th, confidence in the marketplace may have sustained Signature Bank and prevented its failure. The FDIC's bid auction process has been a black hole for Congress.
Again, SPY is green right here. NASDAQ still down. And then Dow is killing it with small caps.
But when you hear rumors that this process was delayed because the White House doesn't like mergers in any shape, form, or fashion, it makes you wonder what actually is going on.
The NVIDIA's working its way up.
Sometimes when it looks like a duck.
Oh, there's Meta.
Quacks like a duck. It's just a duck. As I close on this opening statement,
something about a duck
remain clear to me regarding SVB. First, the bank was rife with mismanagement. Second, there was a clear supervisory failure.
More lows on the bonds.
Were simply asleep at the wheel. And finally, President Biden's reckless spending caused 40-year high in inflation, and the country, as well as the bank, experienced tremendous loss.
Okay, bonds are dumping. See if the market responds with it, or like if either market will follow bonds or it should be able to break out.
January of
Disney on the high.
Michael Barr took office as vice
Meta's
chair for
on the high.
supervision of the Board of Governors of the Federal Reserve in July of 2022 for a 4-year term. He serves also as a member, of course, of the Board of Governors.
Coinbase about to break out. Okay, a lot of tech is kind of rebounding here.
The U.S. Department of Treasury since July of 2021. Thanks for all of you for joining us. And Mr. Grunberg, if you would begin. Thank you.
Thank you, Mr. Chairman.
So this is FDIC
Chairman
head.
Brown, Ranking Member Scott, members of the committee. Thank you for the opportunity to appear before you today to address the recent bank failures and the federal regulatory response. On March 10th, just over 2 weeks ago, Silicon Valley banker, SVB as it's known, with $209 billion in assets at year-end 2022, was closed by the California Department of Financial Protection and Innovation, which appointed the FDIC as receiver. The failure of SVB, following the March 8th announcement by Silvergate Bank that it would voluntarily liquidate, signaled the possibility of a contagion effect on other banks. On Sunday, March 12th,
Oscar's
just
still
2
running.
days after the failure of SVB, another institution, Signature Bank of New York, with $110 billion in assets at year-end 2022, was closed by the New York State Department of Financial Services, which also appointed the FDIC as receiver. With other institutions experiencing stress, serious concerns arose about a broader economic spillover from these failures. After careful analysis and deliberation, the boards of the FDIC and the Federal Reserve voted unanimously to recommend, and the Treasury Secretary, in consultation with the President, determined that the FDIC could use emergency systemic risk authorities under the Federal Deposit Insurance Act to fully protect all depositors in winding down SVB and Signature Bank. It's worth noting that these two institutions were allowed to fail. Shareholders lost their investment, unsecured creditors took losses, the boards and the most senior executives were removed. The FDIC has authority to investigate and hold accountable the directors and officers of banks for the losses they caused and for any misconduct in the management of the institutions. And the FDIC
Honestly, I'm
has
just
already
impressed
commenced
how his hairline's
these
fighting,
investigations.
because it reminds me of my hair.
Further,
But like, you know, you
any
can see how he
losses to
balding,
the FDIC's
but like it's
Deposit
holding up.
Insurance Fund
So
as
like,
a
honestly,
result
Mr.
of
Grunenberg, good work.
uninsured deposit insurance coverage
Good work.
will
He
be
didn't allow his
repaid by a
hairline to fail
special
either.
assessment on
So I'm
banks
with him.
as required by law.
You could, no, he puts in the effort
The
like that.
FDIC
Otherwise, that
has
shit
now
would have been
completed
gone.
the sale of
You know what
both
I'm saying?
bridge banks
That
to
hair with that,
acquiring
bro, that top would have been
institutions,
gone a long time
New York
ago.
Community Bank
He's
Corp,
doing good.
Flagstar
He's doing
Bank for
good.
Signature, and First Citizens for SVB. My written testimony today describes the events leading up to the failures
Strong
of
and
SVB
resilient,
and
dog.
Signature Bank and the facts and circumstances that prompted the decision to utilize the authority in the FDI Act to protect all depositors in those banks following those failures. It further describes the management and disposition of the bridge institutions that were established.
Right back to opening
It also
candle, a
discusses
little
the
above it.
FDIC's assessment of the current state of the U.S. financial system, which remains sound despite recent events. In addition, it shares some preliminary lessons learned as we look back on the immediate aftermath of this episode. In that regard, the FDIC will undertake a comprehensive review of the deposit insurance system and will release a report by May 1 that will include policy options for consideration relating to deposit insurance coverage levels, excess deposit insurance, and the implications for risk-based pricing and deposit insurance fund adequacy. In addition, the
doesn't Micron have earnings
Chief
today?
Risk Officer will undertake a review of the FDIC supervision of Signature Bank and will also release a report by May 1. Further, the FDIC will issue in May a proposed rulemaking for the special assessment for public comment. The two bank failures demonstrate the implications that banks with assets over $100
Another
billion
low
can
on
have
bonds. Watch out here.
for financial stability.
Again, bonds are moving pretty active.
The prudential
I guess it's kind of
regulation
matching up.
these
NASDAQ's moving
institutions
more.
merits serious attention, particularly for capital, liquidity, and interest rate risk. Resolution plan requirements for these institutions also merit review, including a long-term debt requirement to facilitate orderly resolution. Recent efforts to stabilize the banking system and stem potential contagion from the failures of FSB and Signature have ensured that depositors will continue to have access to their savings, that small businesses and other employers can continue to make payrolls, and that other banks, small, medium, and large, can continue to extend credit to borrowers and serve as a source of support. The FDIC continues to monitor developments and is prepared to use all of its authorities as needed. The FDIC is committed to working cooperatively with our counterparts at the other federal regulators, as well as with policymakers in the Congress, to better understand what brought these institutions to failure and what measures can be taken to prevent similar failures in the future. That concludes my statement, and I'd be glad to respond to questions. Thank you.
Mr. Grunberg. Mr. Barr, you're recognized. Thank you.
Oh, they're going to question them one on. Oh,
Chairman Brown, Ranking Member Scott.
All right, they're going to go through the top three and then questions. Again, all of this we got yesterday. They're adding a couple of things,
supervisory
but
and
nothing
regulatory
crazy.
Oversight of Silicon Valley Bank. Our banking system is sound and resilient, with strong capital and liquidity. The Federal Reserve, working with the Treasury Department and FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in the banking system. These actions demonstrate that we are committed to ensuring that all deposits are safe. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools for any size institution as needed to keep the system safe and sound. At the same time, the events of the last few weeks raise questions about what more can be done and what more should be done, so that isolated banking problems do not undermine confidence in healthy banks and threaten the stability of the banking system as a whole. At the forefront of my mind is the importance of maintaining the strength and diversity of banks of all sizes that serve communities across the country.
Okay, so first bond bounce.
Because the bank's
oil's still running though. So remember yesterday,
and liquidity
a lot of the run second half was oil.
Then suffered a devastating and unexpected run.
PHILO, XOM, all on the highs, and then industrials like Boeing.
Less than 24 hours.
Microsoft prepares to settle EU antitrust on cloud.
I agreed that I should oversee a review of the circumstances leading up to SVB's failure. In this review, we are looking at SVB's growth and management,
Boeing's
our
ripping,
supervisory engagement with the bank, and regulatory requirements that applied to the bank. The picture that has emerged thus far shows SVB had inadequate risk management and internal controls that struggled to keep pace with the growth of the bank. Supervisors began delivering
Michael Barr.
warnings.
So he's on the Fed.
Of 2021.
He's just not Jerome Powell.
Our review will consider whether these supervisory warnings were sufficient and whether supervisors had sufficient tools to escalate them.
Skirp, hold on.
Also focusing.
Hold on. Bullard says financial stress can be contained with macro-prudential tools. Monetary policy can put downward pressure on inflation. So right now you're getting Bullard comments too.
For risk, particularly when a bank
Dallas
has a
Fed
non-traditional
in 2 minutes.
Model.
Consumer confidence came in good already.
We are evaluating whether application of more stringent standards would have prompted the bank to better manage the risks that led to its failure. Staff are also assessing whether SVB would have had higher levels of capital and liquidity under those standards, and whether such higher levels of capital and liquidity could have forestalled the bank's failure or provided further resilience to the bank. We need to move forward with our work to improve the resilience of the banking system, including the Basel III
but it's already resilient, dog.
A long-term debt requirement for large banks, and enhancements to stress testing with multiple scenarios so that it captures a wider range of risk and uncovers channels for contagion like those we saw in the recent series of events. We must also explore changes to our liquidity rules and other reforms to improve the resilience of the financial system. In addition, recent events have shown that we must evolve our understanding of banking in light of changing technology and emerging risk. Part of the Federal Reserve's core mission is to promote the safety and soundness of the banks we supervise, as well as the stability of the financial system, to help ensure that the system supports a healthy economy for U.S. households, businesses, and communities. Deeply interrogating SVB's failure and probing its broader implications is critical to our responsibility for upholding that mission. Thank you, and I look forward to your questions.
Mr. Barr, Ms. Liang, nice to see you. Thank you for being here.
Thank you. Chairman Brown, Ranking Member Scott, other members of the committee, thank you for inviting me here to testify and for the opportunity to speak several times in recent days.
This is like Yellen's
to share
assistant.
Updates from Treasury.
Why does she try to
regarding
talk like
current
her?
Events.
Everyone at the
American
Treasury is bored.
economy relies on a healthy and diverse banking system, one that includes large, small, and mid-sized banks, and provides for the financial needs of families, businesses, and local communities.
This is Treasury
Nearly 3
Undersecretary
weeks
for
ago, problems
Domestic
emerged at
Finance.
2 banks with the potential for
Nellie
immediate
Liang.
and significant impacts on the broader banking system and the economy. The situation demanded a swift response. In the days that followed, the federal government took decisive actions to strengthen public confidence in the U.S. banking system and to protect the U.S. economy. On March 9th, depositors at Silicon Valley Bank withdrew $42 billion in deposits in a period of just a few hours. After concluding that significant deposit withdrawals would continue the next day, the California state regulator closed SVB and appointed the FDIC as receiver. 2 days later, the New York regulator closed Signature Bank, which also had experienced a depositor run, and appointed the FDIC as receiver. Treasury worked to assess the effects of these failures on the broader banking system, consulting regularly with the Federal Reserve and FDIC. On Sunday evening, recognizing the urgency of reducing uncertainty for Monday morning, Treasury, the Federal Reserve, and the FDIC announced a number of actions to stem uninsured depositor runs and to prevent significant disruptions to households and businesses.
All right, you're coming back to the low. That was quick.
First, the boards of the FDIC
So we're moving
and the
about
Federal
10 to
Reserve
15 points back and forth.
unanimously.
Gap has already been filled
and
already.
Secretary Yellen
It hasn't. It's just been 1 hour right now.
consulting with the
Hour, 2
president,
minutes since the bell.
2 actions that would enable the FDIC to complete its resolutions of the 2 banks in a manner that fully protects all of their depositors. These actions ensured that businesses could continue to make payroll and the families could access their funds. Depositors were protected by the Deposit Insurance Fund. Equity holders and bondholders were not protected. Second, the Federal Reserve created
Dude,
the
BMEA
Bank
is
Term
still
Funding
up. That's the
Program,
diabetes drug
a
from the
new
morning.
facility to provide term
Oh, okay. I
funding
thought it was up 90.
to
I
all
said, damn.
insured depository institutions
And
eligible
then
for
WWE
primary
still
credit
holding,
at
doesn't
the
done
discount
much.
window, based on their holdings of Treasury and government agency securities.
Amazon's flushing
This
now.
program, along with the pre-existing
That's wild.
discount
Qualcomm, more
window,
chips on the
has
low.
helped
You are
banks
about to break
meet
into another low
depositor
right now.
demands and bolstered liquidity in the banking system. This 2-pronged targeted approach was necessary to reassure depositors at all banks.
1 point
and
from
to
setting
protect
new
the
low.
US banking system and economy. These actions
New low
have
has been
helped
set.
to stabilize
Even
deposits
futures below
throughout the country
4,000.
and provided depositors
So again,
with
39.60, then
confidence that their funds were safe.
39.47,
In addition to these
or 49.
actions, on March 16th,
then
11 banks
39.60. This is the 100-day
deposited
shit.
$30 billion into First Republic Bank.
I thought
The
39.60,
actions
but
of
right now
these
you have
large
broken
and
below the
mid-sized
100-day
banks
right here, right now.
represent a vote of confidence in the banking system and demonstrate the importance of banks of all sizes working to keep our economy strong. Moreover, on March 20th, the deposits in certain assets of Signature Bridge Bank were acquired from the FDIC.
I sold my
and on
FRC
March
for like
26th,
$70.
The deposits in certain assets of Silicon Valley Bridge Bank were acquired from the FDIC. We continue to closely monitor developments across the banking and financial system and to coordinate with the federal and state regulators. As Secretary Yellen has said, we have used important tools to act quickly to prevent contagion, and they are tools we would use again to ensure that Americans' deposits are safe. Looking forward, while we do not yet have all the details about the failures of the 2 banks, we know that the recent developments are different from those of the global financial crisis. Back then, many financial institutions came under stress because they held low credit quality assets. This was not at all
Again, this is the 100-day bonds have woken up.
Our financial
You're now
system is significantly
39.60.
stronger than it was
So watch
15 years ago.
39.55 as a
This is
soft
in large
level,
part due
but then
to the post-crisis
39.47,
reforms
and
for
then even then
stronger capital
39.63.
and
You might
liquidity.
get a bounce here as
you
everybody
know,
tries to bounce at the 100-day.
The Federal Reserve announced a review of the failure of SVB, and the FDIC a review of Signature Bank. I fully support these reviews and look forward to learning more in order to inform any regulatory and supervisory responses. We must ensure that our bank regulatory policies and supervision are appropriate for the risks and challenges that banks face today. Thank you to the committee for its leadership on these important issues and for inviting me here to testify. I look forward to your questions.
Thank you, Ms. Lang. And almost every member of this committee will be here today on both sides of the aisle. Make your answers as brief and as quick as you possibly can. So thank you for that. In 2019, by votes of 4-1 and 5-1, now chair of the NEC, Leo Brainerd, the only dissenter in every one of those votes, the Fed rolled back stronger rules and was responsible for supervising Silicon Bank. Mr. Vice Chair Barr, did the Fed drop the ball because it didn't see the risk that was building?
Thank you, Chairman Brown, for that question. Fundamentally, the bank failed because its management failed to appropriately address clear interest rate risk and clear liquidity risk. That interest rate risk and liquidity risk was highlighted by the supervisors of the firm beginning in November of 2021. The board the Federal Reserve Bank brought forward these problems to the bank, and they failed to address them in a timely way. That exposure led the firm to be highly vulnerable to a shock, and that shock came on the evening of Wednesday, March 8th, when it very belatedly attempted to adjust its liquidity position and reported losses on its available-for-sale securities. The market reaction to that was quite negative, and that eventually on Thursday sparked a depositor run.
So some of their practices appear to have violated the basic principles of Banking 101, concentration risk, over-reliance on uninsured deposits, inadequate liquidity, poor risk management, the list goes on. How poorly managed was this bank?
Supervisors had rated the bank at a very low rating. Normally, we would not be describing these matters, confidential matters, but given that the firm failed and triggered a systemic risk determination, I'm prepared to talk about that confidential information. That the firm was rated a 3 in the Camel scale, which is not well managed. And at the holding company level, it was rated
Camel
deficient,
scale, Habibi.
which is also clearly not well
the Camel,
managed.
I will show you. Let me do the bank analysis.
I heard from many small
I will
businesses
show you
over
Camel
that
scale.
weekend who had money in SVB and were worried about making payroll in Ohio, making payroll as a result of the failure. I heard from Ohio small banks and credit unions worried about deposits leaving their institutions. I know that I'm not unique. Many of my colleagues from both sides of the aisle heard those same concerns in their state. Given the unprecedented scale of the bank run, what would have been the impact on small banks and small businesses across the nation if you and other regulators had not taken action to protect depositors at SVB and Signature Bank?
Senator, that was our central concern. I think the evidence suggested from the sequential failures of
You're still below the 100-day right now.
And then Signature, that there was a significant risk of contagion to other institutions. And in fact, over that weekend, we were seeing serious stress at other institutions. And I think that and the potential knock-on effects of that contagion is really what led the Federal Reserve Board and the FDIC Board unanimously to recommend to the Treasury Secretary.
So you're saying the actions taken were the least bad option for small businesses and banks across the nation. If you hadn't acted that way, you think there would have been a contagion?
I think there would have been a contagion, and I think would be in a worse situation today with consequences for the actors in our economic system that you referenced.
Regulators, Republicans, Democrats, all across the board, there was agreement on those actions.
Yes.
Undersecretary Lang, do you agree with that?
That doesn't sound good.
Senator Brown, I do agree with that. I think the actions that were taken have been working to stabilize deposits. Had they not been taken, the runs by uninsured depositors from many small and regional-sized banks and mid-sized banks would have intensified and caused serious problems for small banks' liquidity and their ability to support small businesses.
Thank you. And if you could answer this really briefly, because I don't want to go over my 5 minutes. Mr. Gruen, Chair Gruenberg, the FDIC announced the sale.
I bought 100 shares of
SVB
Apple. I'm going to try to
First
flip it.
Citizens Bank and
Not going to
Trust
hold
from
this all day.
Senator Tillis's North Carolina. Estimated would cost the Deposit Insurance Fund approximately $20 billion. How's that cost covered?
Oh, that is required by law, and I indicated in my opening statement. The FDIC has to impose an assessment on the banking industry to cover the cost of coverage for any uninsured deposits. And I would note that the law provides the FDIC authority in implementing that assessment to consider the types of entities that benefit from any action or assistance provided. And as I also indicated in my statement, we expect to issue a notice of proposed rulemaking for public comment in May to implement the assessment.
Thank you. And I would point out in your testimony and your answer, there are no tax dollars, nothing funded through the Congressional appropriations process.
And energy and industrial still the leader. Tech and communications on the low.
Of regional banking.
Again, 100-day looking kind of weak here.
Sure.
GME's on the low.
We have a strong set of regional banks in the United States. I think it was, and as a general matter, their liquidity has remained stable through this episode. And I think it was a good indication, frankly, that in the two failed institutions, in both of those cases, the strongest bids we received to acquire those failed institutions were from two other regional banks that had the capability and strategic business interest to acquire them. So there are a lot of cautionary lessons to be learned from the Senator. I completely agree with that. And we're going to need to carefully review this episode. But as a general proposition, I think the regional banks in the United States remain a source of strength for the system.
I'd say I walked in on the chairman's comments about the actions that were taken the weekend of the March 9th and how important it was and the importance of making sure we get credit for doing something that actually I thought could have been avoided, frankly. I thought it could have been avoided if we had someone in the private sector make the decision to buy the bank, buy the assets. Had that been done on Friday, March the 10th, I think we could have literally eliminated the fiasco that we saw over the weekend. Were there folks interested in buying Silicon Valley Bank on Friday?
Senator, just to be clear, before the bank failed on an open institution basis?
After.
After the failure on a closed basis.
Yes.
We had expressions of interest. I mean, remember, this was a very rushed process, if I may say. The bank failed on Friday morning. We had to, the other institution failed over the weekend. We had to set up two bridge institutions to manage those failed banks. To your point, though, we had expressions of interest. We quickly set up a bidding process that we ran on Sunday. We received two bids. One wasn't valid because it had not been approved by the board of the bank. And the other, after we evaluated it, indicated that it was more expensive than a liquidation of the institution.
Microsoft, another low.
So in effect, we did not have an acceptable bid. And it was really a determination that we made to try to set up two bridge institutions to manage for a short period of time these two failed banks, and then to organize a bidding process, an open bidding process for both institutions, which we ultimately were able to implement successfully and sell Signature Bank previous weekend, 2 weekends ago, and then to sell SVB this past weekend.
Are you suggesting that the fact that the board had not approved the decision off the offer that was on the table was the primary reason why you turned down that
Wells Fargo's right and Bank of America.
As a matter of, we required
and Microsoft still slipping, new low on Apple about to be set.
To approve the offer.
Yeah, as a matter of
I think this is energy lifting us up or keeping you at the 100-day.
Did not have that issue, but the other bid was more costly than liquidation would have been.
So you're suggesting that a private sector engagement would have increased the cost, not decreased the cost?
At that point, I think in part because it takes a bit of time for, this was a substantial institution, it takes some time for a bank to do appropriate due diligence, to evaluate the assets and liabilities, and to make an informed bid for the institution. And I think
bonds are dropping
as a practical matter, that was difficult to do given the compressed time frame over that initial weekend. I think that's why we set up the bridge institutions to try to put in place quickly an orderly bidding process where any interested party could submit a bid, have an opportunity to do due diligence in order to evaluate the institution and to make an informed bid. I think we were ultimately able to do that for both of these failed institutions.
I'll just say with my remaining time that I look forward to the second round of questions, but I will say without question that if we would have had a better private sector engagement with quicker action from the feds, I think we could have avoided the concept that rushed us to a decision, which was a concern of contagion in part. That could have been avoided if we had a decision made on Friday, if there were private sector folks willing to make a decision.
Yeah,
but
FRC.
We'll have an opportunity,
this guy
hopefully,
sold out, dog.
in the second round.
That's just what happened.
Thank you, Senator Warner from Virginia. Welcome.
Well, thank you, Mr. Chairman, and thank you for having this hearing.
Whoa, who the fuck is this?
It's good to see all of you. A couple weeks ago, when we were in a finance
He doesn't look
committee
like
hearing,
he sound like that.
I asked Secretary Yellen that I thought it was very important that we try to get all the facts out about what happened here. I very much appreciate Vice Chairman Barr, you taking on this unenviable task.
Is this the Joker?
Because I've got real questions. Was this a
real question.
regulatory and bank management failure?
They said I'm crazy.
Or was it, as some on my side of the aisle have indicated, was it a statutory failure? If it was a statutory failure and an additional
Why do I feel like he's about to roll out like fat
was
stacks of money
I'm
and
all
then
for
light it
putting
on fire?
in place. But
He
my
sounds like the
operating premise
Joker,
at this
bro.
point is, if this had been not a $200 billion bank, but a $5 billion bank,
This wasn't a $200 billion
That-
bank.
management's mistakes, not having a risk officer or other items,
Makes me smile.
and failure of basic prudential regulation should have caught this. We had two chief regulators, a state regulator.
How did we miss it?
That at some point, Mr. Chairman, I hope we would get in front to. Where were they? And obviously the San Francisco Fed. So I'm going to be very interested in making sure we get to the bottom of this. I think some of the things you've already pointed out, Vice Chair Barr, is that the bank's business, concentrating in one industry, an industry that I used to be part of, but the fact that there was such high concentration of counterparty risk, my understanding, 10 depositors alone had about $13 billion of deposits. Again, it seems to me interest rate mismanagement is banking 101. And again, even at a $5 billion
Okay,
bank,
little
this should have
bounce
been
of the
called out.
100-day, but it's not
I
really
also
holding.
think the speed,
Even Apple's barely
often
moving,
cited
but
the fact that the
3963 is the
largest
100-day.
bank failure we've seen was WAMU back in the crisis. $16 billion left that bank over a 10-day period. In this case,
$15 million
$42 billion
after hour
the equivalent
15.
of 25
Volume's
cents
kind of
on
low.
Every deposit went out in 6 hours. I'm not sure at that point what regulatory
Apple's
structure
breaking.
could have prevented that. And at least from reports, it seems to me that, and I say this as somebody who used to be in the VC industry, some of the very VCs who banked for a long time at SVB may have started this run and demanded all of their ancillary companies all go out at once. So, Vice Chairman Barr, can you take us through with a little more detail, starting Wednesday night through Friday afternoon, how this happened, how we got here, and what you've seen so far?
Thank you very much, Senator. I'll start where you did, which is this is a textbook case of bank mismanagement. The risks the bank face, interest rate risk and liquidity risk, those are bread and butter banking issues. The firm was quite aware of those issues. They had been told by regulators. Investors were talking about problems with interest rate and liquidity risk publicly, and they didn't take the action necessary. They were quite vulnerable to risk. to shocks, and they didn't take the actions necessary to meet that. What happened on Wednesday night is they belatedly attempted to improve their liquidity position, and they did it in a way that spooked investors, that spooked depositors, that spooked the market. Nonetheless, on Thursday morning, things appeared calm, according to the bank's report to supervisors. But later Thursday afternoon, deposit outflows started. And by Thursday evening, we learned that more than $42 billion, as you had indicated, had rushed out of the bank. That's an extraordinary pace and scale. Federal Reserve Bank staff worked with the bank through the afternoon, evening, and overnight to try and find enough collateral that the Federal Reserve could continue discount window lending against. On Friday morning, it appeared that it might be possible to meet the outflow that was expected the day before. But that morning, the bank let us know that they expected the outflow to be vastly larger based on client requests and what was in the queue. A total of $100 billion was scheduled to go out the door that day. The bank did not have enough collateral to meet that, and therefore they were not able to actually meet their obligations to pay their depositors over the course of that day, and they were shut down.
Senator Crapo is recognized from Idaho.
Thank you very much, Mr. Chairman. In your testimony, Mr. Barr, you indicated that you were going to be, in one of the aspects of what you're working on, you're going to be looking at whether more stringent standards are needed. And I want to follow up on Senator Warner's questions relating to this argument that has been put out there, I think, as a part of the blame-shifting game, and there's a lot of that going on right now, that it was a statutory failure. That brings us to the 2018 reforms, Senate Bill 2155. And I just want to read to you a couple of sentences out of Senate Bill 2155 with regard to the question of whether that legislation prohibited our federal regulators, particularly
called him out on Sam having accounts at
SDB with regard to applying the appropriate strict standards. And to start out with, I will read what Senate Bill 2155 did was to stop a one-size-fits-all system and mandate, by changing the word may to shall, mandate that the Federal Reserve tailor its regulations to the risk and so forth. I want to read the language. It mandates that the Federal Reserve differentiate, as it tailors, differentiate among companies on an individual basis or by category, taking into consideration their capital structure, riskiness, complexity, financial activities, including financial activities of their subsidiaries, size, and any other risk-related factors that the Board of Governors deems appropriate. And then at the conclusion of the statute, of that section of the statute, it makes it crystal clear, and this is the statutory language. Nothing in subsection A shall be construed to limit the authority of the Board of Governors of the Federal Reserve System in prescribing prudential standards under this section, or any other law, to tailor or differentiate among companies on an individual basis or by category, taking into consideration their capital structure, riskiness, complexity, financial activities, including financial activities of their subsidiaries, size, and any other risk-related factors that the Board of Governors deems appropriate. And I could go on with multiple times that language was repeated. My question to you is, was there any statutory restriction faced by the Federal Board of Reserves as it issued its regulations on tailoring that would have prohibited them from applying the strictest standards they could to address the prudential needs of our banking system?
Thank you, Senator Crapo. I agree with you. There was substantial discretion under that act for the Federal Reserve to put in place tailoring rules that were different from the tailoring rules that it put in place in 2019. I think there is still to this day a substantial discretion in changing those by notice and comment rulemaking. That's one of the areas that we'll be looking at in our review, whether there should be appropriate changes. There are some areas for, particularly for smaller firms between 50 and 100 billion, where the act is more prescriptive. But for the firms of the category that we're addressing today, there's substantial discretion for the Federal Reserve to change those rules in a way that is supportive of safety and soundness and financial stability.
Thank you, and I appreciate your answer. You said recently that the bank failed, referring to SVB, as the public began to focus on changes in values of securities in the bank's held-to-maturity account. That's correct, right? My question to you there is, did the standards on that risk that are used for supervision, were those changed at all in Senate Bill 2155 in 2018?
The standards for capital rules are determined by the bank agencies. The bank agencies made a decision to, for smaller categories of these large banks, to not require the pass-through of AOCI into the capital structure. But that was a decision that is available to be altered by the discretion of the bank agency.
And was not mandated by 2155?
No, it was not mandated by 2155.
Last question is, under the current standards that are applied with regard to capital, was SVB adequately capitalized?
Prior to its failure, it was categorized under current capital rules as well capitalized.
All right, thank you very much.
Thanks, Senator Crepos. Senator Cortez Masto from Nevada is recognized.
Thank you, Mr. Chair. Thank you, all three of you, for being here. Vice Chairman Barr, let me start with you. You've talked about how the Federal Reserve is undergoing an investigation to determine whether the Federal Reserve actually failed in this instance. Is the Federal Reserve the appropriate body to conduct this investigation, or should we have an independent investigation?
Thank you, Senator. It's a terrific question. We describe what we're doing as a review. We're reviewing our own practices. I think it's an important part of risk management to do self-assessment. I think it would be irresponsible and imprudent of us not to do self-assessment. We're going to take that very seriously. We're going to be thorough. We're going to be transparent, and we're going to be far-reaching in that self-assessment. I also think it's appropriate for outsiders to have independent reviews, and we expect and welcome independent reviews of our actions.
And if you uncover in your investigation that the Federal Reserve failed here in some of its supervisory roles, will you make that public?
Yes, we intend to make our report fully public on May 1st, and that report will include normally
Oscar Health still going up.
But that report will include.
So you got some bid support here, but if this flushes, this could be oil giving up.
And in the scope of your review, you identify the scope of that review in your written testimony. Is there anything in addition that's not in your written testimony that you will be reviewing here in that scope?
Thank you, Senator. I've asked the staff to be far-reaching. So if they determine that an issue should be in scope, they have full discretion to put that issue in scope and to address it in the review. So there are no limitations on their ability to review how the Federal Reserve conducted its supervision and the regulatory oversight of the firm.
Thank you. And then one final thing, because there's been a lot of discussion about the previous rollback of some of the regulation in votes in this body just recently. If you find that that change in the law impacted the Federal Reserve's ability to conduct the appropriate tests based on the tiering of the bank's assets, would you be forthcoming with that and say so?
Yes, we intend to describe where we think supervisory and regulatory failings occurred. If changing those to make them what we think is the right standard would require an act of Congress, we will say so in that review.
And then Chairman Gruenberg, same to you. You're conducting a scope of the FDIC. Are you comfortable that you can conduct that and be transparent and accountable, or should there be an independent body looking at this?
I think there's room for both. As Michael indicated, I think it's important for each of our agencies to look internally at our supervision of these institutions and draw lessons from it. In our case, we've asked our Chief Risk Officer, who's not directly involved in the supervision process and whose role is to evaluate risk at the FDIC, to undertake this internal review of our supervision of Signature Bank.
Thank you. And then there's been a lot of talk in the media about the executive salaries about the executive bonuses, about the sale of stock. Let me ask the three of you. My first question is, what authority do you have to claw back any of those bonuses or the executive pay, or even deal with the sale of the stock? And maybe, Mr. Grunberg, let's start with you and then go down.
Thank you, Senator. You know, as I indicated in my opening statement, the FDIC, for every failed institution, is required to undertake an investigation of the conduct of the members of the board, the management of the institution, as well as professional service providers and other institution-affiliated parties. We've already begun that investigation, and we have significant authority under the law, depending on the findings of the investigation, to impose civil money penalties, restitution, and as well bar individuals from the business of banking. So the authorities are substantial, and we're going to pursue this as expeditiously as we can. I know there's interest. We do not have, under the Federal Deposit Insurance Act, explicit authority for clawback of compensation. We can get to some of that with our other authorities. We have that specific authority under Title II of the Dodd-Frank Act. If you are looking for an additional authority, specific authority under the FDI Act for clawbacks, probably would have some value here.
Thank you. Mr. Barr.
Thank you. The board does have authority to pursue actions against individuals who engage in violations of the law, who engage in unsafe or unsound practices, who have engaged in breaches of fiduciary duty. We retain this authority even after a bank fails. And we stand ready to use this authority to the fullest extent based on the facts and circumstances. And as with Chair Grunberg, potential consequences include a prohibition from
pop
banking,
in the last
civil
like
money
20 minutes,
penalties,
going to
or
VWAP,
the payment of restitution.
the lower
we
candle
intend to use
of
these
the opening.
authorities to the fullest extent we are able.
Thank you. Ms. Lang, and I know, with the chairman's indulgence.
Yeah, briefly, Ms. Lansing.
Yes, I defer to the FDIC and Federal Reserve on this.
Thank you. Thank you, Mr. Chairman.
That was brief. Thank you, Madam Undersecretary. Senator Rounds of South Dakota is recognized.
Thank you, Mr. Chairman.
Thank you.
First of all, thank you to all of you for appearing before our committee today. Vice
You
Chair
sound like the
Barr,
only one who don't
in your
smoke.
testimony, you said that in November, the Fed supervisors delivered a supervisory finding on interest rate risk management to Silicon Valley Bank. As you know, the communication of supervisory findings must be focused on significant matters that require attention. Matters requiring immediate attention, or MRIAs, are matters of significant importance that the Fed believes need to be resolved right away.
Bonds are coming down again.
Including matters that have the potential to pose significant risk to the safety and soundness of the banking organization. My question, Vice Chair Barr, was managing interest rate risk listed in the MRIA section of the supervisory finding issued to SVB? And if it was not, why not?
Senator, we're still reconstructing the supervisory record. We've just started the review, but my understanding is that they were issued a matter requiring immediate attention based on the inaccuracy of their interest rate risk modeling. Essentially, the risk model was not at all aligned with reality.
NVIDIA, all the big tech stocks are bouncing now.
Pretty interesting
Watch
statement.
Energy,
If it was
Watch
not
Energy and
aligned with
industrials, they're
reality.
still holding, as well as
I recognize
financials.
that
Those
you're
will be
gonna
the
have a
X
complete
factor. They're
report,
break even right now.
And I'm not going to try to push you too far into this, but I'm really curious. What's the time frame that's expected for a response for an MRIA, one that requires immediate attention?
Senator, there's not a fixed amount of time. It depends on the issue, the scope of the issue, the complexity of resolving the issue. So I don't have a way of giving you a firm baseline on the action, but they're expected to be a top priority for management to address. And particularly in the interest rate environment that we're in, and knowing that the firm had been cited previously for other problems with liquidity risk management and interest rate risk management, supervisors would expect that would take a high priority attention by top management. The supervisors met with the CFO of the firm in the fall, in October of 2021, to convey the seriousness of the findings directly.
During this time period, perhaps for as much as 6 months during that previous year, bank was without a risk management officer. Is that correct?
That's my understanding. I think it's terrible risk management, obviously, not to have a CRO at the firm. You need an effective CRO as part of risk management of the firm. And as I indicated previously, the supervisors had told the firm in the summer that they had deficiencies in governance and controls at the management level and the board level, and that was related to their failure to appropriately manage risk.
My understanding is that there was a period of time there in which they were without a CFO as well. Is that correct?
I don't have the details of that, but I'm happy to get back to you.
Okay.
And then they didn't have any
I recognize
employees.
that there is a difference between a matter requiring immediate attention and a matter requiring attention. Can you kind of share with us the difference? I mean,
that's that citation
there clearly
thing.
is a defined difference between a matter of such importance that it requires immediate attention versus one where it requires attention. Can you talk a little bit about what the expectations are between the two?
They both really signal that bank management should pay attention to what's in front of them. They're not issued lightly. Matter require immediate attention is, as its name suggested,
but what happens if they don't respond?
They should place a priority on fixing this issue over other issues. But the exercise of the line between the two is a matter of supervisory judgment.
Just to follow up a little bit, and recognizing once again that we'll get a full report in the next couple of weeks, but it seems to me that when it turns into an MRIA, there is an expectation that the board
matter
or the
requiring
executive
immediate
officers will
attention,
respond
MRIA.
fairly quickly. To your knowledge at this point, was that expectation met?
Well, I think the fundamental fact is, the firm failed because of its interest rate risk and its liquidity risk, and that is, I think, evidence of the fact that they didn't respond strongly enough and promptly enough.
In other words, with the information that you had and that the regulators had, they were able to determine that there was a problem at the bank, and they directed that there be a response.
Right back to open practically.
Immediately, an immediate response. Based upon the data that they were able to gather.
It's about to be 4,000 on futures,
that's
so
a reasonable
kind of a key level here at VWAP.
I don't know what the time frame set out in each of the individual orders were, so I'm not able to answer your question with precision, and I want to be very careful to be able to do that.
That's fair.
And not go beyond the record.
Let me just finish this, though. But we will receive that information when the full report comes out.
Yes. On May 1st, we'll release the full report, and it will include the reports of examination. And so people will be able to see what's in the record.
Very good. Thank you. Thank you, Mr. Chairman.
Senator Menendez of New Jersey is recognized.
Thank you, Mr. Chairman. In 2018, Congress passed a bill which was signed into law by President Trump that relaxed regulation for institutions like Silicon Valley Bank. That law, which I opposed, exempted those banks from enhanced prudential standards, stress tests, raised the threshold at which a bank would be considered systemically important. But even as that law kept Silicon Valley Bank off the list of systemically important institutions, the Fed and the FDIC rightly cited systemic risk to justify their actions to prevent runs on other banks. So, Mr. Barr, Mr. Gruenberg, each of you voted to invoke what is known as the, quote, systemic risk exception. So with a simple yes or no, can you tell me that the situation at Silicon Valley Bank posed systemic risk?
Thank you, Senator. I think it's an absolutely crucial question. The invocation of the systemic risk exception required judgment as well as incoming data. And our best assessment, the assessment of a unanimous Federal Reserve Board and a unanimous board of the FDIC and the Treasury Secretary, was that we were seeing signs of contagion in the banking system that threatened to put at risk depositors and banks across the country. And to make sure that banks could continue to lend in their communities, to make sure that depositors were safe, to make sure that businesses could pay payroll, well, we thought it was important to invoke that systemic risk determination and prevent that.
Because you felt that Silicon Valley Bank was a systemic risk at that point in time?
The judgment was really broadly about the risk
I sold my Apple for $48.
the failures of these institutions and other stresses
I thought
in
it
the
moved
system
quicker.
were posing as a whole, as opposed to a particular decision.
It seems to
only
me
about
that sounds like a distinction without a difference. If any single bank's failure can cause contagion that threatens the system, then it seems that the bank should be considered systemically important. And so we need, you all need to have an obligation to be clear with us and with the American people when you took extraordinary steps to protect uninsured depositors that could very well lead to increased fees charged to banks and ultimately to consumers. So I think we need to be clear about what is a systemic risk. And so I'm looking forward a more crystallized version of that. I was here in 2008. I don't want to live through it again. Do you agree with President Biden's statement 2 weeks ago that Congress should strengthen rules for banks to make it less likely that we will see another failure similar to that of Silicon Valley Bank?
Thank you, Senator. I think it's important for us to strengthen capital and liquidity rules. We're working on strengthening them as part of our Basel III reforms and our holistic review of capital. And I think we need to move forward with that. And as both Chair Grunberg and I suggested, with a long-term debt requirement that would provide an additional cushion in addition to capital for large institutions. That work will need to go through notice and comment rulemaking. There will be transition periods for it, but I think that is really important work for us to do, and I'm committed to doing it.
Well, let me ask you, Mr. Barr, this morning I, along with Senator Rounds and other members of this committee, sent a letter to Chairman Powell asking him to explain whether the feds applied enhanced supervision or prudential standards to Silicon Valley Bank or any similar sized bank using the Fed's existing authority. We've also learned from public reporting that Fed supervisors began flagging problems as a SVB as far back as 2021. Now, I understand we have a lot more to learn about the facts of what transpired, both at the bank with any management failures, but I expect that we're going to see that all factored in as part of a review. So as you begin that review, let me ask you, do you agree with Chairman Powell's statement last week that from what we know, it is, quote, clear that we do need to strengthen supervision and regulation?
Yes, I absolutely agree with that
statement. Thank you for that. Now, lastly, what I would love to know, Mr. Greenberg, about as we think about should we raise the federal deposit insurance? What percentage of account holders does that account for? How much is private versus business?
This could move things. This question.
What are the costs that are associated with it? So I'll just put that out there for you to submit an answer to the record because it will take more time than what I have. But the last point I want to make is we have seen a flight from regional and community banks to quote unquote too big to fail banks. And a concentration of deposits at a select few institutions also brings about its own risks to the financial system. At the end of the day, it seems that we are incentivizing entities to go to too big to fail banks. It only makes it even more consequential in terms of too big to fail. Is that what we want to ultimately achieve in this process?
Senator, I think that the goal of the actions that we took are to make sure that we have a thriving diverse system of banking in the United States, including community banks and regional banks that are the lifeblood of many communities all across the country.
Thank you, Senator. Senator Kennedy, Louisiana, is recognized.
Thank you, Mr. Chairman. Thank you all for being here today.
I love
Chairman Barr.
Thank you, Mr. Chairman.
The Federal Reserve
He's gonna ask some wicked shit.
tested 34 banks in 2022. Is that correct?
Senator, I don't have the exact number in front of me, but that
I have your report. I have your report. It says 34. And the cutoff was $100 billion. Is that right?
Yes.
Okay. You didn't stress test Silicon Valley Bank, did you?
He's just so funny.
No, under the Federal Reserve Board's rules that were put in place for the transition into the stress testing, it takes a while for a firm to be considered above the threshold. They need to have a rolling four-quarter average.
Did you stress test Silicon Valley Bank in 2022?
No.
Okay. Silicon Valley Bank had $100 billion, more than $100 billion in assets at the end of 2021, did it not?
Senator, as I was explaining, the transition rules in place at the time require a rolling four-quarter average to be above.
There you go. You're breaking above 4,000 on the futures.
If the firm happens to be in a year that
back
isn't the
to the
year
open,
that,
my
since it's an
friends.
every other year test.
Back
that a
to the
test is
open.
Running, then it waits till the next year. So for Silicon Valley Bank, that would have meant 2024 would be its first stress test.
But the point is, you didn't test Silicon
Oh,
Valley
Baba
Bank.
is coming back up.
We did not apply a stress test to Silicon Valley Bank. It was, of course, using its own stress test.
Did you have the authority to do it?
Under our existing regulations, no. We would have to change our regulations to have that authority.
Under the Congress's amendment to Dodd-Frank, Senator Crapo talked about it, 2155, Section 252.3. Isn't it a fact that we gave the Federal Reserve the authority to stress test Silicon Valley Bank?
Under that legislation, the Federal Reserve could have put in place a rule defining the word periodic,
but you
in a different way than was done.
Right, but you didn't, did you?
The Federal Reserve did not do that.
Okay. If you had stress tests, well, let me put it this way. If you had stress tested Silicon Valley Bank in 2022, it wouldn't have made any difference, would it?
I don't know the answer to that question.
Well, you didn't test for Silicon Valley Bank's problem. I've read your report. Your stress test, you stress tested these 34 banks for falling GDP, spike in unemployment, and defaults in commercial real estate.
These facts.
Isn't that correct?
Yes, in a typical adverse scenario for banks, we're testing falling interest rate
But that wasn't our problem in 2022.
I completely agree with you.
It's not our problem today. The problem is inflation, high interest rate, and loss of value in government bonds, isn't it?
I completely agree with you.
So you stress tested in 2022 for the wrong thing.
The stress test is not the primary way that the Federal Reserve or other regulators test for interest rate risk.
But you stress tested for the wrong thing.
As I said, Senator, I agree with you that it would be useful to test for higher rising interest rates. That's why in our alternative scenario, multiple scenario that we put in place for this year's stress test, we do that. These decisions were made before I arrived, but I agree with you that it would be better to do that.
But it's like somebody going in for a test for COVID and getting a test for cholera, isn't it?
I don't know enough about either of those tests to know.
Yeah. Well, they're different.
Damn, they both get smart.
Well,
I don't know much about those tests, sir.
Frank kept them from stress testing. The way I see it, you chose not to stress test, and if you had stress test Silicon Valley Bank, you wouldn't have caught the problem.
As I said, Senator, I agree with you that the statute requires periodic stress testing. The Federal Reserve made a decision about how to implement that in 2019.
Right.
That resulted in SVB not being tested planned to be tested until 2024. Well, but as I said, the stress test requirements.
You knew from the. I'm sorry to cut you off, but the chairman's going to cut me off in a second. But you knew. The Federal Reserve knew.
All right, I closed my
SQQ
for 200 profit.
Had a problem with
I'm gonna go back into it, but
of its
we'll give it
money
some time.
In interest rate sensitive long government bonds, didn't you?
I think the investing public and the Federal Reserve, which cited it for interest rate risk problems, knew that it had interest rate risk. I think
the Federal
nobody
Reserve
anticipated
didn't do anything
the bank.
about it, did it?
I'm sorry, I couldn't hear you.
The Federal Reserve didn't do anything about it, did it?
I disagree with that, Senator, respectfully. The Federal Reserve did cite these problems to the bank and require them to take action. Bank management failed to act on those.
You didn't follow up, did you?
Senator's time has expired.
SYM flushing.
I sit here and watch
down 10%.
Mr. Barr reluctant to criticize some of the moves of his predecessors at the Federal Reserve. I'll leave it at that. Senator Smith from Minnesota is recognized.
Thank you, Mr. Chair, and thanks to our folks for being here today. Really very much appreciate it. So I want to just start by reiterating what I know some of my colleagues have said, which was that as these two banks collapsed, I heard you say very clearly, Vice Chair Barr, the Silicon Valley Bank in particular collapsed because of, what looks like gross mismanagement and failure to manage even the most basic of risks, liquidity and interest rate
risks. It's early,
risks.
but do your push-ups. I'm going to start doing curls.
And regulators took strong and decisive action to protect people and to keep our banking system safe and secure. And the reality is that that action that you took was necessary, but it was also extraordinary. Extraordinary actions were called for in the moment. And you, of course, don't want to have to use extraordinary actions. You want to be able to rely on banks to make good decisions and to protect their shareholders and to protect their depositors. But let me just clarify one thing before I want to follow up a little bit on Senator Kennedy's questions. The Fed, under the previous Vice Chair of Supervision, put into place rules that I think there's a question about whether those rules, I think even in the moment, you were critical of those rules. Is that right?
Yes, that's correct.
And so your review will take a look at what would have happened if those rules hadn't been in place, and then you can make decisions about what new rules need to be in place to protect from this kind of extraordinary situation that we saw with these two banks. Is that correct?
Yes, that's correct, Senator.
So I think that's just important for us all to understand here as we think about what has happened. The Silicon Valley Bank's failure was the result, it appears, of management failures at many levels, all coming together at the worst possible time. And I'm particularly struck by the bank's failure to manage interest rate risk. You and I talked about this last week, which is basic bank management. It's not rocket science to manage interest rate risks. Interest rates, were near zero for more than a decade, and a lot of business models, it appears, including Silicon Valley Bank's business model, was predicated on basically free money. And
Kroger's running.
That obviously presents risks when that changes. So I'm concerned, Vice Chair Barr, about other institutions, banks and non-banks alike, how they are managing what must be similar interest rate risks. Could you just address that and talk about how the Fed right now and others are monitoring that interest rate risk and what that tells you about where we need to do differently?
Coin breaking out.
Thank you, Senator. Let me just start with the basic point, which is the banking system is sound and resilient. Most banks are highly effective in managing interest rate risk and liquidity risk.
That's what I would start with.
It is the bread and butter kind of work of bank management. So we are monitoring the financial system, monitoring the banking system. We're looking at interest rate risk and liquidity risk across the banking system to assess that. Where banks need to do better at interest rate risk and liquidity risk management, we're pointing that out. But I think the fundamental point is the banking system is sound and resilient.
Fundamental
I
point.
mentioned to you when we spoke that I had a chance to meet with a group of Minnesota bankers, including Minnesota has more community bankers, I think, per capita than any state in the country. And they were eager to point out to me that their business models are very different from the business models of highly risky enterprises like Silicon Valley Bank.
So coin's really running now from the breakout up 1.5.
You raising that. In fact, I've been getting texts from some of my bankers today watching this hearing and wanting to point out that difference. Mr. Barr, can you talk about the risks of interest rate, sort of this interest rate risk, as it might affect non-banking institutions, as, for example, mortgage loan companies?
Thank you. First, let me just say, as you indicated, I hear from community bankers as well, and I know many other senators have in your home states. The vibrancy and the health of that community banking sector, and we see that too. We are obviously looking at interest rate risk as it affects not only banks but also the non-bank sector. We look at, of course, at non-bank mortgage servicers. We're looking at hedge funds. We're looking broadly across the financial landscape to see where those risks might arise and how those might propagate in other ways into the banking system. So we're highly attuned to that. But again, I think the basic point is that the banking system is sound and resilient. Depositors are safe.
Y'all hear that?
And we've, through our actions, demonstrated that.
Three times in one question.
Senator Smith, Senator
Sound and
Lummis of
resilient.
Wyoming is recognized.
Thank you,
Three
Mr.
times.
Chairman, and thank you, panel. I want to follow up a little bit on
That's
Senator
almost a sound. That's
Kennedy's
sound and
line of
resilience once a minute.
questioning. As I read statute 5365, section C, risks to financial stability, safety, and soundness, the Board of Governors may order or rule, the Board of Governors may, by order or rule promulgated pursuant to section 553, apply any prudential standard established under this section to any
Utilities
bank
on the
holding
high,
company
FRC still dumping.
with consolidated assets equal to or greater than $100 billion. So that was Silicon Valley Bank. Then you've got statute 2155, that when it was changed from may to shall, made mandatory a new duty on the Federal Reserve to take into account higher risk profiles presented by certain banks and to strengthen supervision of those banks. So you look at Silicon Valley Bank. They had a number of activities with above average risk profiles. Their concentration of deposits, the quantity of uninsured deposits, 94% uninsured deposits. Then you look at Federal Reserve Authority under Regulation
Bro,
double
somebody
Y
definitely gave her this to read.
to impose additional risk-based or leverage capital or liquidity requirements or other requirements the board deems necessary to carry out the purposes of Dodd-Frank. I look at all this and I think that among all these statutes and regulations, the Fed had plenty of authority to prevent Silicon Valley Bank and the problems it encountered and was aware pretty early on that
it does kind of look like
unique
Martha, I'm not
problems
gonna lie.
there, and that it was a
And it sound like her.
very unique
Kinda
financial
dope.
institution because of its risk profile, but didn't do it. As I look at what authority you've been given, I can't think of another additional rule or regulation or law that you needed. Tell me whether you agree with that or not.
Senator, I agree that the Federal Reserve has substantial discretion to alter through notice and comment rulemaking the rules that were put in place in 2019 with respect to firms over $100 billion. There are some areas that the statute would provide some limitation to, but there is substantial discretion for the Federal Reserve to change its rules for firms in the $100 to $250 billion range.
Change its rules. What would it have to do?
We would have to go through a notice and comment rulemaking process.
Oh, I don't mean the procedure for changing a rule. I mean, what changes would you make to the rule?
Senator, we haven't made a definitive conclusion on that. We're undertaking this review of SVB's failure.
So we might not get an update on rule changes till May.
Whether it be appropriate
based
to
on
change
that.
capital rules and liquidity rules.
Some people were
for this
hoping
size
to
firm,
hear
for
about
firms more generally.
new laws in
We're
place.
looking at that right now.
Is fractional reserve banking overly risky in this age of online banking?
Senator, let me just say, repeat what I said before, which is that overall the safety and soundness of the banking system is strong.
I already knew it was coming.
Banks are safe and sound.
Woo!
Depositors should feel assured that their deposits are safe.
Well, here's the problem, though, as I see it, the way
feel
that
safe and
these
sound right
banks
now.
have been managed, Wyoming's community banks may end up paying for this through higher assessments from the FDIC. Am I correct, Mr. Grunberg?
Well, as I indicated, Senator, in regard to these two institutions, any cost to the Deposit Insurance Fund from covering uninsured deposits is required by law to be recovered through an assessment on the banking industry.
Exactly.
If I make just one additional point, the the law does give the FDIC authority in implementing that assessment to consider the types of entities that benefit from any action taken or assistance provided.
So are you saying that you're able to exempt Wyoming's
Again,
community
you're right at
banks
open now.
from paying for
So
this?
we've burned
I'm
about
suggesting
2
we have
hours
some
on the
discretion
dot
there, and we're
to
gonna,
stay in the same place while listening to
consider
this.
that issue carefully.
Again, tech is the
you
worst on the
exempt
day.
community banks from having to pay for
Discretionaries are
That's
red,
a
real
judgment
estate
our
and
board is gonna have to
communications,
make.
energy, utility, and staples
as I
are leading.
indicated, we anticipate going out for
Dow
notice
positive,
and
SPY,
comment,
NASDAQ red,
public
small caps
rulemaking
green.
in May to implement the assessment. And as I indicated, we have discretion
Do you
here
have
under
to
the
go
law.
through APA rulemaking to assess?
That's the law. That's a legal requirement.
Thank you, Mr. Chairman.
Thank you, Senator Lummis. Senator Warren of Massachusetts is recognized.
Thank you, Mr. Chairman. So we just experienced the second and third largest bank failures in American history.
This is going to be fun.
Executives at SVB and Signature took wild risks and must be held accountable for exploding their banks. And I'll soon introduce a bipartisan bill to do exactly that. But let's be clear, these collapses also represent a massive failure
Apple
in supervision
introduces
over our
Apple
nation's
Pay Later.
banks. So coming out of the 2008
What does that mean?
crisis, Congress put tough banking rules in place. Now, big banks hated them, and their CEOs
To allow
lobbied hard
customers
weaken
to
those
pay for
rules.
purchases over
Ultimately,
time.
Congress
Watch a
signed
firm to
off,
the
and then it
downside.
got bad, really bad. Regulators
Yeah, firm
burned
is
down
getting
dozens
clapped.
of safeguards that were meant to stop banks from making risky bets. Now, the three of you here today represent the U.S. Treasury and two of our top banking regulators. I'd like to know if you believe that we need to strengthen our banking rules going forward to ensure the safety of our financial system. Vice Chair Barr, let me start with you. Do you believe we should strengthen our financial rules going forward?
Yes, I do, Senator.
And then 7-day auction coming in right now.
President Biden agrees with you as well. 2 weeks ago, he stated that we must, quote,
Why did she call him Vice President
strengthen the rules
Biden?
for banks to make it less
CRM's
likely
moving up
that
too.
this kind of bank failure would happen again. Chairman Gruenberg, what about you? Do you agree with President Biden that we need to strengthen our banking rules?
I do agree, Senator.
Good. And now,
Good.
Under Secretary Liang, do you agree with the President on this?
Senator, I agree that we do need to prevent these types of bank failures.
Well, I'm asking you, of course we need to prevent them, but that's not by simply wishing it. It's by stronger regulation, is that right?
I agree, Senator.
Okay, good. Now, we need better laws here in Congress, but let's also talk about how we can strengthen the rules today, even before Congress acts. Under current law, the Federal Reserve has the discretion to apply stronger prudential standards on banks with assets between $100 billion and $250 billion, exactly the size of Silicon Valley Bank. That authority is not being used right now. Vice Chair Barr, will you use your authority to strengthen rules for the largest banks in this country? As you use your authority to strengthen the rules for the largest banks in this country, will you be reaching banks with assets of at least $100 billion?
Senator, we, of course, would need to go through a notice and comment rulemaking in this process, but I anticipate
Ladies and gentlemen, you better watch your speakers right now, because Bradley Frizzle and the Peach has arrived. As Elizabeth Warren is talking. Oh, no. Wow. Good. Good. That's how I feel about that. Good.
The FDIC, under your predecessor,
God bless you, Bradley Frizzle.
joined
Good
in
morning.
on the fun and also started weakening FDIC rules across the board. Capital and liquidity requirements, stress tests, you name it. In fact, your predecessor explicitly told these banks that if FDIC bank examiners were asking too many questions, that they should, quote, let us know, end quote. Now, there's a banking regulator who makes it clear that she is there to serve the big banks instead of the American public. Chairman Gruenberg, will you commit to using your authority to undo the rollbacks that your predecessor initiated and to strengthen the rules and supervision for banks with greater than $100 billion
Dollar
in
General
assets?
on the high.
Senators,
and
I
Coinbase
think you know
too.
I was a member of the board at that time and voted against those measures. And I certainly think it's appropriate for us to go back and review those actions in light of the recent episode and consider what changes should
Well, I have to say, review sounds a little wishy here. You didn't think they were good rules to begin with.
My views haven't changed, Senator.
All right, so you still think they were a bad idea?
I do.
Got it. You know, each of you at this table has authority
Got
that
it
you
is
can
not good.
exercise
Got it is
right
definitely
now
not
to
good.
strengthen rules for big
She's
banks
going after him next.
and to ensure that our banking
said,
system
"You and Powell
and
are
our
done.
economy are safer."
Done.
I urge you to use that authority, and I urge my colleagues here in Congress to do our part to protect American families and small businesses from yet another banking crisis. Thank you. Thank you,
Senator
Mr.
Warren.
Chairman.
Thank you, Senator. Senator Haggerty from Tennessee is recognized.
Thank you, Mr. Chairman. If you would allow me just a moment to speak to the tragedy that occurred at the Covenant School in Nashville, Tennessee yesterday. A depraved person, a sick person, executed a tragic act and yielded a terrible result. And my entire community is mourning. We're mourning for the families, for the victims, for everybody concerned. I also want to acknowledge the bravery of the Nashville Police Department. They stepped into harm's way and within 14 minutes brought the situation under control. Tremendous bravery at a time when it's called for, and I want to acknowledge their sacrifices. Now let's turn to the matter at hand. And I know that politics in Washington always seizes upon any crisis as an opportunity to achieve whatever regulatory or legislative opportunity or goal that may be in front of them. But I'd like to talk about managerial execution here. Specifically, I'd like to start with you, Chairman Gruenberg. I'd like to talk through a series of events that followed SVB's failure 2 weeks ago. As you know, Silicon Valley Bank was taken into receivership on a Friday morning. That gave the FDIC 3 days to find a buyer before markets opened on Sunday night. You had tremendous resources at your disposal. 18 years of experience on the FDIC board yourself. Detailed resolution plans. Over 5,000 employees and interest from a number of banks to bid, including at least one formal offer, as I understand it. Instead of successfully executing this process, however, the FDIC used the systemic risk exemption to guarantee all deposits at SVB, creating tremendous uncertainty across our economy. And now, 2 weeks later, the FDIC has announced the sale of less than half the failed bank's assets at a loss of $16.5 billion. So my first question, in the joint statement released on March 12th, you said, quote, no losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayer. Is that still your position?
Senator, yes, as you know.
Well, the problem is, with 2 partial sales completed and over $22 billion in losses already accrued, that position just doesn't square with reality. These losses are borne by the Deposit Insurance Fund. That fund is going to be replenished by banks across the nation that had nothing to do with the mismanagement at Silicon Valley Bank or the failure of supervision here. In fact, that's going to be addressed by a special assessment to those banks. And as we all know, these banks will have to pass these costs along. Last time I checked, those costs get passed along to the consumer. Those consumers are American taxpayers. Chairman Gruenberg, invoking the systemic risk exemption is a last resort emergency option to the typical methods of resolution, and it begs the question of why you had to invoke that extraordinary exception. Just this past Sunday's announcement of a new purchaser of part of SVB, not only were serious losses incurred, but the FDIC entered into a loss-sharing agreement with the acquiring bank, and a $70 billion line of credit was extended to the purchaser. That's a pretty sweet deal. And this makes me wonder what prevented the FDIC from coming to a deal like this 2 weeks prior. You told Ranking Member Scott that you received bids for SVB over the weekend following its collapse, but that they were insufficient. What was your counteroffer? And did you engage with the board of the bank that didn't approve this to get them to step up and approve it?
Considering sale of IMG Academy?
One offer that was frankly more expensive than the cost of liquidation. Didn't appear to be a viable offer at that moment.
Was there a counteroffer to that?
I would have to check with our staff in terms of how much of a back and forth occurred.
Let's talk about the bidding process itself. Were certain banks dissuaded by you or anyone else associated
Okay,
with
you're
this
about to break
from
out
bidding
from
on
to a
SVB,
new high right
either
now.
before or
Still
after the
red
bank was
though on
taken into
SPY, but
receivership?
SPY will go green. NASDAQ will be the
Throughout the course of
lagger.
that weekend, I was inundated with phone calls telling me that legitimate bidders were being waved off of the process. It's one thing to reject a bid if it's bad, but if ideology had anything to do with this entire committee is going to be deeply concerned about that. I look forward to the GAO's report on this because the result of this failure places the banking sector in a state of disarray that we've never seen before. In spite of all the preparation and tools at your disposal, the FDIC failed to do its job. There was obviously enough demand to orchestrate a sale. What it looks like to the American people is that you simply didn't feel the incentive to execute and leaned on the systemic risk exemption to buy time, and in doing so, have placed the entire U.S. banking sector into uncharted waters. I don't see any apparent improvement in outcome, and this is a disgrace. I look forward to the GAO review, and I hope that we get to the bottom of this. Vice Chair Barr, very quickly, I'd like to come to you. In response to the 2008 financial crisis, the size and scope of the regulatory regime was dramatically expanded by Congress. Regulators like yourselves are giving powers, not to mention hundreds of academics at your disposal, with the sole job of monitoring and addressing risk to the financial system. All of this was in hopes of identifying and preventing bank failures that pose systemic risk. And in spite of all these tools, we find ourselves in a situation today that is unprecedented.
Oil's still running too.
It's pretty clear that Silicon Valley Bank was woefully mismanaged. Their management team, which didn't have a chief risk officer for 8 months last year, yet created and maintained a chief diversity, equity, and inclusion officer, allowed their bank to accumulate truly shocking levels of risk. And while this was occurring, the San Francisco Fed was focused on researching left-wing policies that they had absolutely no expertise in, ignoring one of the most basic risks in banking, interest rate risks. Perhaps most damning of all, until the day of their failure, SVB's CEO sat on the board of the San Francisco Fed. So, Mr. Barr, in your review of what went wrong in your supervision, will you consider the level of managerial
I didn't know that. He was on the board of the San
Francisco
Fed?
Senator, the staff have free rein to examine any issue that might have addressed supervision. I think the core issues are the ones I suggested at the outside, and they're really basic. Interest rate risk mismanagement by the bank, liquidity risk mismanagement by the bank. The San Francisco examiners, the examiners at the San Francisco Federal Reserve Bank called those issues out to the board, called them out to the bank, and those actions were not acted upon in a timely way. And so I think
I hope you'll
in a way, the issue
dig into
is
the
pretty
urgency, the sense of urgency that was brought to bear on this, and the sense of pressure, and if every tool at their disposal was used, because they certainly were doing other things well beyond their remit. Thank you. Thank you, Mr. Chairman.
Absolutely. Thank you for your questions. I'm going to ask the questions now, if I might. In 2008, I voted against the bailouts of the big banks because I don't support taxpayer bailouts. We do need to protect American consumers and small business folks. We need to hold bank executives accountable when they screw up. And if the regulators are asleep at the wheel, we need to hold them
new CEO
accountable.
Says they're not for sale.
The correlation I would say is when I run my farm,
and says he's not ruling out expanding past rideshare.
That's all I look at. I don't get the whole picture. And quite frankly, I won't be in business long. If regulators are only looking at capital, that isn't everything that's going on. At Silicon Bank, they had a concentration in a highly volatile industry. They had grown rapidly, had mostly uninsured deposits. Their investments were poorly timed with interest rate increases that were clearly forecasted, all setting the conditions for a classic bank run, one that happened quickly due to new technologies that are out there. So, Vice Chair Barr, from 2020 to 2022, the Silicon Valley Bank grew from 71 billion to more than 200 billion. This was a very rapid growth. It was heavily concentrated with techs and startups, industries that have always been volatile. Then the bank took those mostly uninsured deposits and invested them in long-term U.S. Treasuries when the Fed had been clearly forecasting that rates were going to go up, which the bank executives should have known because their CEO was a director at the San Francisco Fed. And for 2 years, it seems that federal regulators were flagging concerns about this situation. Is that a fair statement that for 2 years the Fed was flagging concerns about this bank's financial viability?
Well, all oil plays
Senator,
are running.
The examiners were focused on interest rate risk and liquidity risk at the beginning in November 2021. There, at least as far as I know from the supervisory record thus far, I have not seen something that said that the supervisors were focused on whether the firm was viable. But our review is underway.
But doesn't that impact the viability?
Yes, Senator, is a core safety and soundness risk. A liquidity risk and interest rate risk are core risks that the bank mismanaged.
So were the regulators physically in the bank? So I've talked to a lot of intermediate-sized banks. They tell me that the regulators are right there 5 days a week, 7 days a week if they're open 7 days a week. Were the regulators in that bank?
Physically speaking, I actually don't know. The part of the supervisory period is during the pandemic when activities were happening in part remote. So
Okay.
I don't have yet, but we will have.
I just want to point out the fact that the pandemic's been over for quite a bit, and the opportunity for those regulators to be in there would have been long before a month ago.
Yes, Senator, I don't have the full supervisory record. We've just begun our review, and I want to be very careful to answer only questions I know.
Do you know if the Fed supervisors met with the board of directors of Silicon Valley Bank?
I don't know that yet. I know they met with senior management, but I'm still reviewing the record.
So you wouldn't know if Silicon Valley Bank had a risk committee and if, in fact, the Fed supervisors met with the risk committee?
I will know that by the May 1st report.
So were they warned about potential fines?
I'm sorry, could you say that again?
So, I mean, look, they had some problems. Were they warned to either fix them or they were going to get fined?
The matters requiring attention and matters requiring immediate attention, to my understanding, require the fixing of the problem, but I don't know whether they've highlighted any additional steps that might be taken.
Weird.
Certainly, the firm was on notice that they needed to fix those problems quite clearly since November of 2021.
But what was the ultimatum?
But yet they didn't.
They did not.
So what point in time does the Fed regulators drop the hammer on this outfit? I mean, I don't even need to get going on the bank CEO taking a ton of money right before this thing went belly up, as it was going belly up. At what point in time, we could have all the regulations on the book. I've talked to a lot of bankers who said if this had happened before Dodd-Frank, the regulations were there to stop this to happening. And we have Dodd-Frank. And we did make 2155 to tailor the regulations to fit the risk. That was a big part of it on the intermediate banks, and in fact on the small banks too. But yet, for over a year, and correct me if I'm wrong, Mr. Barr, for over a year, regulators were saying to this bank, straighten up and fly right, and they never did a damn thing about it. And the regulators didn't make it so damn miserable, which my understanding is regulators are pretty good at that when they want to be, make it so damn miserable that these folks would adjust their business plan to take care of the risks that was in their bank.
Senator, I agree
that's a
that
pretty
the
epic
risks were
point.
there, that the regulators were pointing them out, and the bank didn't take action. It's ultimately, in the first instance, the bank management
That's like the most level-headed question where it's just like, what the
failed
fuck?
to do it. Where we didn't take enough action, if the Federal Reserve supervisors didn't take enough action, we're going to be talking about that in our review, and we expect to be held accountable for it.
So I got to tell you, Michael Barr, I am not a banker. I ain't even close to being a banker. I'm a dirt farmer, and I'm going to tell you, when they laid out what this bank had happened over the last 2 years, you did not have to be an accountant to figure out what the hell was going on here.
I agree.
And all I've got to say is, as you do your look back into what transpired, it better be fixed. If it's the regulator's fault, it better be fixed. If it's the regulation fault, it better be fixed. If it's something else, I hope there's a report to this committee saying, you know what, guys, this can happen again unless this happens. But it looks to me like, I'll just tell you this, and I'm looking out from the outside in, it looks to me like the regulators knew the problem, but nobody dropped the hammer.
Thank you, Senator Tester. As I said, our review is going to be thorough. It's going to be open. And if we find problems like the ones that you just described, we're going to say it clearly and describe what we think should be done.
When do you think that report will be done? And I'm way over time, sorry. When do you think that report will be
May
done?
1st.
May 1st, so we got a month.
We should have them back after the report is done.
We look forward to that. Thank you.
Senator Vance.
Thank you, Mr. Chair, and thanks to the three of you for being here. I want to talk just a little bit about the inherent unfairness and what I think transpired with Silicon Valley Bank. And I come from the venture capital industry, and this is a statement against interests, and certainly a statement against the interests of some of my friends. But the business model of Silicon Valley Bank was
this guy's
to provide
definitely
banking
number
services to
one
venture
on
capital
the
firms and to
Congressional
venture-backed
hairline
companies.
leaderboards.
And if you think
The
about
fuck? Why
the
does he have so much
fundamental
hair?
trade that was implied, and I
Kinda
would even say
bothering me.
explicit in their business model, what they did is they offered highly beneficial financial products to venture-backed companies and venture capitalists in exchange for having a large number of deposits in your Silicon Valley Bank account, sometimes often exclusively. So a common practice, for example, was to say that you would provide a line of credit to a venture capital firm, but only if that firm put all of its money, 100% of its deposits, in Silicon Valley Bank. Or they would offer private jet financing and other goodies that are basically beneficial only to the very wealthy in exchange for having all of your deposits at Silicon Valley Bank. Now, given that that was implied in the business model of the bank, I think it's important that we use the term bailout, and I know that some of you don't like that term, but I think it's the only term that applies fairly here, because we, using excess fees on community banks all across the country, effectively chose to bail out the uninsured depositors of Silicon Valley Bank. Now, there are some outrageous examples there. I think one firm had deposits over $3 billion. Another, I think Roku had deposits of $500 million. But there were a lot of people, a lot of firms at Silicon Valley Bank that had deposits well over $1 million, well over $5 million. And what we did in practice do was bail them out. I guess my first question, I'd put this to all three of you, and because time is limited, I'd like you to answer quickly, is what is the threshold? Whether you guys meant to or not, I think the implication of what happened with Silicon Valley Bank is that there are a lot of people who expect that their uninsured deposits are effectively insured at an unlimited level. Or if you're a banker, there's an assumption from a lot of people that at a certain level, if you're systemically important enough, your uninsured depositors are going to get bailed out. Maybe just go from left to right, starting with Mr. Greenberg. But at what level do you think uninsured deposits, in theory, are effectively unlimited uninsured in our banking system today?
Well, if I may say, Senator, you're asking important questions. I think we have a lot of lessons to learn from this episode. The decision to cover uninsured depositors at these two institutions was a highly consequential one that has implications for the system. I think we need, and I indicated in my statement earlier, we need to do a comprehensive review of our deposit insurance system and consider the questions that you raise. The FDIC is going to undertake that, and by May 1, we'll deliver a report including policy considerations to take into account. So we want to try to be responsive on that.
Thank you. Mr. Barr.
I also think you raise important questions. When we were looking at the systemic risk determination with respect to these institutions, we were thinking about the risk to the broader financial system, not the particular depositors at one or two institutions. We're thinking about and concerned about the extent to which that could impact regional banks across the country, community banks across the country. We were hearing concerns from bankers and from depositors, from businesses around the country. It's a difficult judgment, but one that at the end of the day, a unanimous FDIC board and a unanimous Federal Reserve Board and the Treasury Secretary agreed that risk to the system was not a risk that was worth taking. And so, today I think we can, say that the banking system is sound and resilient, and the steps we took demonstrated that resilience and the safety of deposits around the country.
So I'm less concerned with the decision itself, though obviously I have a lot of questions there. I think there's an open question about whether we could have provided the confidence to the banking system and the liquidity that was needed in case of a bank run without bailing out the uninsured Silicon Valley Bank depositors.
Kuwait's Kia to sell 20 million shares in Mercedes.
But what I worry about is the fundamental unfairness here, that we've drawn a line, and I don't know whether the line stops at Silicon Valley Bank. Maybe it goes much further. Maybe it stops there, where if you're systemically important, which is a term that's impossible for anybody here to define with confidence, if you're systemically important, your uninsured deposits are effectively unlimited.
I think KRE
in their insurance.
So take a look at FCNCA.
If you're a regional bank,
and now
Ohio,
look at KRE.
There's a very good chance that your uninsured depositors will not receive that bailout, and I think that uncertainty is a really,
First
really
Citizens
big
is
problem
hiding
with what
all
you
of
guys
the
have done.
regional moves. Again, the stock is up 60% in 24 hours, 48 hours.
Even though I don't think it was the right decision, I'm just saying I think it has some real moral hazard here. I know I'm over time here, so the one thing I'd ask here is just unanimous consent to introduce a letter to the record from American Share Insurance. This company provides private deposit insurance to most state-chartered credit unions, including the 43 in Ohio. And just on this point of moral hazard and on this point of unfairness, what I'd like to—
I don't think it was a gamma squeeze. They literally just became top 15 bank overnight by getting $200 billion at like 20% value.
To do it a little bit further
it was like it's just a crazy wholesale deal, bro.
So that everybody benefits from the rule that you guys have created for Silicon Valley Bank.
Without objection. Senator.
Thank you, Mr. Chairman. Thank all of you for your service and testimony today. Mr. Gruenberger, you're aware, are you not, of the fact that the CEO of SVB sold $3.6 million in company?
Oh, what the fuck? Why'd they just cut it out? Please hold while we connect your call. What is this, Habibi? Kind of bullshit is this, man? I don't know. Hold on. Convenient timing. Yeah, just cut out. I don't know. Let me check on I think that's from the Congressional website, too. So that shouldn't be, I don't know. Let's see. No, they still got one up here.
Without objection. Senator.
Thank you, Mr. Chairman. Thank all of you for your service and testimony today.
I don't know. This girl knows she's live right now.
You're aware, are you not, of the fact that the CEO of SVB sold $3.6 million in company stock just 10 days before the bank collapsed and the FDIC took over its deposit? So you're aware of that, right?
I am, Senator.
And are you aware of the fact that other executives of the bank and employees of the bank received bonuses literally hours before SVB collapsed?
Yes, Senator.
Now, I believe we need to have an independent investigation into any criminal culpability, possibility of insider trading in this case. But regardless of any criminal culpability that may be there, I think it's simply wrong, and I think almost every American would agree it's simply wrong for the CEO and top executives to profit from their own mismanagement and then leave FDIC to be holding the bag. Would you agree with that proposition, that that would be wrong?
Yes, Senator.
Now, Dodd-Frank provides clawback authority that applies to the biggest banks under the Orderly Liquidation Authority, under OLA. But as I understand it, that authority does not apply to SVB Bank. Am I right about that?
That is correct, Senator. Could I elaborate on that briefly?
If you could briefly. Just
Very briefly. We do not have explicit clawback authority. We do have an obligation to investigate any misconduct by the board and management of the institution, and we do have authorities to impose consequences, including civil money penalties, restitution, and barring individuals from the business of banking. So We can get at some of the issues.
Yeah, that's
raised.
Mercedes.
It's true we do not have explicit
Again, that
clawback
news of
authority.
Kuwait selling
And
20 million
indicated earlier
shares.
that it would be reasonable to create parity between the Dodd-Frank Act and the Federal Deposit Insurance Act in that regard.
Well, I'm glad you raised that. I heard your response earlier, and Senator Kennedy, a member of this committee, and I are working right now on bipartisan legislation to accomplish exactly what you said. I hope we can introduce it this week, and I know the chairman of the committee is interested as well in pursuing that. I asked Secretary Yellen in another hearing last week, it would hold banks' abilities to conduct mergers and acquisitions. The answer was yes.
No, this one's ahead.
So I hope we can move forward on that piece as quickly as possible, because there does seem to be a hole in your authority. You have some authorities you indicated, but there is a hole in that authority that we have to plug, and you agree with that.
I do, Senator.
So, Vice Chair Barr, I wanted to ask you about some guidance, in fact, a rule that was issued by your predecessor, former Vice Chair of Supervision, Quarles, shortly before his departure in March 2021.
NVIDIA's working its way up.
And
SPY trying to
this
go for
rule
green.
Established that supervisory guidance does not have the force of law, and it cannot be used in the event where it would halt banks' abilities to conduct mergers and acquisitions.
Oh, no, this one is mad behind.
I fully understand the distinction
between
supervisory guidance and black letter law, but I think it's important to note that this request for this rule, according to the Fed's, you don't have to listen to supervisors' guidance that much, and would you be willing to take a look at whether or not that should be repealed?
Senator, I'm not sure of the impact of that guidance. I think it's an appropriate area for us to be looking at. I know that staff are going to be thinking about that with respect to the SVB case, whether it mattered or it didn't matter. I do think it's an appropriate area to look at, but I do not have a firm conclusion about it.
Well, I hope you'll take a look at it, because it was done at the behest of the industry, and clearly the intent was to undermine the impact of the guidance provided by the regulators. So it seems to be part of a pattern of an effort to push back on regulators' authority and then come back and do
Activision on the low.
quarterbacking and saying, where were they? Thank you, Mr. Chairman.
Thank you, Senator Van Hollen. Senator Daines is yielded to Senator Brett, right? Senator Brett's recognized
EBS
from Alabama.
Yeah, PDUFA's tomorrow.
Thank you, Mr. Chairman. Thank you, Senator Daines.
So we will see.
I appreciate the opportunity to
Again, they've been clapped over
able to ask you all a few
50% leading
questions.
into it.
I want to start by
and
saying
then they popped
I am
up
proud to
10,
be from the great
15%
state of
day
Alabama,
before.
where our financial institutions are strong. Our regional banks, our community banks, our credit unions, and the critical role they play from our main streets to our rural roads could not be understated. So I am proud of the work they do and proud of the strength they continue to exhibit. Mr. Barr, I want to follow up on a question that one of my colleagues brought up. You keep talking about the Fed focusing on the size of SVB and banks. However, 2155 also requires the Fed to take into consideration riskiness, complexity, financial activities, along
I
with
still
other
have
risk-related
HKD.
factors. Tailored supervision ensures that the
VKTX
Fed
on the high,
focuses on
too.
the most risky banks.
They're starting
You've
phase
said
2
repeatedly
trial.
that bank mix
Energy
management
still the
led to
leader.
SVB's
Tech and communications the
failure.
worst.
The
Discretionaries,
whole point of
healthcare,
2155
break
was so
even.
that you could tailor your
Financials and
regs
real
and your
estate, but just
supervision to
above break
risk.
even.
So why did you not require definitive corrective action based on the flaws that you saw?
Thank you very much, Senator Brett, and I appreciate your comments about the Alabama banking sector, which I think is a thriving sector and is contributing to its communities. And like bankers across the country, is strong and vibrant. You should be very proud.
Thank you. We are.
We are looking at the range of tailoring approaches the Federal Reserve took. The decision to set those lines by asset size and other risk factors was made back in 2019. I joined the board in July of 2022 and began looking at that approach.
Okay.
I expect to continue to review it as part of the
Review process.
SVB review, and I believe we have substantial discretion to alter that framework.
Excellent. So you've talked about your review, which is ongoing. In that review, will you take a look at if you used all of the tools in your toolbox to prevent this, both before and after? Will that be part of your review?
Yes, Senator, the staff are reviewing the steps that supervisors took and whether they should have taken more aggressive action.
So at current rate, though, you can't speak to whether or not you utilized all of the powers that were given to you.
I really would like to wait for the formal review for the staff to come evaluate the full supervisory record to make an assessment.
Absolutely.
But we're certainly very focused on that question, and if we didn't do the right steps, we're going to say that.
Yes. Well, I find it concerning, though, when you all were asked, each one of you were asked, would you like to see more powers, more strength in this? Every single one of you said yes, when you don't actually know if you utilize the tools in your toolbox correctly, or if the people that were under your supervision were supervising appropriately. I think that's what people hate about Washington. We have a crisis, and you come in here without knowing whether or not you did your job. You say you want more. That's not the way this works. You need to be held accountable, each and every one of you. I'm a big believer you got to own your own space. And speaking of, Mr. Grudenberg, I want to talk about yours. So you are not the primary supervisor here. Obviously, that's the Fed, but you are the non-primary supervisor for SVB.
She's coming in on him.
Is that correct?
I like it.
Yes, we have backup supervision.
You have backup supervision. You had that before
we have
Dodd-Frank,
backup
correct?
supervision.
You had it after Dodd-Frank,
His energy
correct?
don't match it.
And 2155 did not change that responsibility that you had.
That's correct.
Right. So in that role, what did you do prior to the bank's failure to exercise that power?
Yeah, in this instance, we were working with the Fed as the institution was experiencing difficulties, but I think it's fair to say that it was in a supportive role with the primary regulator.
Okay, but you did raise this to the primary regulator. You did exercise
We were
that
working with the
authority.
primary regulator in regard to the institution.
Excellent. I am so glad to hear that. We have to make sure that we are working together and doing our job in order to prevent these things from happening.
Bonds are breaking out, interestingly enough. Bonds might go green today.
Is
Xerox.
just the different responsibilities.
They
that
could be
each of
good
you
brand
have
name, but I don't know.
whether they were executed.
I haven't Xeroxed
and
anything in
then
like 15 years.
Additionally, want to talk. We'll move into the FDIC's bank auction process for just a minute, although I only have 33 seconds left. It seems that you failed to put the bank in receivership, and the FDIC passed on allowing the Silicon Valley Bank to be purchased. Is that a correct assessment, or do you feel like that's been an incorrectly
Am I holding TYD? If the position is clearly on screen,
Senator,
I'm going to doubt you
the bank was
severely
placed in
for asking me.
receivership on Friday
So just take a
morning,
look at the screen, my friend.
And we
Thank you.
endeavored to solicit bids over the weekend. As I indicated previously, it was a rapid failure, so there was no opportunity prior to failure to prepare for a resolution. We tried to market it. We got two bids. Neither would have been less costly than liquidation. So we then proceeded to put in place a process where we were able to bid out.
Yes, and I am out of time, but I will say, and 6 months prior, J.P. Morgan noticed that there was a problem. Their equity research team
KRE's
and
finally
Moody's
slipping.
obviously met with SVB prior to saying that they were going to downgrade. So I've heard you all say this was a rushed process. If the outside sector knew this was happening, you and the Fed and the 4,000 examiners
Damn, why is the
should have
Twitch?
known that this was coming
You
as
guys
well.
are having a mutiny against Graham.
George is recognized.
Thank you very much, Mr. Chairman. Many Americans, and in fact all of us, would remember the unfairness of 2008 and that crisis when bankers who made bad decisions, who played games with our economy, not only did they not go to jail, they got to keep their jobs and their multi-million-dollar salaries.
He just looks sketch,
I feel
bro.
that in a particular way as someone who pastors and moves in communities where poor and marginalized people have the weight of the law come down upon them for the smallest of infractions. Not one banker went to jail. They kept their multi-million-dollar salaries. When bankers made risky bets that threatened our entire economy, they got to cash in. They should be held accountable. We discovered shortly after regulators took control of Silicon Valley Bank that top executives at the bank offloaded millions of dollars worth of stock in the weeks leading up to the collapse. Very convenient. including their former CEO, who sold $3.6 million worth of stock 2 weeks before the bank crashed. The Dodd-Frank banking reform law included a compensation clawback provision for executives identified as excessive risk takers, or in other words, those who put their banks and the entire economy in jeopardy. Mr. Gruenberg, the FDIC, in conjunction with the other financial regulators, began working on a rule to implement this provision in Dodd-Frank in 2011 and then again in 2016, but a final rule was never issued. Does the FDIC have plans to revisit this rule?
GM says they're optimistic their EVs will qualify for 7,500 credit.
It's appropriate, and I would say urgent. And I know
regionals, a lot of regionals are on the low right now, but you don't see it through KRE because First Citizens is holding it up.
Any evidence of insider trading, that seems only appropriate given the circumstances. That should be a part of the scope of their probe. But there is a scenario where these executives not only get away scot-free,
Did someone on the thing say it's coming back to close?
Sizable paydays. And the FDIC should use every tool it has at its disposal to prevent it. We certainly don't want to incentivize this kind of behavior. So again, Mr. Gruenberg, outside of this rule, tell me, where can Congress step in?
FTX founder Sam Bankman accused of bribing Chinese officials with $40 million in new indictment. That's old. That's from this morning, but it's coming across again.
Thank you, Senator. First, as a matter of law, whenever a bank fails, the FDIC is required to conduct an investigation of the conduct of the board and the executives of the institution, and we have authorities under the law to impose accountability, including civil money penalties, restitution, and barring individuals from the business of banking. So we have significant civil authorities under the law now. It was mentioned earlier, and I think it's appropriate, that we do not have explicit clawback authority in regard to compensation. We can get at that issue through our existing authorities, but certainly providing explicit clawback authority under the Federal Deposit Insurance Act, as the FDIC has under the Dodd-Frank Act, would be appropriate, in addition to completing the rulemaking that you raised previously.
Now, both of these things are important. We've got to complete
short maturity municipal bonds
and see whatever additional tools may
it seems wild.
be necessary. Certainly, as the ship is
I'll have to
sinking,
look into that a little more.
To be able to move all of their products on a lifeboat.
I agree, Senator.
That's like a whole different strategy of like going at, because munis are risky, but I've never even heard of it. I didn't even know they had those ETFs.
Signature Bank had no way to access their deposits. Everyday folks, leading to many Americans receiving their paychecks late or having missing paychecks. Too many Americans live paycheck to paycheck, and in this case, they got it late. And as a result, some of the 64 million Americans living paycheck to paycheck were hit with overdraft fees, non-sufficient fund fees due to the disruption, something I've addressed in other settings. And that's why I sent a letter with Senator Booker urging regulators to impose a temporary moratorium on overdraft and non-sufficient fund fees for folks who incurred these fees at no fault of their own. Mr. Gruenberg, does the FDIC have a plan surrounding overdraft and non-sufficient fund fee protections in the
VKTX price target increase? Double the current price?
Senator, you raise an important question. We received your letter. As a starting point, we know there were delays. We really want to get the facts in terms of if overdraft
Dude, you're right
fees
in
were
the
really
opening
imposed
candle.
as a result of those delays. If we can confirm that information, then we can consider what actions to undertake.
Yeah,
We're
GM
glad to
just
work
had
with you
EV
and your
news.
staff as we follow
Ford
along.
is running towards the high.
I look forward to working with you on this. Here's the bottom line. Ordinary folks who just showed up, put their deposits, they shouldn't have to bear the brunt and burden of these bad decisions made by bank executives.
Thanks, Senator Warnock. Senator Daines from Montana is recognized.
Mr. Chairman, thank you. The failure of Silicon Valley Bank, Signature Bank, and the general turmoil in the banking sector are the direct result of the failures of regulators, including the agencies we have before us today, Also, the executive team for these financial institutions and the inflationary environment sparked in no small part by the Biden administration's reckless spending. I remember having debates right here with the Banking Committee about these massive stimulus bills, that $1.9 trillion spending bill that even Lawrence Summers said was inflationary. On a purely partisan vote, it passed with Democrats supporting and Republicans opposing. But each of these groups, back to Silicon Valley Bank and Signature Bank, failed to prioritize properly clear and present risks of the inflationary environment, rising interest rates, what it did to bond values, instead opting to focus on climate change.
Yeah, I think it's Tesla,
equity,
but
and other
kind of
factors
slipping
that
back
did
to
not
VWAP, but
contribute in any
legitimately,
way the
it has
crisis
been
we have before
almost
us.
3 hours
I
here.
raised these issues of
We're at the
misaligned
opening candle
priorities with
and
Secretary
VWAP.
Yellen during a Finance Committee hearing back in June
I'm
of
about to do my
21,
second set of
when
curls.
she identified climate
So if you would like to
change,
join me,
non-bank
15
financial intermediation,
15 minutes ahead,
and
feel free.
Treasury market resilience as the key priorities for FSOC. Now, we're facing a situation where responsible banks in my home state of Montana and elsewhere will be on the hook for providing tens of billions of dollars and potentially more to bail out irresponsible coastal banks for risk-taking that regulators failed to act upon despite first noticing as far back as 2019. Turning to my question, Vice Chair Barr, you state in your testimony that your review is, quote, focusing on whether the Federal Reserve supervision was appropriate for the rapid growth and vulnerabilities of the bank, end quote. The question is, if you find as part of your review that certain individuals were clearly negligent in the performance of their duties, are you willing to recommend they be fired?
Senator, I don't want to prejudge in any way the review. I'm going to get that evidence back. I'm going to understand it fully. And
I said, but if part of your review you find they're negligent, would you recommend they be fired?
It's hard for me to answer in the abstract, sir. I believe we'll take appropriate action with respect to the supervisory structure as a whole. Whether with respect
are you willing to, is termination one of the options?
I don't know.
That's an easy question. I just said an option. I'm going to say if you exercise, is that an option? Could somebody be fired for this?
I would have to understand the basis in our human resources law.
The bank executives lost their jobs, as should some of these regulators.
Yeah.
Shouldn't that be the case if they're asleep at the wheel?
Senator, I want to be very careful. There are laws and procedures with respect to how you treat employees.
You can make a recommendation to HR, and they can tell you whether or not that's allowed or not. I've been in the corporate world for most of my career. I've worked at HR, as is true within the federal government. You can make a recommendation if somebody is asleep at the wheel and negligent.
I would be happy to follow up with you, Senator. I promise we'll take appropriate action based on the review, but I don't have a definitive answer for you at this moment.
I do find it ridiculous that you're unwilling to say that if people fail to perform the responsibilities, that you might recommend they be fired. Vice Chair Barr, did you visit the San Francisco Fed in October of last year?
October last year? What year? I mean, in 2022? I don't believe so.
You visit the bank last year?
Okay, well,
Wait, what year?
The San Francisco Fed published a supervision and brief memo stating the top priorities that you outlined with that visit aligned with their top priorities.
It may be that I did a virtual seminar for a range of supervisors, and so the San Francisco Fed folks were in attendance for that.
All right, SPY's dumping a little bit. It could be some of that regional activity, but I think it's just tech.
That came out
and then if oil cools down.
The San Francisco Fed
but unfortunately,
aligned with what was top
back
of mind
in the
for
range.
work
You
being done in the
top
12th
to
district.
bottom.
The first thing it says is financial
you
risks
move 2 points
from climate change. This is at a time back in October 22 when you saw the discount rate was always up to 3%. We were seeing those 3/4 point increases coming out of the Federal Reserve over and over, and they were communicating that's going to probably continue. And that was about the time that also the Richmond Fed in the 5th District, they had a little different view in terms of prioritizing
Tesla
risks.
keeps dumping.
And they thought perhaps
I think that's leading some of tech.
Environment might
now
be
CLX,
the
watch if
highest
defensives
risk
give up.
priority to look at. Versus San Francisco Fed says it's about climate change was their #1 priority listed, stacked ranked of the 3 that they placed out. It's clear in hindsight that the Richmond Fed
Amazon's about
was
to hit a new
focused
low.
on the clear and present risks of rising interest rates, while the San Francisco Fed was not. My question is, since you were confirmed in July, what percentage of your time have you spent focusing on climate policy and financial inclusion versus how the Federal Reserve's monetary policy might impact banks like Silicon Valley Bank?
Be as brief as you can in that answer. Thank you.
This guy's
Senator,
important because
I've been
he's
focused
the
on risk
chair
throughout
of,
the system,
vice
both
chair of
short-term and
supervision
long-term
at the
risks,
Fed.
and interest rate risk is a bread
So,
and
like,
butter issue
he
in
should,
banking. It's what
Michael
our
Barr, the guy
supervisors do all the
speaking,
time.
low-key should have been the guy knowing about all of this.
And by the way,
He is the one supervising all of the banks.
Thank you, Mr. Chairman, and thank you to our witnesses for being here today. You know, today's hearing is about trust. Whose trust has been broken, who broke that trust, and how all of us work together to reaffirm and rebuild that trust. Trust is a key principle that the modern banking system is built on. Families trust that their hard-earned savings are safe in the U.S. banking system. Congress entrusts our federal banking regulators with the
Jeff
power to
Bezos.
supervise,
God bless you.
regulate, and examine banks. We trust you to be the cops on the beat and have given you the tools to do that job. The failure of Silicon Valley Bank on the Federal Reserve's watch very clearly calls into question whether or not some of that trust was misplaced. Make no mistake, the lion's share of the blame is on incompetent bank executives. And it's outrageous that these people took bonuses and sold stock in the days leading up to the bank's failure. We should hold these executives accountable for the fullest extent of the law and claw back those bonuses and stock sales. I'm co-sponsoring a bill to do just that. But as I laid out in a letter to you, Vice Chair Barr, that, by the way, was signed by 11 other senators spanning the ideological spectrum, it's gravely concerning that retail participants, literally just regular everyday people, were able to figure out that something was wrong with Silicon Valley Bank before your regulators took appropriate action. Now, these folks don't have access to non-public information like the bank examiners do, but when people on Reddit and Twitter can spot bank mismanagement before the regulators, something is terribly wrong. So my questions today are for you, Vice Chair Barr. I have lots of questions, so I'd like concise answers, and we'll follow up in writing. You were sworn in as Vice Chair for Supervision on July 19th, 2022. Your testimony indicates that due to ongoing review, you'll focus on what you know. So let's start there. The Fed knew of problems at the bank dating back to 2019. Were you personally made aware of major deficiencies at Silicon Valley Bank prior to the collapse? And if so, which ones and when were you notified?
Thank you, Senator. The staff made a presentation.
God bless you,
to
Glenn.
The Board of Governors.
Strong and resilient.
In the middle
Amen.
of February of this year, that was focused on interest rate risk broadly in the banking system and how banks and managers and supervisors were addressing those risks. And as part of that presentation, the staff highlighted the interest rate risk that was present at Silicon Valley Bank and indicated that they were in the middle of a further review and expected to be basically coming back to the bank shortly with further information about their status. I believe that is the first time that I was told about interest rate risk at Silicon Valley Bank.
So you were first notified shortly after folks on your staff learned about these deficiencies?
Senator, the supervisors began highlighting these deficiencies at the firm in interest rate risk management and liquidity risk management in a serious way in November of 2021, as far as I know, so about a little bit more than a year prior to that. They intensified that supervisory review as part of its full scope exam in the summer of 2022 when the firm was downgraded for deficiencies in its risk management practices. And they brought those issues again, according to the record, to the CFO of the firm in October and issued additional findings in November of 2022. So that, as far as we know from the current supervisory record, is the picture.
And that's when you were first notified in October and November of 2022?
No, Senator. To the best of my knowledge, I first learned about the issues at Silicon Valley Bank with respect to interest rate risk in mid-February of 2023. So several weeks before the bank failed, staff made a presentation to the board about interest rate risk broadly and with a particular a highlight, if you will, on Silicon Valley Bank, and indicated that they were following up with the bank with further measures.
So your testimony says that asset size is not necessarily an indicator of complexity, and I agree, which is why Section 401 of S 2155 gives the Fed explicit authority to impose the regulations and enhanced supervision normally reserved for the largest institutions. And you can do that on any bank between 100 and 250 billion in assets, like SVB. The Fed is given this authority to prevent or mitigate risks to the financial stability of the U.S. We both agree that this is existing authority that the Fed has had since the enactment of S 2155 in 2018, correct?
Yes, the Fed has broad authority to change the rules it uses for different approaches to supervision of firms. Under the rules that were put in place in 2019, the firm was bucketed by a set of categories. I think that it is important to revisit those, as I have been doing since arriving at the Federal Reserve in July.
So given the documented issues that...
You're over time. We'll wrap up if you can. One more
This will be my last question. Thank you, Mr. Chairman. So given the documented issues that your supervisors found with SVB that we just kind of went over, did the Fed ever consider using its existing Section 401 authority before the failure to more aggressively regulate the bank?
Based on the current supervisory record, it looked like the escalations that had occurred were in the format of MRAs and matters requiring attention and matters requiring immediate attention. And the supervisors also put in place what's called a 4M agreement, which is a limitation on the firm's ability to engage in merger transactions with financial companies.
Thank you, Senator. Senator Tillis.
Thank you, Mr. Chair. Thank you all for being here. I want to start maybe with a question that I think Vice Chair Barr, you answered Senator Warren, saying that you thought banks over $100 billion should have additional prudential requirements. Did I hear that correctly?
I think it's important for us to strengthen capital and liquidity requirements for large banks, really up the spectrum.
Is there any of the tools, just going back, Mr. Chair, I'd like, without objection, to submit this to the record. This is the regulatory regimen that applies to banks of certain categories. And so I'm curious. I always worry about when we create an arbitrary asset limit for doing something, because it was the activities of Silicon Valley that got them in trouble. And so I just want to ask briefly. I got a lot of questions, and I will get them done on time. You've mentioned a couple of times, Vice Chair Barr, that the 2019, I guess, implementation of Senate Bill 2155, I'm inferring that, bucketed Silicon Valley.
Yeah, he's definitely worried about his job, but he's also being nice to the predecessors. Fed Quarles was the guy who managed it before him, so technically he would be a liability too. It's a weird situation.
Or supervisory functions could not occur?
Senator, we're bound by the rules we put out. So if we want a new framework, we need to change.
2019, different administration, predates your tenure. Are you saying that the promulgation and the implementation of 2155 took certain supervisory or regulatory regimens off the table for Silicon Valley Bank?
The Federal Reserve's implementation in 2019 set basically the standard for how that firm would apply.
Yep.
I think that regulators, supervisors do have judgment,
that's
and
my
they
point.
can put in place
That's
mitigating
my point,
matters.
because when I hear bucketing, I think about ring fencing, and I wonder if that meant that a supervisor, that in my opinion, if you take a look at the matters requiring immediate attention and immediate attention, do you know yet, I know we'll get the report in May, but do you know yet how many of those MRAs were followed by an MRI? In other words, the 6 that were issued over the course of a year and a half or 2 years, how many of them was an escalation of the matter requiring attention to immediate attention, if any? And if you don't know that, you can submit it, actually, if you will, just submit it for the record.
I blame the San Francisco Fed.
We've got a CEO of Silicon Valley Bank.
And then that immediate action notice with no fines.
Of the San
but we'll find out in a
Federal
month.
Reserve, who got summarily terminated on the day of the bank's collapse. In your review, will we also have insight into California's role in regulating this bank, or will this be purely federal jurisdiction?
We're looking only at
Bro,
the
26
Federal
million
Reserve.
in volume by hour
Initiating its
3.
own review
Well, I think
with
that's
Another
gonna be
day
very
like
helpful,
yesterday.
Because in my opinion,
Tesla's
I
breaking
agree,
down.
With former Fed Torillo, that he sees this as a regulatory lapse. Torillo was never complimentary of Senate Bill 2155. He was implementing Dodd-Frank when we were doing it. He was hammering it. He's made the statement, and Mr. Chair, I'd also like to submit for the record an article interview with Mr. Torillo.
Is that their audio cutting out, or is that mine?
That he specifically says in here, 2155 is likely or impossible to be a root cause of the problem. I'm paraphrasing. He was saying it looks like a regulatory and supervisory lapse. And I think we're going to find that lapse is not only with the Fed, but more likely even the supervision that the state of California
Okay, it's their feet.
was involved in.
SIVBQ is real. Yeah, that's how they're giving it a trading price.
I'm also kind of curious in the report, are we going to see any movement? And I'm not a conspiracy theorist, but there is one question of, did we have a level of comfort with this bank among some of the supervisors? Do we know or have any insight over the past few years if anybody who had worked for the Fed works for this bank? We know that the CEO was on the Fed board, but are on a board at the Fed.
Senator, just with respect to the Class A directors that you mentioned, Class A directors are prohibited from participating in any way in supervision.
Yeah. Oh, no, I get that. But it's just people in proximity, maybe people call them balls and strikes. The supervisors didn't get that quite right. But I think that there are some people who, and I want to find the root cause of the problem. And I think that you all will find a lot of information when you issue your report. I don't think that we're doing the banking industry any service going forward if we talk about now we just got to rein in the small banks. We've got to increase by default, regardless of the activities of the bank. We've got to increase by default their prudential requirements and with your holistic review, capital requirements, a number of other things. When you have a run on a bank like you did with Silicon Valley, could any bank possibly have enough to cover the run? Any bank.
Senator, the particular bank in question is quite unique in its structure, its liability approach, and its interest rate risk management. I can just speak to that particular bank. That particular bank had.
If you look at their bank, if you looked at their internal liquidity stress testing, if you took a look at their contracts on an interest rate exposure, this does not take a highly sophisticated person to understand the risk, and it damn sure had to be known months before the chickens came home to roost. And I wish that we could just focus on that problem and not use the red herring of some lapse in regulatory oversight that was the root cause of this bank collapse. It simply was not, and I'd love to find anybody to prove it wrong. I don't care how you feel about regulatory tailoring, but use a valid argument to fight against it. Do not use Silicon Valley Bank as an example, not suggesting that you have. But there are many people that sit up here
Pepsi unveils a new logo
at the expense of looking at how
and
we can
visual
prevent this in the
identity.
future.
That was 2 minutes
And I do
ago.
have questions for the record that I'll submit. Thank you all.
Thank you, Senator Tillis. Thanks all of the three of you for your testimony, your public service. I look forward to the reviews on these bank failures, and thank you for helping start that process. It's interesting. Many of my Republican colleagues are now so eager for bank regulators to crack down on banks for taking on too many risks. I hope they remember that when it comes time to empower regulators and strengthen guardrails, including protecting the independent funding of financial regulators. The events of last month have shown why we need independent regulators, funding, and stability for all of our financial watchdogs. But now, as the Supreme Court considers whether the CFPB's independent funding is constitutional, these independent watchdogs' ability to keep our financial system stable faces an existential threat. U.S. financial regulators, as we know, are independently funded so they can quickly respond when crises happen. On this and every issue, I'll continue to fight to protect American workers from Wall Street arrogance and greed. Thank you for joining us. The meeting's adjourned.
Meeting adjourned. Wow. So, pretty insightful, however, nothing new. And I will tell you this time, this is probably the first time since all of this stuff started happening where you didn't get a violent move on the bank stocks. So, I mean, that is probably my biggest takeaway out of all of this is, like, go look at XLF, go look at KRE, there wasn't even a single news pop or a statement pop, you know what I'm saying? Like, there was zero really new information, and it seems like May 1st, maybe we'll get a little bit more as it relates to that report, but a lot of it, I mean, there were some good questions. Again, I think the San Francisco Fed should probably get asked more questions. They were asking them about the Dodd-Frank. They talked about the thing, because the main thing coming into this morning that we wanted to hear if they had any new laws, right? We wanted to hear from those three people, FDIC, Treasury, and Vice Chair of Supervision. We wanted to hear about do they have any plans moving forward, or was there any clues as to how they would regulate banks in the future based off of this? But it seems like they're all just saying it was a failure. We know it was bad. We know this. We know that, but we don't know this. And I don't know the answer to that question until we complete our review on May 1st. So very interesting. Honestly, I think it was a good listen. Kind of funny at sometimes, but and then kind of shocking. I did not know that the SVB CEO was on the board of the San Francisco Fed. That is, like, ridiculous. That's what I learned today. Some of you were already aware of that, so even better. But oh my goodness! And then ESG, a lot of the environment people called that out. That's what I'm saying. That's what the one guy. I don't know if it was Mr. Tester. ON popping. Oh yeah, ON huge rip. Great call on that, Graham. Ah shit, my news calendar messed up. ON big pop, and you have Micron earnings after the bell. I don't see anything coming across yet. I see Infineon, but I don't know if that's the same thing. So own semiconductor, watch Micron, but that's a big red to green. I'm not seeing any news come by. Micron's even starting to move here too. So keep a lookout for ON. Check any headlines. Check Twitter. That's a big pop. Again, only update is Infineon. I don't know if they're similar. Let's see. Inside was it down 2%? That's 2% on one candle. Yeah, there's nothing. If anything, there's going to be Micron earnings. Then Infineon, Infineon Technologies gives their earnings. So if they're related, that would be the only thing that makes sense. Baba's popping up here too. ON's solid relationship with Biden and USA. So be on the lookout for that. No headlines. That's 3% in 4 minutes. That has to be news. I'm watching Micron and then watching the other chip makers. It seems like I want to say this is related to Infineon, but I don't know what is in Infineon. Let me check. Infineon. Infineon. What is they? Yeah, they do semiconductors. So pretty much a European semiconductor company just came out with guidance and revenue numbers, and it looks like it was good. That's the only thing I could think that's related. NVS is moving up here now. Novartis, all the chip maker, I think they're all moving on that. It's Infineon. That's the only thing that makes sense in the last 4 minutes. Infineon upgraded based on dynamics, core automotive and industrial segments, and then they raised their guidance. You think revenue guidance for them? Let's see. I still don't see it coming in there. All I see is Infineon with the guidance. Yeah, so Infineon, they see second quarter revenue above $4 billion. They initially saw $3 billion. They see full year revenue 15.5 plus or minus $500 million, and then they expecting higher margins. But that's weird. ON was a fat pop on that. If Infini OTC, what is that? They're ADR, so it's European. IFNNY. Oh, Infineon Tech. I think this is it. It's weird, though. Again, ON pop way bigger. Is NQ about to dump? I think we might do nothing. Volume, this feels a lot like yesterday. Welcome to the gulag, my friend. Volume is like half as much as what we were getting the last 2 or 3 weeks. You're staying within 2-point range. You're like hugging on to the levels. The bonds are tweaking out. This is very reminiscent of yesterday. Is any part of you confused how the market shrugged off the banking stuff overnight? Not only are they laughing at the volatility cracks are showing. No, I'm not. I mean, this is like, I guess maybe I'm just used to it. Maybe I'm jaded. But that's what happens. Again, and don't forget, like, there is fatigue. You got to realize we have been reacting to this now for about 3 weeks. So in the last 3 weeks, the only good, again, no news is good news, essentially. But like I said on the watch list, like, dude, there's no question about it. The bond market and what the moves in the bond market, they don't happen like that if something wasn't bad. Does that make sense? So like if there was no stress in the market, you wouldn't watch the bond yields fluctuate back and forth day by day, 25 to 50 basis points. You wouldn't watch the 2-year yield without the Fed saying anything move in a velocity that's higher than even COVID when we had emergency rate cuts. So it's there's stress, and I would be watching that, but you better have patience is what I'll tell you. The bank situation, even what we got from that speech right now, was what did they do? They're saying we're not going to have a review till May. That's a whole nother 4 weeks. So, it's going to be a game of burning time, and until there's like an immediate update, the market will do its thing. But I think if you watch the bonds, you're good to go. So, like, we know the risk is apparent. However, this is what I was saying from a week or two ago. Like, even right after Powell, I said just get ready because every trade is going to come with pain. Because the uncertainty is going to be very simple. When there's no news, you are going to go up. And then the next day, the next week, the next month, the same set of bad news or what's no longer good, or when you finally do get an update, that will have the ability to go both ways. Pretty much expect a lot of things to not make sense. And why I say that is simply because of not only the guidance given by Powell, but now the bond market is screaming that there is stress, and that's what I could boil it down to. So I don't have to, for bulls and bears alike, the people who want to grow their food and buy gold, it's up to you. But this is a simple fact, and you don't need to be dramatic about it. However, you got to be very ignorant to overlook it. It's very simple. The bond market is showing that the market has stress. That's all it is. There is a very unique stress, but the fact of the matter is the cortisol levels of the market are rising exponentially. You don't really see this, and anytime you have watched bonds go up or down, it's not just about bond yields shooting down, it's not just about the Fed, but anytime the bond yields all across the curve go back and forth and back and forth and back and forth, that is a lot of stress. So whatever the equities are doing, that's one level. You're going to watch prices go back and forth, and I hope you have the patience for it, but the stress is there. Fuck the VIX. You don't need to look at the VIX. You don't need to look at anything else. The point is, bond yields aren't supposed to move like that, and when they do, it is during times of high stress and high uncertainty. So it's very difficult. But don't expect anything to make sense in the short term. Is maybe the simple way I could have answered your question, but I hope I could give you some more insight beyond that. All world stock markets eating premiums. That's on options. And I mean, people go to options and volatility. I mean, you've even seen it. I've taken losses on shares. The only benefit is that they'll come back, but it's taken 3 months of holding for a lot of these plays to come back. So it's a fucked up dynamic. The point is, I mean, welcome to the gulag. I mean, that's all. Like, what we're dealing with now is everything got accelerated. You know, whatever we were dealing with in the beginning of the year was one thing, but now following, you know, this banking thing and all of that stepping in, it's just accelerating at it. You know, all of the hike, cut, everything is it's just gotten nuttier. So I have tinfoil for you. It's not really tinfoil. They were talking about this on Bloomberg, and then even Zero Hedge made an article on it. But I got tin for you if you would like it. If you would like, somebody even brought this up earlier. Can we get 200 likes? 200 likes for some tin? I got tinfoil on the United States dollar. Oh, I don't know. Is that worth 200 likes? Actually, 100. I only need 100 likes, man. I think that's it. I don't know if that's worth it to you. I don't know if you're into that. I don't know. ON is still going. Again, I think we're coming to the conclusion that that's based off of Infineon's guidance. Come on. Shit popping a bit. Don't do me like that. It's good tin. Oh, yeah, they want the tin. They said, now you speaking my language. All right, you ready? Well, no, this has nothing to, it's not what you're typical hearing, and sadly, this may be the first time I actually believe it, but not to the point that you need to go and buy fucking gold. Maybe, but it's not. I think gold's a lot better than any other time we've spoken about it. But pretty much, the dollar is gonna get clapped by the banking situation. Pretty much, you got to realize that usually the dollar would be going up right now. If there was stress, and especially after what we've seen in the high interest rates, the dollar should be going up. But right now it's going down, and really the tinfoil is that if we did get a banking failure, it would break out an extraordinary level of weakness on the dollar. Somebody said it in the chat earlier. Essentially, it would bring back inflation, or it could fuck up inflation down the road. But yeah, it's because of not only because of the swap lines. You just got to think about it. Your full faith in credit of U.S. banks is going to get hit on the confidence side. And then now on the supply side, whether it's swap lines or everything else, it's like even the balance sheet, if we had a real banking collapse, right? Let's say like another bank goes and we have another problem, what happens? How do we get out of a banking crisis? What fucking solution do you think they're going to come up with? Humor me. What do you think they're going to do? It's not rocket science. You've already seen a sample of it for now. Yeah, they're going to print. Sadly. And now is just not really the time to print, and then that would now create a massive amount of dollar weakness. Unless they go to war. Yeah, good point. But till then, and then ON is breaking out. BABA is up 14%. Absolutely rocketing. So yeah, but sadly is like if this situation gets out of hand, this would it would lead to more inflation, and it would not be the inflation where prices go up and the dollar stays strong. It would be inflation with again more QE. It would probably just be full on responding to deflation, but it's a scary concept, but that's only in like total, like full-fledged collapse of all the banks. So there's your tinfoil of the day. Shout out to all my people who own gold. I'm sure you like that one. What's the Fed bar? Nothing. And I'm telling you, that was very unique. ON is running. So we got it early. I didn't make a play on that. We kind of connected the dots to figure out the news on that. But, I mean, do what you need to on there. Warren urges CMS to finalize Medicare rates opposed by insurance. But that's the thing about this speech. Like, people were looking for signals today. I wasn't the only one. People were looking for signals on laws, on potential legislation, and anything that could have arisen from this. But go look at regionals, go look at XLF, and you'll notice that there wasn't even a news pop. So during that whole speech, Not one statement, not one answer to any question from Michael Barr, the head of the FDIC, or the Treasury Undersecretary. Not one of those caused a pop or drop, which is quite phenomenal if you think about it. But we did bring that up here too. First Citizens is totally skewing regional bank index. So keep that one in mind as well. ON keeps going. Micron's even reacting. I'd watch all the chip makers. Again, pretty much positive chip news on an overseas chip company. So you will buy gold? Maybe, but again, I give an olive branch to the gold people because it's the same thing with bonds right now. And now you're 1 month away from the first pause, which makes you 30 to 90 days, 30 to 120 days from the first cut. But maybe we'll leave that up to Powell and if you fight the Fed or not. But I give an olive branch to gold. I like gold way better than any other point in the last 3 years. I like it more in the last 3 weeks. In the last 3 weeks, I am more favorable towards gold than I have been in the last 3 to 5 years. Or at least since they've started raising rates more or less. It's not time. No. It's not time to pile into TLT. That's why I'm very, I wouldn't want to say scared, but I'm definitely worried about bonds because it's going to be a shit show. What I'm expecting is the curve is going to uninvert a little bit. Then it's going to violently swing back to inversion, then violently uninvert, and then you're going to play a game of back and forth after the third, pretty much after the third inversion, like back and forth swings, then we're going to then you buy TLT. But right now it's about to be a shit show. This is what I was saying on the watch list yesterday. The bond market is doing shit that just doesn't happen. But it doesn't, the way people are positioning in bonds, the way the Fed is signaling it, all of it. I mean, it's not going to be it's not going to be an easy ride. So I think you're going to get bonds are going to get blown out one more time on the downside before they pop up, and then you get the buy. Does that make sense? Or we may even see it 2 more times. And what I'm talking about is the 2s and 10s. This is all we're talking about. So just like when the curve, this is inversion, and then when it bounces up, this is steepening. This is uninversion. So what we notice, this was the steepest uninversion since 2008. So what I think is that I think the curve will invert again. It still is inverted. It'll get more violent, then it'll uninvert again, and then after that second time, coming into the third time, then maybe bonds, the stress levels will be high enough where we just know that's it. You run it up, but not. I'm just get ready though. It's again. If I could advise you, none of it's a recommendation, but in my goggles that I have on is I'm putting on goggles in preparation for the shit show. Everyone's waiting. I know they're not. Go listen to Jeff Gunlock yesterday. Go look at the bonds. The bonds were a massive amount of shorts ahead of this. Shorts are moving around now. This is what I was saying earlier. The problem with the bond market is everybody and their mother is swinging for the fences. Everybody is trying to front run the Fed, and you have so many signals and events. And then there's the fear element that you have people who are either saying, nope, short this shit, don't fight the Fed, and they're going all in on that play, or you have people saying, nope, pivot is right around the corner, this is a problem, I'm going all in. So, and and then now you throw the fear factor on top of it. This is what is leading to these swings. So, it's getting, it's heated up, but we still got, at least 30 to 45 more days of more preheating in the oven. And then we go from there. TLT could go under 9. I think anything can happen. And I really, and I hope you guys all get under the impression that nothing needs to make sense. And why I'm saying that is just to remove any potential bias, because you don't want to be put into a box thinking this can't happen or this has to happen, because right now, I mean, there's a lot of emotions in the market. There's a lot of unknown, and clearly, with the banking system sound and resilient, all jokes aside, every time we say the banking system is sound and resilient, do you want me to give you the real answer of what that means? It's very simple. It means we are buying time. So that's all. And then that's why I'm saying is just get ready. But what they're doing is buying time. Every single thing that they've done has been to buy time. Weekend, receivership, bailout, extended loan facility. It's all to buy time right now, because it's either you say you have what's going on with it, otherwise you need time. Again, they're even telling you today it is the consensus that we will not get a full report of this at least for another month. A full month from, it's not even it's end of March now, but we won't hear any full report until May 1st. So it's going to be a wild one, and that's where it all comes down to. So just get ready. But that's why I'm saying it's going to be a shit show. It's going to go back and forth, and, fear will come from nowhere. But at the same time, all it takes is 2 days of no bad news, and motherfuckers will forget about everything until the next event. So in that environment, and like I'm saying, with the bonds in the background just going back and forth, I mean, there's clearly something brewing, but the timing of it now is where we got to be prepared. So yalla. What if those withdrawing were actually foreign governments or crypto companies that caused it? No. Quite frankly, it was Peter Thiel. To be honest with you. It was Peter Thiel, and then like 2 or 3 offshoots from Peter. That's it. It started with Peter. If Peter pulls out 20 to 50 million, then the next guy pulls out 20 to 50 million. It was big money, and it was San Francisco money. That's why, again, even based on kind of what all the congressmen were saying, I mean, this was a San Francisco shit. Like, this was coastal banking. This wasn't, I mean, do you want me to get you guys a little bit more pissed off if you don't like the situation already? I don't think y'all, I don't know if y'all feel me on this. Let's see. Where is it? Oh, no, it's not FCNA. It's first, excuse me, I'm confused. It's FRC. But, like, there's a reason why they're buying time for FRC. This is all coastal. This is all San Francisco. This is all the tech. This is tech money. And then it just connected too many ways. But First Republic is San Francisco as well, too. Again, First Citizens, they had some exposure to San Francisco, but they are primarily it's like North Carolina, Virginia, West Virginia, Georgia, and Florida. But there's a reason why they're trying to keep FRC alive and literally willing to expand programs for another one. And then Signature was just probably tied to Silvergate and crypto. That was just the dark hole there. Didn't they say it was 10 people with a total of 128? How is it Thiel if he only yanked 50? I think Peter Thiel may have gotten more than 50. I don't know the full amount, but the prevailing logic and even what they said in that congressional thing. OCI play. Oh no, that's urban asset sales. I thought it said Uber. But the prevailing notion is it was just a couple of people, and then a lot of, again, Peter Thiel and then all his associated companies, and then whoever else was tied to him, they all just pulled out in 24 hours. Yeah, FRC is pretty much SVB, but smaller, or at least very. I wouldn't say because First Republic, they give out car loans and house loans. They do a little bit more than SVB. I would say they're more consumer based, but they cater to a rich clientele, but it's not the same sort of, Mark Zuckerberg lizards, more or less. But that's how I would categorize it. But it's a very similar base, and quite frankly, chances are if you had a bank account at SVB, you probably had a bank account at First Republic if you're in San Francisco, or you're in tech, Silicon Valley. I wonder if they took short positions. Is that legal? No. If they did, if you cause, even trying to incite a bank run is illegal. But if you shorted it and then tried to cause a bank run, like I would assume you're double fucked. But here's the cherry on top. What is clearly the issue at hand? Again, that sucks because I don't want it to be that's the issue, but I think this is a glaring problem, and sadly, nobody will get in trouble for it. But do you not see the problem? It's not the media. The media is usually the problem, but no. Like, do you not get it? It's not the speed of information. Where, the question is, somebody's asking, is it illegal if they short the bank and cause a bank run? Is it illegal? Like, what's the problem right now? The problem is they're not enforcing shit fairly, nor really going after some of this moral hazard. That's it. The Twitch chat was lighting it up. I was laughing out loud because the problem is that it's just like straight up. They said, "Oh, you have an immediate action, and if you don't do it, we're gonna bail you out." What? Like it makes no sense. But that's a big part of the problem here. Again, that's why they were grilling him. They're just saying, hey, one, even if you did a stress test, it wouldn't have accounted for it. You have members on the Fed as the CEO of the company. You warned them for 2 years, and you didn't even try to threaten them, nor you can't even tell me off top of your head what your first line of action against them would have been. So that's the thing there. So we're talking about what's illegal or not, but sadly, the problem here is that the regulators aren't even it's like, what are they really going after right now? So even if something was illegal, it would probably take months or years on the big level to ever get any whiff of it, or to even see if somebody is held responsible for it, sadly. It goes all the way back to FTX. I will bet all my money on that. I just don't have enough information to go for it. It's simple. Again, the first opening statement they said it. FTX, Sam Bankman had multiple bank accounts with SVB. And again, Signature Bank, that's a crypto black hole tied to Silvergate. It's not like, none of this is a coincidence. That, again, like I'm telling you, this is a coastal tech banking problem. Like, it's not like, where do you think it came from? It's just, it all came from FTX, and then the slowdown in tech due to rates going up. That's what the main focus is, the rates. But at the end of the day, I do think that, to think that swamp monster of Sam Bankman and all of the dirt underneath there, like, no, it's definitely there. 5-year notes draw 3.66, 665 versus 3.67. So 5-year notes actually caught a bid today. Again, 2-year bond was abysmal. That was yesterday. Yeah, prosecutor rated France. That was this morning. EU clears Google's photo math takeover, sees no antitrust issues. The difference is that SI and Signature had the funds to make depositors whole. SVB did not. Well, that's why I'm thinking this is all crypto related. It's like they're similar or not, but Signature and SI are crypto, and then it all got tied into here. But then again, I could go back to my original theory from FTX. Like we said, how many other banks loaned out money on borderline shitty collateral. And ironically enough, what is the problem here with the bonds? The collateral, even if it's government grade and liquid, it's no longer worth what it was a year or two ago. So, but I do think they are, I think there's a loose connection, but like we're saying, we probably won't know that answer for a long time. AMC pop in. Oh, Note is up? I forgot. Note had earnings, huh? AMC. I think GME was low today. Maybe you should go back and remember Billy Huang. Billy Huang, I mean, sadly, all of this just makes Billy Huang look that much worse because motherfucker did all of that when rates were at 0. And he didn't even do it on collateral. That was like sketchy. He just borrowed against he just took 10 out. He did a shotgun loan. So this is a legal loan practice where pretty much, again, shotgun loans are a little different, or compared to what Billy Huang did, but he just took out $100 million and before one loan finalized, took it out 5 different times and then bet it all on fucking Paramount or whatever. Baba is splitting up into 6 different companies that are going to IPO. It's very good news for them. Not only is it going to create more like shareholder value, but it's splitting up their companies, and by splitting up their companies, it'll make them less susceptible to get clapped by Mr. Xi Jinping. Pretty much 6 small baby Babas are better than what's it called? They're better than one giant Baba. How will that work? They're going to split up. Baba will become worth, probably 1/6, and then you'll get 5 other companies. You'll get 5 baby Babas. I think, yeah, I don't know when they're all going to do it, but they said it'll be a time frame. But the idea would be to split them up and then one at a time either IPO them or combine them or do something. If you own Baba, you will own a portion of the baby Babas. Yes. That's why people, it's like splitting this. It's a spinoff. It's like a split, but instead of getting more shares, you're going to get 5 small different companies. But they probably won't all hit at the same time. So today's just day 1 of the news. We're probably going to get more information, but that headline alone is what has it going up. No, Bob is still killing it. Josh, did you know baby Babas say Baba? That's pretty funny. I'm sure they do. Never really thought about that, sorry. Coin came back down. So still the same number of shares? I don't know. I'd assume it would be less, but then there'd be more shares of other companies. Same relative value. So pretty much if the company, whatever Baba is worth now, $265 billion, it's going to split up into 5-6 companies worth $40 billion practically. So Baba will become worth $40 billion, and then the other ones, and then again, maybe Baba's worth more and the other ones are way, way smaller because $40 billion's not small and Baba's core business is gigantic. All right, we're starting to slip here a little bit. Positive on no. Yeah, I didn't know. I forgot they had earnings, but I didn't know what they did. But I'm down with some AI hype, Could FRC go extremely lower? Yes, it can. I think the banking crisis is calming down for a little bit, but we're one headline away. So we feel a little bit better than a couple of days ago, and people are getting really, really optimistic, and they want to, but at the end of the day, just take a look where you're at. So the risk is not gone away. Just simple as that. I mean, what I can tell you, if you want to trade the banks, even though I held FRC for 2 days, just intraday is probably your best bet. But holding anything overnight, getting that after-hour news, that's always going to be your risk. And bonds are coming up. Have you discussed Saudis selling oil to China for yuan? Not really. We haven't, but even with that little tin I gave you earlier, quite frankly, if you think the dollar is at risk because of that, I would be watching the banking situation simply because that will destroy the dollar more than any of that shit ever could. How about voting rights? All the same? I mean, it's very tempting to make a joke that you can't vote in China, but I'm assuming it should be the same. I'm not too sure. Yeah, FRC, even the volume today is just super low. 29 million, and we're like, what, almost at, we are at 10. Damn. Yeah, FRC is either $1 or $52. I agree with that wholeheartedly. BRICS will destroy the dollar. I disagree. I think banks will destroy the dollar. So maybe our conclusion could be the same, but how it would get there, I don't give a shit about Putin or Xi Jinping. I think sadly, big CEOs of these big banks could do more to destroy the dollar and banking system than those two guys could ever could. Again, I mean, you literally had Putin shut down trade and cause all of this stuff over the last 2 years, but it's not it's like you're bigger, pretty much like, what do they say? Like, I'd be like, Lord, protect me from my friends. I could take care of my enemies. You have more of a risk of a domestic, the banks are in your country could probably hurt you more than an outside adversary. Yes, we will destroy our own dollar. It's not going to be somebody else. And that's like the risk. That's the risk. Not everybody, but that's what's coming out pretty much the last couple of days. That's why even today, with like what we're talking about, is that like even if the banking situation, if we're getting that quote unquote week of healing, and even if the banking situation calms down, the next thing people are looking at is inflation and rates. And that's why people are talking about this and they're saying, well, shit, if we are looking at inflation and everything else now, and yeah, okay, maybe banks calm down for a little bit, but if we do get another banking problem, and they're like, you have to really ask yourself, how will they respond? You cannot respond to a banking crisis without hurting without creating more inflation, pretty much, and really now just going after the dollar's head, because this time around it's just too short of a gap between trillions and trillions of dollars and QE and all of that, or at least we'll find out. Bank of America, new low. You think the leftist leaders are going to kill the dollar due to bad international relations? Xi is a better diplomat. He's straight up commie. I mean, I understand that line of notion, and I see it on the other side too, with people, on both sides of the political aisle. But I'm telling you, it's the banks. If anybody is going to fuck up our dollar, it is going to be these CEOs, and clearly their level of moral hazard and level of enforcement is it's off the charts right now. And that, like, you have more of a risk of a big dog in America fucking it up than an outside adversary. Again, that's maybe my bias. I believe that we had this whole talk a couple of months ago, a week ago, or a couple weeks ago, and it's just like, the dollar is very powerful and the dollar is good, but it's not like, any other country, their currency cannot do what the dollar does. However, if we destroy our advantage through various methods, or again, another round of trying to save banks and destroying confidence and then printing more money, that might, and then now inflation is not under control from the first round, by my guy, it's going to be like the 70s, but probably worse. So we'll see. Again, I don't think that is the base case. So granted, everything I just said, that's not the base case. I'm just addressing what you guys are talking about. POTUS, under my economic plan, no one making less than $400,000 will pay a penny more. You know who will? Billionaires, massive stock buybacks who've gotten, well, whatever. Give us the report. Expedite the report. XLF in a few weeks. I mean, I think it could go up, but we just don't. I don't know the timing of this data and when it's going to come out here. So I think after 3.5 weeks of this, 3 weeks, there's a propensity for people who want the banks to go up, but just sadly, any relief is short-lived, and what feels like a lot of relief, just we're still in the gutter. I mean, again, these are regional banks. Even go look at XLF. Like, this isn't good. You see what I'm like? We're talking 2 days of bank relief, and we haven't seen that in 3 weeks. 2 days in a row has not occurred. The only time you had 2 days going up was right here, actually. And then the next day you got clobbered. And then the other time it was 2 days, you gave it up by the end of the day and barely went green. But, like, you take a look at where we're at. I mean, this isn't like people are like, you know what I'm saying? Like, people want to feel good, but it's not reflected in the price action. Does that make sense? It's like people saying, like, no, it's like, it's good, but they're not buying it. These are the people in the chat and your homie who talks about everything but is never really playing anything. You know what I'm saying? Because if we really felt good, why wouldn't these greedy bastards bring up XLF a quick 10%er right now and still have 10% of upside just to recover, and then have another 10% even higher just off of the rates being higher and actually nothing else going wrong. So I just, people aren't scooping it up. Like, and you saw what they did with FCNA, and you saw what they did with New York Bancorp. If there's a reason of real value, they're going to buy it up, and they're going to buy it up to all-time highs. So that's the only part that has me worried, is that the confidence that only lasts for 48, 72 hours, it's not being reflected in the price of these banks. Let alone even the price of bonds is just telling you, No, we are not being delayed. When we have the commitment of traders, that is now updated after the ION ION hack. And we're about to go to the lows again. A couple of regionals are dumping, specifically FRC. You are back to the 100-day moving average right now. So this is the 100-day. I think we closed out I closed out my Qs. So I closed out a lot of stuff. Like I said, the plan to go neutral is still in effect for me. And I'm really loving it here. So little by little, some stuff is moved up. Some stuff we're still unrealized down on, and then that's it. Oh, and then I took off the, what's it called? I took off the position page because I'm gonna keep it down until people stop asking me. Because I'm like, what's the point of having the positions up if everybody asks me over and over again? So I'll just give you an update if you guys want to ask questions now. Now I have a reason to answer them. What do I know about PYXS? I don't know shit. I've never heard of it. FRC gap. Oh, I'm glad I sold it. It went up a little bit and then it just dropped. No, I never had it on Twitch. Maybe I'll just put it up on Twitch. Twitch don't even, that's what I've noticed, but Twitch don't even ask me about any plays. Twitch just wants it bearish. Twitch don't even give a shit. Twitch is just like, it's all gonna die. Keep shorting. And I'm like, okay. I don't even think Twitch has ever asked me about a play. I don't think they have ever asked me and be like, yo, what's up with that? And then they've asked me about UNG just because they want to buy more and then they want to short more. They've only asked me about bearish plays. You're welcome. You're welcome. I love y'all. God bless you. Y'all were going off on Graham though. Y'all had a little mini mutiny against Graham early on. Y'all were just like clowning on Graham for just posting y'all plays and like posting y'all movers. I was like, damn. I was like, now you know how it feels, Graham. Now you know how it feels. Gold is popping. Gold is hitting the high. GLD. I think it was one person, two. No, it was two. Graham timed out one of them. They were just going back to back. I was like, damn, Graham. It's okay. It happens. Silver going up. No, I just sold the SQs. I took $2 a share. Yes, I do. Graham, what's up, baby? Oh, it's YouTube. What's Uncle doing? Uncle's working for you, man. Uncle, you maybe, it's like, I think you might have like 11 to 12 coming out soon. I don't know. It just depends. Just depends on timing. Uncle's debating on giving you a full album or just releasing it once a month for all of it. I don't know. There's a lot. There's a lot Uncle has for you. So we got to see. Again, there's been a lot going on. A lot going on. That 100 on Baba, that bounced back quick. It might, dude, it's up 15%. That's insane. Gold is going up. Gold was just literally breaking out right there. XLF is selling off. Coin is back to the low. Uncle is stacking. Uncle's just been going off. He didn't put too much, though, into the... I mean, he has some with it. Like, he has a couple of statements. Uncle's, dude, he said something. I don't want to... You'll have to get the line when it comes out. But Uncle was talking a little shit. But he's just still, like, he's just talking about moral hazard. He's just, like, he yells at me anytime. I showed Uncle the cash I got for the video when I was like... And then he got mad that I didn't take out more. And then he was like, how do you trust these banks? Do you not remember? He's like, when I was there, he started bringing up like 2018. He started going on. Then he started telling me about the 70s again. And then I had to sit there and listen to Uncle yell at me explaining the 1970s for about like 17 minutes. It was stressful. I was like, all right, man. And then he fell asleep halfway through. So I was like, thank God. Baba keeps going. Yash has been quiet these couple of years. Nah, Yash has been showing up every now and then, but I like it. I think the new era is just kind of just a more sassy Josh. I laugh so hard every time I say it. Because that's the only way. Because, like, Yash is aggressive. Like, the only way you could, like, kind of clap back a little bit and, like, it's like sass. That's all. It's like, it's not even full. Like, Yash will kill you, bro. Like, Yash is not even, Yash is not, like, a nice person to be around. Like, I don't even like Yash, bro. Like, I love him, like, because, Yash is definitely, he's a part of me. But I can't, like, you know what I'm saying? Like, if you could just you don't want Yash out there. Yash is a aggressive individual. I wonder what Josh's dreams are like. Oh, I tell you, Bro, I don't even know if I could share the dream with you. There was just too much like shit. I had a crazy dream, bro. I had a crazy dream, like, and then like it was with my girlfriend, and I told her I felt bad. I woke up and I even had to call my girlfriend, and I was like, hey, I'm sorry if I've ever been rude to you, because I had a dream that freaked me out, bro. It was like, I have some fucked up dreams, to be honest with you. I'm not gonna lie. So yeah, you don't want to know my dreams. They're crazy. I would tell you this dream, but it's like it was too crazy. I can't even share it without like getting banned 17 times. Real estate's good. We got a couple of deals that we're working on. I mean, LT's just fucking flipping houses left and right. I don't know what he's doing. I only have one project, and then I have a couple of long-term buys that I'm looking to. I found a cool deal now. I should be getting an update here at noon. I found a steal of a deal. And then I have another, I have a commercial project I'm helping somebody out. I'm actually syndicating it. So I'm just going to find them. I'm just going to give them my stamp of approval, find the property, set it up, and then just take equity. But then I found a deal where I think I'm going to put a decent amount of money behind it. But real estate's been good, but I'm still not like I'm not like overly bullish. I think how I feel towards the stock market is how I feel towards real estate. I think, you know, you have risks. You got a shit show. I mean, I do definitely appreciate hard assets more than not, but that's it. H-Band. I'm still in I added to EBS yesterday because they got PDUFA tomorrow. AMC Amazon takeover article? No. Looks like Amazon likes AMC distressed asset. Amazon considers buying distressed theater. Whoa, bro. Oh, there has to be the biggest rumor ever. Oh, did they halt it? Ah, fuck. I put in a market order. I'm down. Oh, man. That's terrifying. Oh, my gosh. Hold on. Let's see it. You have the rumor circling. It's halted. Whoa. Apple, again, you had Apple talking news of it yesterday. I don't see it on the wire. I think this is a Twitter rumor. So this is just all from Twitter right now. Yeah, it's Gasparino though. Hold on, this motherfucker. No, I'm gonna cancel the order. I'd be down to trade it though. It could be fun. I mean, you'll get the hype heads on it. But no. Gasper, it's a Twitter rumor for now. And then it's Gasparino, a motherfucker. You know how many times he said Amazon was gonna fucking have a stock split from his source? Nah, Gasparino, he's chill. Sometimes Gasparino hits it, but then it's like, I don't know. I've seen a lot of fucked up rumors out of him. Yeah, it's a Gasparino tweet. Intersect.news is the source. Jeff Bezos can use. Yeah, it's all saying what Jeff could do. Has ditched banners and top chiefs to explore acquisition plans for embattled thief. Wait, but it's saying that Jeff Bezos did it? Famously. Yeah, all I'm seeing is AMC halted. We'll see. We'll probably get a second report off of it. Ape is playable. Oh, shit. Maybe. An Ape, you even get the other thing. That one might be a little chiller. But I want to see if I could contact somebody at Amazon. Let's see who we could get. Because if they're saying somebody actually contacted somebody from Amazon's looking into it. I'm going to see if I could get a hold of somebody real quick. Where is it? Amazon Data Services. Okay, I messaged Director of Finance of Data. He's the only one who's online. Oh, there's what's it called? There's Ape right now. Got your pop. So Ape would be the only one that's actively trading. Ape is moving now. Again, that's a very interesting set. I said, sorry, is there a rumor going on looking to acquire AMC? I said, can you weigh in on this? He said, I cannot. Wow. So, okay, hold on. It's a director of finance, but he said he cannot weigh in on it. That's it. He's declining to comment. I said, is it completely false, though? That's the main issue. Then the other lady didn't respond to me. I'm going through all of their shit right now. Amazon services. No, different guy. That speaks volume, or he just may not even know it. So he could just be, he's in like a different division. There's AMC unhalted. There's your drop. Day trading. Okay, it's not going to go up anymore. I top ticked it. I'm sorry, guys. I did 500 shares of AMC at 5:30. I'm sorry, guys. I'm sorry. I had to do it. I had to do it for you. That's it. That's the only way I could get to the bottom of this, is if I buy it and stop the run, then I could figure it out. Okay, another person got my chat. So one person ignored me. Who the fuck is this guy? I feel bad. I'm just blowing them all up right now. Okay, who else we got? Oh, I got one more. Wait, answer me, motherfucker. He turned off his messages. Bro, Amazon has so many employees. This is actually wild. I'm literally going through every single employee that I could find. I love it. They're all opening it too. They either open it. Only one guy responded so far, and he just said, "I cannot." That's all I've got. Clifford, yeah, into the low, which could be good for AMC if everybody starts dumping. Then they flock to the easy one. But, yeah, you are hitting a new low right now. $39.60 again, below the 100-day. $39.47, I believe, is our level. Yeah, $39.49 is the 23rd, but you are below the 100-day moving average now. Again, things are starting to flush a little harder here. All right. I've sent out like 5-6 messages from anybody I can. I got one comment right now. Quite simply, they said, "I cannot." I said, "Sorry to bother. There's a rumor going around about Amazon looking to acquire AMC. Can you weigh in on this?" And the response is, "I cannot." That's it. It's very interesting. They spawn quick. It's only one person. The other people saw my message, but they didn't respond. Maybe this guy will respond. Cayute. Amazon new low. Everything. You just had a Chicle. I mean, we were focusing on that news there. But everything just started to flip. So it's like, as we were focusing on the news, I mean, bonds are still elevated, but then stock now is below the 200-day or the 100-day, and then we're going into the second set of ranges here. Chad, I work in finance. He would have said the same thing, whether it was true or not. Yeah, I could agree with that. Bezos. Well, Apple had the theater news yesterday. That's what I think makes this that much more interesting. And then none of the, what's it called? Oh, there it is. It's hitting the wire. Only Benzinga has posted it. That's it. I have AMC. We took off Ape. I made a play on AMC. I'm down $80 on it. I bought 500 shares. Again, the only way to find out without it going crazy was to buy it and stop the run. I took the bullet. Amazon starting to sell. Even Apple, again, back to that low from earlier. And then SPY's down, and then bonds might even break out here. Where's Coinbase? Whoa. Palo Alto Networks flushing. Yo, Pan W. It's not loading, but that looked like a gigantic flush. Maybe it was just the low ticker. CDTX up 18. Where is that one? That was actually not bad. Down 50 cents a share. Actually, it's pretty bad, considering it's $1. UVXY pop. SPY still at the low. Little John Wick action. It looked like it was flushing, but I don't know if it's loaded up. Mercedes-Benz offering books to close at 7 p.m. What's going on in the stock market? A lot. A weird fear is gone, but fear is still there. And then that's it. That's the best way to explain it. It's like driving in like a abandoned area, and then your car breaks down, right? And then you start hearing weird noises. That's fear. But then like you stop hearing weird noises, and now it's daytime, but your car is still broken down. That's how I feel like the market is. We are now broken down on the middle of nowhere. You've made it through nighttime, and you were scared by the freaky noises, but that's it. So that's the best way. It's like we're feeling a little better, still have a broader amount of fear, and now we're waiting to see when the engine can get fixed so we could start moving again. Mm. 394. Debt ceiling. So AMC is kind of dying here. I don't know if that'll hold up. Hopefully the red. What you want to see is the market go red and people pile into it. But if they don't, it's done. You know? Ask Adam Aaron. Fuck Adam Aaron. Yeah, I said it. Where is it? AMC Entertainment? They don't got anybody on here. Okay, I said, oh, boss, business, Chad. God bless you, baby. I missed that. We were trying to get people to respond to some rumor comments. Yeah, there you go. So you're getting below the halt level. Everyone's using this as AMC liquidity. Amazon is dumping now. And Apple and Microsoft. Microsoft's not at the low yet. Meta's came back down. Let's see. Netflix. Meta. Amazon is just potentially could. It's not even. It's just a straight Twitter rumor from Gasparino saying that Bezos and Amazon are looking into acquiring AMC or their distressed debt. So it's a very interesting one. I mean, it's a far-reaching one. If it happened, it would be huge. If it didn't happen, I mean, it kind of fits the narrative of a bullshit rumor to get shit popped. So it goes both ways. It goes both ways indeed. Twitter fingers. Yeah, Gasparino cannot be trusted. He really can't. Like, low-key. Boeing popping. Bond just hit a high and then came right back down. Again, you are now about to hit 39.55. I'd say that's a minor level, but really 39.49, then 39.37, ladies and gentlemen. So right now, yeah, so 39.49. Then we go back to Thursday close. And then Wednesday close after Powell, that would be 39.36. So these are very important spots. Just keep in mind. Thursday's close, 39.48. That is the day after Powell. And then Wednesday this was the day after Powell where we bounced and sold off. This was the day of Powell at 39.37. So there's a lot of weight here, especially in context of what we've just dealt with. Like the video. Tyler Daly. Showing love daily, baby. God bless you. Amen. Play running. Oh, little pop there. Little pop on young AMC. Tesla moving up. Tesla's doing a little better. I'm surprised. Apple and Amazon are ugly. A huge pop on Boeing. Okay, JP. Next one you get banned. Okay. I know you wanted me to put it up, but I saw it. You could keep spamming it, but we're looking at other stuff. But if you're just going to lie about the scope of the move, you do not belong here, my friend. Ban. I just timeout. I timed him out. You know what I'm saying? You timed him out. Just showing some love, man. That's it. You know, it's all good. It's all good. It's just a warning. It's a warning, but you know, you can't be doing those speeds here. You know, again, you know what I'm saying? Apple's still at the low, so watch out. Again, 39.49. You closed out a square. Did it go back up? No, I closed out, I think, a little bit higher or maybe give or take lower, but no, I'm good on the square. And I'm glad anything, I'm sure I left a little bit on the table, but anything I closed out today, I feel good. I unlocked a lot of cash. I had other plays. Like even the Procter & Gamble at one point was down like $1,500. I walked away with like $100 loss. We got to take another $1,000 on Facebook. Again, we have other plays coming back here too, but I am not complaining. Even Baba, which is kind of wild. So now we're freeing up capital. Old plays that were at a red are going green. We're going to be looking good. And then my main goal here is to get neutral. And then we could really respond, maybe even get another bond play. But it's good. I got some cash to do some damage with also. But I'm gonna chill. Except for I keep getting dragged into a couple and then go back. Oh, Shelby, how you going? You gonna join for your first time and then gift it and then just give it away like that to everybody? Oh, you a blessing, Shelby. God bless you. God bless you. Amen. Horna. Let's go. It's out of business too, baby. God bless America. Amen. 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 Oh, made $12K on Baba calls overnight. Shout out our wise sensei for calling out the Jack Ma resurgence yesterday. Damn, you went for it. You're like, fuck yeah, I ain't seen Jack Ma in a year. I mean, technically, that probably was the best signal out there. That's a good play, bro. That's a very good play. Good work. Oh, now you got Mr. Tabebe. Midwest fine. Why is there so much hype? Why is there so much hype right now? What's going on? Harna. What's going on? Yeah, what's going on, bro? What's going on? What's going on? Hold on. What's happening here? A lot's happening. A lot's happening. New low on the market. Amazon is flushing. NASDAQ is down 1%. SPY half. Dow Jones 0.3. Small caps 3. So 39.55. About 6 more points to the next level. This isn't the danger zone yet, but you're getting there. And then every time we flush this level, last Wednesday, last Thursday, it got big. So, and then anytime we broke out from here, it was decent to the upside. So this could be big. I think maybe Dancing Queen, but I kind of want to put it on flush. We'll find out. Holy shit. Oh, my gosh. Oh, my God. He does it again. Oh, what is happening? I'm confused now, Chad. There's a lot going on. Okay, there's your bounce at the level. Edgar. Oh, man. Our father, Edgar. That's it, man. That's it. Father Edgar. He's been one of the saints here, man. He's doing it again. Oh, no. Oh, hey, man. Y'all better get hyped, too. Y'all getting blessed with it. Make sure you turn on your gifts. Let's go, baby. Oh, so I'm still in Iowa. I grabbed that yesterday. Oh, my goodness. God bless you, Edgar. Saint Edgar. God bless you. Saint Edgar. Father Edgar. God bless you. We love you. Man. It's very good, Habibi. It's very, very good. Very, very good. Thank you, Edgar. Thank you. I know, right? You never will go. So right now, if you click the little money symbol on the Twitch or on the YouTube, as if you were going to like buy something, and then just like if you go to like membership gifting, it should say like there should be your like 3 little dots, and if you click those 3 little dots after doing that, it should say turn on gifting. So it's somewhere around there. Lucid plans to lay off hundreds of workers. The VIX is on the high right now. Edgar's killing it, bro. God bless you, Edgar. For real, man. Thank you. You definitely do not have to do that, man, and you've been doing it very consistently. So God bless you, bro, and thank you for bringing a smile to other people's faces as well with it. God bless. So now y'all better be interacting on the member post now. I think everybody should be a member if they haven't turned on their gifts. Go Edgar, Peach Nation, let's go. And then business. I like business's name. BZS, NZS, like it's business, right? Otherwise, if I'm like totally butchering your name, that'll be weird. But I like business. Yeah, I don't know, Edgar. Can we donate to Edgar? Yeah, I think you pay homage. I don't know what, man. It's beautiful. Vacation, heading to Vegas and Utah. Stay sound and resilient, Jazz. Amen, baby. Amen. This community love you, man. Like I said, everybody holds it down in various ways, and I can't wait. Y'all better be sourcing that info then on the member side of it. I want to see what y'all do, and then we could give credit where credit is due. Amen. Yeah, Lucid planning to lay off thousands or hundreds of workers. Send in the chat. What's happening? Dude, what just happened? Was it the AMC news? What happened? I don't know. Like something just got set off and y'all just started. So I haven't even got a carbo yet. You know that? I actually right about now I should be getting me a carbo. Humana's on the low. Humana's down bad. Yo, check healthcare. Healthcare's dropping again. Remember you had some data on that yesterday? Or some news with the whole drug price negotiation. Eric Schroeder, welcome. That is chattitative easing. I don't know. But everyone's been pretty chill, though, man. Like I'm saying, I mean, I will not hesitate to go members only. I mean, you had a couple of dickheads in October. But, you know, everybody's been in the game. I think we've all been focused, and I don't even think I think the vibes have been immaculate, man. The vibes have been immaculate. Carvana, I think it's a game of musical chairs. Wait 10 minutes, and then you could go get a bathroom. All right, I feel you. Fair enough. Fair enough. Who is Edgar? The man, the myth, the legend, man. Alongside Charlie. There's Father Charlie and Father Edgar. And both of them, they've just had a massive amount of children in the chat. It's a long story. It's either you know or you know. Honestly, now it's Bradley Frizzle and the Peach, and it's Edgar and Charlie and their children. That could be a TV show. Would you use the short long-term ETFs for bond plays? Would you use short or long-term ETF? Oh, yeah, I would. I like them because they're less volatility and they're cheaper to play. And then once you really know what's going on, then go to then I would go to the futures. So that's literally my game plan right now. I'm gonna play TYD until the pops and drops go out, and then right when we get one of those big flushes and then it's one of those pump fakes, I'm going to go huge on the leverage, hopefully. Or I might just buy the yen and call it a day. Brand accounts cannot receive gifted subs. Oh, that's whack. I want to know Father Edgar. Well, Saint Edgar. It's like Saint Nicholas, like, you know. He comes around. He comes around and he drops you gifts and presents to brighten up your day. That's it. My positions, no, I took them off. Again, I mean, the last like 3 months I keep them up there, but everybody just asks me the questions no matter what. So I figure there's no point of wasting memory, RAM, and dealing with it. So if I'm going to answer I've answered every question that everyone's asked me. So it's just a lot easier at that point, or until people kind of use it for what it is. Because if it's not being used, I mean, I don't know what's happening. Edward Claus. Average down. I haven't averaged down in months, but I mean, I'm still holding it, and I like the hold on it. Red candle on AMC. Tesla's still at the bottom. Crocs is selling off. Now Johnson & Johnson is getting clapped. HYGH and high both exist. I don't like HYG or HYGH for relative. Corporate bonds are different than government. It's like scrub. I feel you. That's actually smart. Micron earning is going to be big. So whatever happens with Micron earnings, like get ready for that to move NVIDIA, AMD, and all the other chips. It's actually going to be huge. And then TYD came back up now. Where do you think we close? No idea. This is weird movement. We're just like, we're air braking into, this is a fat level. Because anytime we've broken below here, you flushed huge. So anytime remember even Powell Day, you got killed. Day after Powell, it led to another 40-point drop, 30-point drop. And then when we got above here, it led to a 15, 20-point run-up that went up another 25 points the next morning. So this level is kind of last line of defense, low-key. And then we start pulling it out. Like you see, this is where you even gapped up before Powell. This is where you couldn't get above there. And again, it's kind of been a crucial level here over the last couple of days or last couple of weeks. But we are still going lower. Uber's on the low now. I'm surprised Coinbase ain't going down to the low. WWE gave it up. That sucks. They were up 5% today at one point. Why would MU be big since they already had, well, no, earnings is about to start up again. So this is for the next quarter. So it's not like Micron is reporting late. Micron is actually reporting early. So remember, in 3 weeks, all of the other big companies are going to start reporting. TYD, I just bought shares. That's it. Whoa, VIX is on the high. Clifford / Chicle, 3 points is pretty decent, but you are continuing the way down. But here's the problem. You guys, volume is still dog shit. It's almost 11 o'clock right now, and we haven't even done 40 million in volume. You're at 30. The bonds are running, so you're getting a bond panic buy a little bit, but it's still, I think it's just holding up the range. However, the volume is still low on the downside. So same thing. I mean, how many people yesterday were saying that, oh, low volume run-up is bad? I mean, you're going down on very, very low volume still, too. Lucid declined 7 after insider reports of layoffs. What? Yo, this could be a rare point in history, Chad. Hold on. Lucid just announced layoffs and the stock did not go back up. This is insane. The dollar's dropping because if financial stress requires intervention, the dollar's fucked in this inflationary environment. That's crazy. Yeah, Lucid is the first one to go down. I haven't seen that in months. They just said we laid off 7% of our staff and the stock went down. That's insane. Is the world changing? Here's for your carbo. Oh, thank you. Watchlist. Bro, you have a good vacation, man. I don't know if you're driving or flying. I've always wanted to drive Vegas to Utah, but that shit's far, man. But have a good vacay, okay? You get you a carbo as well. Thanks for all the game. My pleasure, my friend. Thank you for being here to even pick up the game. You know what I'm saying? Let's go. Just buy me a house one day. I hope you guys don't forget. You know, if we end up doing 3 TLTs, you know what I'm saying? 3 TLTs in a Japanese yen. And like, you know what I'm saying? And then we even hit Bitcoin on the low again and nobody buy me a house. I'm gonna kind of be sad. I'm just saying, man, you know, just don't forget about me, okay? When some of y'all become like rich and famous and y'all, you know, you take the moral hazard risk that I wouldn't take, you know, just make sure, just buy me a house or something. You know what I'm saying? Don't forget about me. That's all I've ever asked is don't forget about me. And I've seen people forget about me. So that's all I'm saying. Just don't forget about me, man. That's all it is. I don't want your Cash App. I want a house. Just don't forget about me. That's it. Just don't forget about me. That's all it comes down to. Do I own physical yen? No, motherfucker. Why would I have physical yen? Actually, I might. I think I do actually, but only like $20. I like foreign currencies. I have one of my boys who travels a lot. I have him give me money from everywhere. So I got like Saudi money. I got Saudi money, Asian money. I got a lot of the money in Europe. The euros look weird. I got money from Greece. I think I got an old drachma, low key. No Shroot Bucks. That's the second one. ACN went down. I thought didn't ACN bounce that day though? But yeah, Lucid actually went down on bad news. We had a little bit of a cheek lay here to the downside. You broke the level 39.51. I mean, you are 2 points above Thursday's close now. Or I guess 5 points. Thought we were closer. I don't have the Zimbabwe ones. No V-Bucks. AMC surges. Oh, wait a minute. Yo, Bloomberg's dropping it now. Yo, it's hitting Bloomberg. AMC surges 18% on report. Amazon weighs buying it. Hold on. That may have a little bit more. We might hear a little bit more on it. But that's finally hitting Bloomberg right now. It hasn't the whole time since we've been around there. They're probably like, some mother effer keeps going around asking us questions. So but I think you need the market to bounce because it's usually the hype plays when the market goes down, they bounce, but AMC didn't really do it that time. Yeah, but they called it a report and they didn't immediately reject it. That's what I think makes it that much interesting. Much more interesting. Like, I feel like I was very skeptical right when I heard it. All I did, I confirmed it was Twitter. And then I waited, and then I started contacting everybody, but it's been roughly, 30 minutes, and nobody has flat out denied it yet? So, interesting. That's very long-winded for a Gasparino rumor. And now Amazon's trending on Twitter. Yeah, pretty much the rumor is circulating. It's based on nothing. So it's like, but it's very weird that it's holding up. But then at the same time, if you really think about it, 13% is nothing if it held any weight. But then like for AMC, I think 13% is a normal fucking Tuesday. Yes, like, I don't know. Maybe on the downside, but no, it's done that before. I mean, it's went up 70 cents. Yeah. So it moved bigger last Thursday than even on that news. Amazon is dropping hard. You know, it kind of correlates too. But then again, the market started dropping there as well. And then the bonds were running up too. So it's getting a little weird. I bought 500 shares. I top-ticked it. I top-ticked it to buy his time to verify the news. I said, as long as I go and I buy it in at the high, it'll stop moving. Give us some time to see what's going on. And it worked. It worked for now. I'm literally the top tick. Like, I got you, bro. I got you. I could see it. Yeah, and Apple announced $1 billion for theaters yesterday. But then again, I wouldn't even buy it for the movie theaters. I don't know if they own them or lease them. I would buy, if I could buy AMC, I would buy it just for the fan base. You guys are kidding me. Do you realize how many AMC apes are going to make sure they have Prime if Bezos buys them out? What are you talking about? This is an Amazon Prime play. This has nothing to do with movies. This is all for Amazon Prime. That's it. However, how many people registered to vote for the shareholder thing? That's it. Oh, the gold mine too. Apes hate Bezos. Not if he buys them. He buys you and gives you $15 a share, $20 a share. You're going to be like, you know what? Maybe that Bezos guy's not so bad. You're like, I don't think he's that bad. So for the record, I know a lot about AMC and Amazon's story. From what I know, the sourcing is solid, but what is being overlooked is that Amazon appears to be interested as a distressed asset, not something to buy at a premium to share price. Let's see. The AMC thing's the #1 story right now on Bloomberg. Let's see. The company AMC serves as a platform for the 12 to 15 movies Amazon plans to release annually. Bloomberg reported last year that Amazon is planning an ambitious slate of films. AMC did not immediately respond to requests for comment. Well, neither did the other guys. Baba's about to break 100. Someone said the website where the news showed up was created a month ago for AMC. Maybe we'll get it after hours. This is weird. It's fucking weird. I'm telling you, this whole AMC Amazon thing is like, it's definitely like sketchy and intriguing at the same time. Just a mix. And then now you got everybody's hands in there. Steve Ostapolopoulos has submitted $6 billion bid for the Commanders. Not trying to spam, but look at B. Are you going to lie to me again? So I put it up there? That's it? You want me to just keep up Boeing? I said, man, I said, I'm sorry. Now you're going to torture me? There you go. This was the last one. It's good. It's good. It's up 50 cents since your last call out. 40. EBS News tomorrow. Now you're going to get your Purdoof. And Spy, Baby Bounce. How much time? Oh, it's 11. Wait, you guys didn't complain about the ads. That was supposed to be my cue to go to the bathroom. Scammers. Y'all scam me. How come y'all didn't complain about ads this time? I didn't see one person go ad. Uh-huh. Yeah, ain't nobody. What happened? Yeah, you forgot to tell me? It's cold, bro. That's cold. Oh, there. All right, follow me on Instagram at The Trading Fraternity. I'll be right back, my friend.
On a report that Amazon is considering buying the company. Again, AMC Entertainment surging right now on a report that Amazon is considering buying the stock. It was halted for volatility after earlier surging. So once again, it is moving right now. Amazon shares right now down 1.6%. I'm kind of bewildered by this.
It is an interesting move by Amazon, but then you think about AMC, the fact that it has nearly 600 theaters across North America. If you're in Amazon and you're, pushing into every part of American and global life, I could see how that might be appealing.
Yeah, well, this would be a distressed purchase, if nothing else, right?
There you go.
All right, let's move on to our big story, return to the big banks and banks in general, because the Senate Banking Committee questioning regulators on the failures of Silicon Valley Bank and Signature Bank. Now, while acknowledging shortcomings, regulators defended the health of the overall banking system.
This is a textbook case of bank mismanagement.
We were seeing serious stress at other institutions.
We have used important tools to act quickly to prevent contagion.
We will continue to closely monitor conditions in the banking system.
They are tools we would use again.
Prepared to use all of our tools
to ensure that Americans' deposits are safe.
We are committed to ensuring that all deposits are safe.
Depositors will continue to have access to their savings.
Our banking system is sound and resilient.
Regional banks in the United States remain a source of strength for the system.
Joining us now is Christopher Marinac. He is Director of Research at Janney Montgomery Scott, which has $120 billion in assets under management. Great to speak with you, Christopher. And I guess there are a couple of themes that came out of those comments from the Senate Banking Committee, which is from the regulator's perspective, the financial system.
The banking system is sound and stable and resilient for 500. No, we got it. We got it. I do not feel reassured. Why? Dude, we have a lot of tools at our disposal. And we're ready to use those tools, and it is sound and resilient. I don't know what. You're making a really big deal about it, man. I don't know. It's like, how many times do I have to tell you it is sound and resilient? Like, what more do you want? God. Like, what's better than sound and resilient? You know what I'm saying? Oh, I tried to do it. My girlfriend caught me yesterday. She saw me turn on the camera. I was gonna put it for my intro today. I was gonna I could still do it. I don't know if she's listening. I don't know. She might. What time is it? I don't know. She might be listening. I did. I started recording on the camera, and I was gonna just tell her. I was like, "Hey, babe, I just wanted to tell you I didn't cheat on you. Just out of nowhere. It was hella random, and I wanted to see her reaction." I'll be like, "No, don't worry. Like, our relationship is sound. It's resilient. Like, don't worry. I just wanted to let you know. Don't worry." But she caught me. She's like, "Why are you recording?" And I was like, "You can see that?" Yeah, she was like, "You're not slick, buddy." I said, "Okay, I'm sorry." That will turn into evidence in your murder trial. Nah, my girlfriend crazy. Like, my girlfriend is not the type to, like, she wouldn't kill me. She would find the other girl. That's what I'm more worried about. So, like, I wouldn't get clapped, but she's like, I don't know why. Like, she loved me. I love her too, but she would just, I feel I'd be more worried for the other party involved if that was the case. Honestly, she's a sound and resilient woman, so I couldn't expect anything less. Sounds like she the crazy jealous type. Nah, she just loved me, but she's funny. I'm telling you, she's like kind of funny. Like, kind of funny. Because, okay, so don't get too crazy if you listen. And kind of funny. But that's it. Nah, she talks shit, bro. What did she say? Bro, she actually had, it was probably top 5 jokes she's ever made. We were driving, just randomly, and like there was like this huge like mountain, and it looked like hella weird and like abandoned. And then just out of nowhere, she's like, "Hey, that's where Mark Zuckerberg was born." and I just died of laughter because you had to be there. You had to be there, but it was hilarious. AMC, no, there's another update, but it's the same article. I was laughing. If I showed you the mountain, you would laugh because it was like, that's funny. That's funny. Okay, you're kind of holding here. Bonds stop going up. Does Amazon get the gold mine? I don't know. She's still holding Peloton. Yeah, I'm pretty sure. You're whipped. Your girlfriend's an AI. Okay? So now what? There it is. Thank you. Thank you. I appreciate you. I love you. Sorry for the sass. It's always fun. No, I'm not whipped. I'm just terrified of her. I already told you that. I don't even trip on that. Like, y'all don't remember? Y'all be like, simp. I don't give a fuck. I am a simp. I got game. You don't have game. That's why out here you like, what's that? That's it, man. You listening to Andrew Tate. And then you still, don't even get me started. Don't even get me started. They playing me, bro. They playing me. Uber, I think he's at $30. $30 go bye-bye. If it go clap. Yeah, not good. They had good earnings, though. But it's 50-50. 50-50. Don't talk about Tate. Watch out for Yash. Nah, Yash is good. You're good. I take no offense in my soul. You know what I'm saying? My soul is not disturbed by comments. It's good. It just sucks though. I hope I don't make anybody cry. It's just sassiness. We had fun the other day. It was really, really funny comebacks. We've been married for 10 years today. Congratulations. I mean, if I didn't know any better, I would say that sounds pretty sound and resilient. Wouldn't you say? Would you say your relationship was sound and resilient? Mm-mm. 16 years yesterday? That sounds sound and resilient? No, more sound and I don't know. Is AMC fake news? We don't know. It should be fake news. It should be. Like, in the weird event that it's not, it'll be insane. There may be, like, updates to it that'll have people reacting, but it should be fake news. You know what I'm saying? It should be fake, but as of now, almost 45 minutes from the initial report, it's not there. Will you come to my wedding? And if so, yes, of course, Michael. I don't know. Email it to me, or you could send it to wow. How did y'all get it? I forgot. Because I don't know. Somebody sent some shit. Somebody found a way to send me shit before. I forgot who I think it was either through LT or somebody else. And I was like, all right, word. I was like, it's kind of creepy, but I'm down. But no, I'm hella down. That's it. Just no. Can I be the officiator with a mask on? As the world slips into global recession, Amazon buys a fucking movie theater. Yeah, wait a minute. So yeah, email me then in the invite and I'll see it and set up the dates. Bro, that's so funny. Wasn't Bezos just like on an interview like 4 or 5 months ago like, yo, don't make any major purchases, don't buy a TV, and he out here buying movie theaters, man. Do you know any side hustles to make any extra cash? I mean, do you know what 448 grams is? Now, if not, then we're going to have to go to a different section of the economy. Other than that, you could probably do Uber, DoorDash. I think Airbnb. You do that, you'll be great. I think Airbnb is the best side hustle business. Hey, you like that? That was a little joke for the potheads. I slipped that one in there. Not everybody even understood it. And now if you understood that joke, you're fucked. You know that, right? I'm just saying, if you understood that, then that's it. I already, I got you. That's it. You're a sicko. You shouldn't even know that. How do you know that? How do I even know that? Exactly. Yeah, actually. I'm not going to lie to you, man. I recently heard of a new side hustle, believe it or not. I don't know. Apparently, there's something in an electricity box that's worth like $50 a unit, maybe 100. So I don't know if you could get your hands on circuit breakers, but apparently that's a new side hustle, actually. So I don't know. That could be there. I still can't believe that happened. That was like that shit is just still crazy. I still can't believe that even occurred to me. Like, that's actually insane. Another break-in? No, not another one, but I'm still like in shock that even happened. Oh, excuse me. AMC and Amazon didn't immediately respond to request. There's an update to the report, but that's it. Oh, here's another one. AMC also jumped in 2021 on speculation of an Amazon acquisition that never materialized. At the time, the chain was swept up in a Reddit-inspired mania that sent the stock soaring. Oh. When's this from? What's the date on this? Yeah. Look at this. I got to... Yo, hold up. Yo, same damn thing. But this is from February. So AMC, whose shares are favored on Reddit, jumped on Thursday after the publication of a French translation of a month-old report speculating Amazon would buy the world's biggest chain of movie theaters. The article in Forbes France is dated today, but notes at the bottom its translation of a Forbes US piece. The American version was published last May, and was the Amazon's acquisition is pure speculation, but cite reasons why it would make sense, including financial struggles of AMC and Amazon's successful content arm of Prime Video. Shares jumped as much as 19%. They were up 9% to 605. Then the stock gained 162 through the year. It also got a boost after they said they raised $900 million in funding. So that was February 18th, 2021. So... Jeez. So it's like right here. It's kind of around the same price range, believe it or not. I know that is old, but that's what people are comparing. Pretty much, this isn't the first time AMC has had a Amazon buyout rumor. That's it. Just simple as that. Is that you've had this happen in February 2021. So that is an interesting update. They offer, well, last time it went up 19%. This time it's up 13%. Will I be the officiant at your wedding? If I could wear a mask and do the procession as a haiku, I'm down. I'm totally down. I've been getting into haikus lately. Honestly, I don't even know what a haiku is, to be honest with you. I have a general idea, but that's why I need more education on the matter. What's the plan if the rumors are false? I leave. I go, bye. I'm sorry, I have to go. That was funny. I'm glad you got a laugh out of that. Thank you. That was kind of a left field joke. It was a left field joke, so I'm glad somebody was able to pick up on it. Thank you. Alibaba breakup shows global tech giants a way to unlock value. Baba's still coming down. Still at the high, but now it's starting to come down. Would you come to visit me in Saudi Arabia? I want to go to Dubai. I've never been to Dubai. But I don't know if I'd actually go. Why don't you try stand-up? I'm only funny in situations. This is hard to explain. But, like, did I tell you I told my mom that? I was like, Mom, I want to do stand-up. And she went, no. And then I realized, I was like, I don't think my mom knows what stand-up comedy is. Because I was like, that's a weird reaction. And then I don't know what she thought stand-up means. But that's it, man. That's it. Mm-hmm. She does. She knows you're going to put the family business out there. I mean, I've already shared it all. That's it. The Nikes. You know, you guys already know. You already know. My favorite stand. I have a lot, man. I honestly, I think the best stand-up. Oh, GME's popping now. I think the best stand-up comedy. Most people only know him for the show. But Daniel Tosh. I think Daniel Tosh stand-up is like the best. If you haven't seen old Daniel Tosh stand-up, you should probably go watch it. I think that is number one by far. Yeah, GME did have good earnings. That, Mitch Hedberg, old Chris Rock. There's a lot, man. I really just like any comedy. Your brother and dad saw him in person? Dude, that's amazing. Yeah, Cat Williams. There's a lot, man. That was pretty funny. He said, I like Jerome Powell. He comes on every 3 months. Bump. Yeah, Dave. I didn't even think about Dave Chappelle. Old Chris Rock is like also great. I love Pablo Francisco. What's his name? At one point, I tried to listen to it though again, and I think it didn't hit the same. But like I remember back in the day, like Dane Cook. Dane Cook used to be really funny, but then I listened to it like when I was older, and it didn't hit the same. But he used to be pretty fire, yeah. That was in like 2005, bro. Straight up though, he used to be hilarious. I used to think Dane Cook was like, oh my gosh, he's so funny. And then he's not really that funny anymore, but it was decent. Oh, George Carlin. What am I saying? Even then, I think George Carlin, it's funny because like George Carlin would roast me for my beliefs, but I'd laugh so hard. I love, like, what does he say? He said, God is watching you and he needs your money. George Carlin, hands down, though. I think Daniel Tosh and George Carlin, and then, like, old Cat Williams, Chris Rock, and then Dave Chappelle. Those would be my top three, my three that I have. There's no clear winner. No, not at all. Actually, it just all depends. It all depends. Oh, what's his name? No. You know who else I like? Hannibal Buress. He's hilarious. I just love how he delivers shit. How do we just go from fucking Rumor, AMC, GameStop, Spy, Breaking Levels, and now we just had like a 4-minute straight of everybody posting their favorite comedian? This will be good to go back to, though, if you ever need a comedy recommendation. Just come back to the Chad around 11:30. Oh, Andrew Schulz. Andrew Schulz is definitely that's the new generation, though. I can't put him in my top 10, my top 3. Like, Andrew Schulz is going to be there eventually. But then also, what's his name? Ralph Barbosa. I love Ralph Barbosa. But Andrew Schulz is a genius. I did forget about Dubai, yeah. Because Dubai, you can't have comedy. They kill you. No, I'm kidding. I can make that joke. I'm Arab. That's it. I got beat for laughing. Okay? There you go. Amen. Can we all agree that Joe Rogan is not funny? Yeah. I don't think Joe Rogan has ever made me laugh, and I don't think I've ever listened to Joe Rogan stand-up. But he's great at talking. I like listening to him talk every now and then. I've never watched a full podcast, though. Okay, assholes? I've never seen a Joe Rogan start to finish. I've only seen like clips. That's it. But I've never seen like his stand up. I've seen clips too, and they just weren't good. Joe's funny, not the funniest, but funny. Maybe I'll have to take a listen. It kind of like Dane Cook. Was Biden about to speak? I don't know. AMC's coming up. I could check the schedule. Yeah, Biden is giving a remark on jobs. Why? We didn't even have jobs data. He's at some construction thing. Ads. Jobs are sound and resilient. That's why. Rocket ads. How come y'all didn't do that when I needed to go pee? I really feel like that was a conspiracy against me. Okay, assholes? Bonds are dropping. We might rally. Again, when bonds started running up, we were really, really dying. Is monkeys in I think I saw that one. I'm going to go look at that. I'm going to go try to. I'm going to see. I love, honestly, you guys know that, like, for real. We talked about this the other day, and I've seen even prayer requests and all of that. Like, I've had a lot of people. I don't know what you're going through right now. I don't know how you feel. I don't know what the world and the politics and the fucking social media is doing to you. But go listen to stand-up. It'll make you feel better. Like, honestly, some of y'all need a laugh. So, I hope I can make you smile from time to time. But at the end of the day, though, some of y'all should do some stand-up comedy therapy. And tell me how that works out for you. But I would definitely use some of those recommendations. Because I'm like, I want to listen to some good stand-up. I love it. It's important. It is important, man. It is important. I need to laugh more. 100%. Dude, you have to. It's great. All right, well. Iova. We got that one yesterday. That one went up. I mean, 30 cents. Kill Tony. I've seen like clips from it. It's like funny, and then sometimes it's not funny at all. But yeah, I've seen them. There's some funny ones. Damn. You really wrote a haiku. Oh, Chat GPT did it? It's like the episode of South Park. I was like, you really wrote a haiku? It's like, that's impressive, dog. Keep doing what you do. You too, man. Let's go. And you keep getting the long term. And I hope you all take some time today to smile. Shane Gillis is not. I'm going to go through this. I'm going to literally go through the Chad after hours and get me some stand-up. So I'm going to go through all your recommendations on here. Data Dog. Did coin bounce? No. WWE scammed me. What was the other one? Square came lower. So I'm good with that. Mons came up. Man, somebody said Alex Jones. Comedy? You're weird. Someone just listening to Alex Jones. Just like, oh my God, that's so funny. All right, watch if this doesn't hold. If we flush from here, it'll get ugly. If we bounce, that's going to buy you time for the next 30 minutes into Power Hour. SWBI. There was something with ammo. Like ammo stocks went up today or something like that. We should play comedy night with Chad. We should. Maybe on Friday. Maybe this Friday. I don't think I'm going anywhere. I don't think I have. We'll see what happens with this one deal. I'm supposed to get an update on that soon. I will have to travel for that one, but I don't think I will. I mean, I could probably wait. That one's not going to be on a time. Well, we should on Friday. Lucid. I can't believe it, man. Lucid. Troy said something good about it, though. He said they're just so small and, like, they're not profitable enough. So at this stage, you know, layoffs is not a good sign. Come up to San Fran. I was just there. I might have to go back soon, but I don't know about next weekend. I don't know. San Fran is weird. It's growing on me. I don't like it at all. But I've definitely gotten used to San Fran, and it's weird because I used to hate it. I used to tell you guys how much I hated San Fran, and just in the last like year or two, I've been there like 9 times, 10 times, and I'm like, it's slowly growing on me. It's slowly growing on me. Yeah, layoffs in early stage are sign of weakness. I mean, this market, everybody's been quick though to buy up the layoffs. That's why it was wild. POW is one of the ammo. Yeah, there was something. I think POW is doing like a $30 million buyback. I saw a headline on that earlier in the morning. Bank overhaul will add stress to lender profits. New bank regulations threaten to cut into banking profits, crimp lending, and raise expenses, all to the detriment of share prices. Santana Row. Isn't that in L.A.? Or no, that's Santee Alley. I like Santee Alley in L.A. That's my place, bro. San Fran in quotation. What does that mean? San Fran, right. San Fran. We know what that means, Josh. Uh-huh. You San Fran in? Mm-hmm. A lot of you guys are in San Fran. That sucks. No, I'm kidding. Like I said, it's growing on me. It's growing on me. The Buffalo. Oh. Yeah, fuckers. Okay, I'm not buying that house. They're trying to... I thought it was for 4 units, and they're saying they only want to sell me 2. And that the other 2, they want to make us... We could buy the business, the rental business, but not the house. I'm like, what? This makes no sense, sir. That sucks. It looked like a really good deal. Scammers. Yeah, exactly. Weird. That's why I was like, dude, this deal is a killer. I was ready to go. Now it makes a lot of sense. How would that work? Because they have the property has like special licenses for like short-term rentals, but they don't want to sell the house on one of the properties. They're only trying to sell 2 houses. Then the other 2 houses, they want to sell the business, but not the house. And I'm like, that's stupid. What do you reply back to that? Well, Lending Tips is the one. I mean, I had him call. He just gave me the update, but you just say, okay, that's cool. I mean, we'll let you an offer. Usually, I tell them, well, tell them what we want. And usually the best way to do it is just tell them what you want, which is I want all of those houses, and that's it. If you guys want it, I'll buy it right now, 3 days. Clearly, because these people were trying to sell it. They were cutting it a couple $100,000 every day. So I was like, let's go. They hit a very low price. I was like, okay, we'll buy it right now. All 4? No, I wouldn't double the price. I want all 4 at that price. So AMC's breaking out. Now it's up 19%. That's where it was last time, actually. AMC options are cheap. GME popping. GME started popping a lot earlier, but it was just catching up. Lizzie, showing some love. Good afternoon. 20 minutes till power hour. 17. What about Apple? I closed Apple. I only made $40 on Apple today. Did a small one. I mean, Apple, I like this price. If it does end up going up and we finally get a decent day for tech. Noticed any arbitrage like in stocks, or what are we talking about? Coin back to green. It didn't flush the same way. Yeah, coin actually getting volume. All of SPY now. Again, getting ready for power hour here. Let's see if Amazon goes up. Tesla a little bit. They went as low as 155 or 185. And then AMD's chilling. Get ready for Micron. Again, that's earnings after hours, and that's going to be huge. What happened to, what's that called? ON? ON came back down, but that was a weird pop earlier. Yes, MSTR is like an arbitrage play. I mean, GBTC, that's an arbitrage play, but, I mean, it's kind of complex. It's like complex and it costs time. Or the ape arbitrage, that's one on the table. FRC taking off. Do you like Fear of God hoodies? My girlfriend bought me some just because she knows it says Fear God, and I'm down with that. Oh yeah, I do actually. I do like them. That's it. I'll wear any. You say it says Fear God on it, man. I got you. That's it. I could rock that all day. I don't know if I have one here, or if I have a clean one. I'll try to wear it for the watch list for you. UUP coming back up. I don't know. Well, if the banking situation gets worse, I mean, UUP will become at risk. That's a discussion that we had here today, and we're not the only one talking about it. A lot of people are. Yo, SPY's going low-key vertical here from the bottom now. You've recovered that little Amazon drop and that little flush at the level. So like I told you, if we didn't break this one and kind of came up here, that'll give you a decent amount of support. This is back to the 100-day. Benort Corn. I think Benort Corn's running. And then chips are coming up here with Micron. So AMC just hit a high. Gasparino breaking. Fox has confirmed Amazon has considered it and hasn't pulled the trigger. Its interest now remains as buying a distressed asset. That's what I'm told. May never be. So wait, I think you're getting your update. Is that what, 11:46? Yeah, that just came out. So it looks like they're saying Amazon has considered it and for various reasons hasn't pulled the trigger. Its interest remains, though, as a distressed asset. Well, that's the confirmation. All right, I sold out at 5,385. I made like $38 or $40. I don't want to deal with it, but that's the secondary confirmation. Again, if Troy said something like that earlier, where they're looking at the what's it called? They want it as a distressed asset. Amazon considering it, but they said as a asset. And then what does it say? It says, I'm told will never be. Where is it? You just put that one on. I am told and may never be. There is no deal on the table, I am told, and may never be. So I think it could be done for now. But we'll see. They're considering buying it as a distressed asset. They've considered it, but for various reasons, they haven't pulled the trigger. And now they're saying their interest remains more of buying a distressed asset. And then there's Micron. Data tomorrow, I think it's going to be light comparatively. You're going to get, pending home apps, pending home sales, and mortgage applications. And then Thursday, jobless claims, GDP annualized, and then core PCE quarter over quarter, and then continuing claims. And then Friday's the money. Bitcoin $250 candle. Oh, they're doing decent. They're still at the lows of Powell. And the day after they closed at 28,000. Would a distressed asset be coal? Maybe. Coles or what's that other one? Cinemark? I think they want media. They don't want, like, Kohl's doesn't have movie theaters. They want media assets that are distressed. I think Cinemark would be the only other theater. But didn't they get bought out? Coin pop. Bitcoin's popping now, too. Oh, shit. Coin really did. That's $1.30 in like 5 minutes. Where do you post your plays at? Go to the members section on the YouTube channel, and you should have a thread there. And then I'm going to post the thread every day so that people can post them. So just come over here. You got to go to the community tab and then post it in the comments. And like I was saying earlier, man, we got timestamps, we got writing. It's going to be a lot easier to give credit where credit is due, and then even source some stuff. So this is what I posted last night. I just gave you guys some updates on where it was as of the night. You even got a little philo of the day. We had a poll too, actually. So out of 585 votes, and why do you guys vote but not like the post, dickhead? It's okay. But I asked the Chads, when do you think recession will hit? 23% say recession in over 12 months, and then 77% think recession in under 12 months. So I thought that was interesting. So again, if you guys ever want to come here, if you have the badge, just go to a community tab. Just go to the channel and then hit community. And then you should get these, but I'm going to start posting these for y'all. You didn't add an option for no recession? Well, just timing. Under 12. Under or over. Super easy. But those 77 have thought under 12 months for over 12 months. Okay, that's a good point. That's a good way to look at it. Oh, wait, what? Wait, Occidental Berkshire bought more? Monday night, Berkshire said in a filing it bought 3.7 million more of Oxy. I thought it was just off an upgrade. Well, that's part of it. Watch Micron too. Yeah, they own 23% now? No shit. I didn't see that. I just saw that now. Because everybody was talking about the upgrade and just oil in general. But there you go, Buffet. FRC. Yeah, 13 sucks though. I mean, again, it didn't drop below 13 for a while. I think Coin is just responding to that Bitcoin pop. EBS, PDUFA, pre-market, or post. Probably post, but you never know. So every time we get a PDUFA, this is the main question. And we don't know. Every company is different, where they're at with the schedule, even the FDA, whenever they decide to wake up. So it's all on them. The upside on EBS, I think, is good. I think I'm like $20 is what I would say. I could check more for you, but it's going to be risky there. I mean, you take a look, they're just dying, right? But they have a lot of upside. I mean, the stock was worth a lot more. I'd like it. This is a better one. There's a reason why I averaged down on it. It's just that it's dead. So it's better to buy a biotech on like PDUFA after it sells off 50% than buying it when it goes up 50%. That's what we learned from CDTX, right? I told you guys with CDTX, I didn't like that one. I'm still in it too. I still have some of the shares, but the problem was they got FDA approval, but they were already up 100%, 75%. Where now EBS coming into it, it's still risky. You don't know. Like you could still lose 50% of your money. So please don't get this twisted. Again, if that PDUFA does not end up good, they'll get murdered. They'll probably go to, actually, this could probably go more than 50% lower. This could probably go down to like $2 if they do bad on it, or if anything bad arises from it. However, if it's already sold off like 50%, that's better than not. Refresh, fix for audio. Taking a look at SLG. I have not. SL Green. Is this commercial? The name sounds very familiar. Oh wow, they're at their 08 low. I think these are actually, I think they're one of the most shorted. What the? Why is my high-low ticker? I think they're one of the most shorted ones. It's kind of cool. I'll keep the high-low ticker here. I'm not used to it, but 15%. I mean, honestly, I would rather take MPW. Because if they're commercial, because MPW is still quote-unquote commercial, but it's medical. I like medical properties. I'm telling you, medical properties, if done right, are very, very good. So at that point, if it's the same yield as MPW, I'm going with MPW. Am I going to sell the PDUFA? Yeah, if that one is good earnings, pops back up, I'm going to get out of that. Below 20 for Divvy, we'll continue to buy more. It's not bad. I mean, I think some commercial is definitely at risk, but also, I mean, right now there is an opportunity where you get to kind of get a little advantage off of some of the fear. Chips are dumping. Watch Micron again. They have earnings after the bell. But Nortcorn still working. Watch out, coins going. Does SPTS? No, this is not like Bill. Be very careful. So even though it's a short-term Treasury ETF, something is tracking the market or the bond yields. It's not. This is way too unstable to work like Bill. So be careful of that. Like you see Bill and any of the other ones, like when you look at them, you'll just notice like it looks like a compute. Like this would have been the best day trade. You know what I'm saying? You know, hey, anybody with me? You know, you could just bought it and held it. A great swing trade. I know what's going to happen. So we'll find out. But that's different than SPTC or TS. How's IRM in the middle of this? EBS. We've held it for a while. I bought it on the Narcan OTC, and then it got clapped, but then they had a PDUFA coming up here tomorrow, and then I averaged down yesterday. I have like 300 shares at $11. So that's my average. So again, kind of like, I mean, Rita, I think I did my average on the same day. I don't think this is like Rita. It's not like their pipelines are completely different. The only thing that makes EBS have upside is that, quite frankly, it was just trading at $50 to $120 within the last 12 to 24 months. So that's the part I like about it. And then when I first made the play, like I told you, there was one of their peers was recently bought out who does Narcan drugs. They were bought out at like a 50 to 75% premium. Oh, shit. Wow. EBS hasn't done an offering since 2006. So they haven't even like sold any additional shares in a very, very long time. That's very wild, actually. I'm looking at their issues, but it looks like 2006, 5 million shares, 12.5 million. I sold AMC 10 minutes ago. I took profits. No, that's really good. That's not bad. But where did all these shares come from? These must have been, they IPO'd 5 million, but they have 55 million shares. It has to be through something. EBS has PDUFA tomorrow. Is tomorrow the 29th? Yeah. President and CEO doesn't own a lot of the company. The CFO bought 82,000 shares. I was in fourth quarter. Shorting MU, Bitcoin. I mean, Coinbase is still going up too. Yeah, Coinbase just went from dead to all the way up. Oh, you got to add? All right, I'm going to go pee. Thank you for complaining. Now I know. Without that, I could have missed my bathroom break, and Osho would have fined me. Okay, follow me on Instagram at The Trading Fraternity. I love you. God bless you. Get ready for Power Hour. It has just began.
Comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. We've got 16 minutes left in the trading session. I'm Scarlett Fu here with Katie Greifeld, and we are joined right now by our colleagues Carol Massar and Jess Menton. And of course, all together, we welcome our full Bloomberg audience across TV, radio, YouTube, and originals. And Carol, we have on Mars. Oh, yes, that's right.
Just telling you.
Can't forget that.
Breaking news.
We're
breaking
everywhere.
News, exactly. We're everywhere. You can't escape us. Katie and I spoke with Chris Marinac of Janney Montgomery Scott. He had a great line, which I just want to share with you. Every day without a bank failure is a good day for the system. So it's a good day.
Like every day you wake up out of bed, that's a good day.
It is.
No, it is interesting, right? And it definitely does, kind of affect the tone that we're seeing. But having said that, we've got light volume, a little bit lower on the equity trade. But yeah, I still am a little bit wary as these hearings go up on Capitol Hill. Yeah. So maybe we'll talk about this in a moment. All right. So with U.S. equities, though, a little bit lower, I wanted to look for some outperformance. I found that, once again, you guys know I love to talk about this sector. The NASDAQ Golden Dragon China Index, check it out, though, with good reason. It's up 3.5% today. We had underperformance yesterday, outperformance today when you look at it compared to the S&P 500, largely because of the news around Alibaba. That stock's up more than 14%, as you know, announcing plans to split into 6 units that will individually raise funds and explore listing. So that's a move that analysts say could help unlock some value. So also, Baidu is up almost 5% in today's session. You got JD.com, that's top of the NASDAQ 100, just up more than 4%.
Wow. And I had to show...
That's outperformance.
That definitely it is. I have to show this chart that I've been taking a close look at and couldn't take my eyes away. So it's looking at the ratio of chip shares to regional bank stocks and basically hovering near a record. So if you look back at these prior highs around 2020, also all the way back to 2000. So this is specifically if you're looking at the Philadelphia Semiconductor Index versus the KBW.
Semiconductors. Ba-da-ba-ba-ba. All right, so crypto's ripping. SPY back to VWAP where we started dumping around 1:30. So it took us about, what, 2 hours, hour and a half to get back up here, get back up to VWAP. Bonds got rid of the mini green panic bin. They're pretty They're pretty much unchanged from the beginning of the day. NASDAQ still down 0.7. SPY down 0.31. In the Dow, down 0.17. Not too bad. Bonds. Let me see. I'm going to try to get you guys more on. I don't know. EBS, like Rita was more groundbreaking and had way more hype. The only good thing going for EBS is the height. That's it. It's been very, very hard. Would EBS put be smart or sell covered calls? I don't know. Do they have options? Even the options are pretty cheap, low key. So maybe the put could be cheaper to hedge. But you're already pretty low. But damn, even selling cut, there's no hype on the option chain. It's like 100% IV, but it's not. It's nowhere near what you saw with Rita. Nick Timmerhouse on CNBC. Where's young Timmy?
$1 billion in deposit. The bank management told regulators on Friday morning they thought $100 billion more might go out the door on Friday. So 85% of your deposits could move that quickly. I do think that's a game changer for thinking about the stickiness of deposits, especially these business deposits that were thought to be even stickier.
You know, our own Steve Leisman was flabbergasted by that as well and tweeted as much, which begs the question, it's not like mobile banking, Nick, is new. Did the Fed not appreciate the degree to which money moves in our system? And if not, how in the world would that be possible?
Well, yeah, it seems very likely that people didn't appreciate how quickly the money could move. This was a bank that didn't seem to be in obvious distress on Tuesday, but after that announcement of a capital raise on Wednesday night, all hell broke loose on Thursday. So, you know, the other fact that got my attention, which was in Marty Gruenberg's testimony, the chair of the FDIC, that the top 10 accounts or depositors at this bank in aggregate had $13.3 billion. So the concentration risk and the ability for those concentrated deposits to move very quickly, I do think that's a game changer here in terms of thinking about, well, this is what we thought we knew about, you know, money in banks and deposit run risk.
You know, I can't help but also think, you know, whenever there's a change in any level of leadership within the Fed, we mention these titles, we throw out names of people, and we say, well, you know, no one has been confirmed yet, the seat hasn't been filled. And in this case, it appears to be so acute because the vice chair of supervision role went unfilled for nearly a year. At the very time, the issues that I showed you on our wall at the top of this interview were happening, which begs the question, do you think that played a role in any way?
I think that's a really interesting question, Scott. So, you know, Randy Quarles was the vice chair of supervision. His term had a fixed end date in September of 2021. Even though he was on the board after that for a few more months, he was no longer the vice chair of supervision. And of course, President Biden's nominee, which was his second nominee for the job, and Michael Barr, doesn't get confirmed until July 2022. So those MRAs and MRIAs that you were referring to earlier, a lot of that activity is getting flagged during a period where there's nobody in that top seat. And it'll be interesting to see whether that could have had an effect. If you don't have, you know, somebody who's the king or the queen in that job, does that add an extra layer of inertia to this whole process?
Yeah, I mean, I'm sure someone's listening to this conversation and said, yeah, okay, maybe that's valid, but you still have a San Francisco Fed president Mary Daly is still, the chief, if you want to say the chief bank regulator in that region, if you want to characterize her as that, where was she?
Well, I think that's going to be one of the questions here is, were supervisors identifying what they needed to identify and flagging it to the right people? And was that information getting to the board? I mean, the board in Washington is ultimately responsible for the more aggressive consent orders and enforcement actions that need to happen. And so I think that'll be one of the very important pieces to come out of these reviews was what was getting flagged, when was it getting flagged, how was it getting escalated, and did it get to the place where it needed to get to get more aggressive if that's what was needed, and it does seem like that's what was needed.
This is CNBC.
Yeah, I don't
Nick
want to
Timmerouse.
let you go without turning to the other obvious issue as it relates to the Fed, and that's what happens in the weeks and months ahead. I don't know if you had a chance to hear my conversation yesterday with Jeffrey Gundlach of Double Line, who suggested he thinks the Fed's going to cut 2 times this year. And I'm wondering, when you hear people make predictions like that against a market that still thinks there's a 50% chance of another raise in May, where the bar lies at this point, to the degree at which the Fed would even consider cutting. Would it take another bank failure, greater seize up in the credit markets? What do you think?
I don't know, Scott. I mean, I've been hearing since last July people talking about rate cuts 6 months ahead, 8 months ahead. And obviously, the people who were saying that last July, that's not what's happened. But it does make sense for the market to price this in to the extent that you have a Fed saying they think that the long-run real rate, the long-run nominal neutral rate is around 2.5%. Well, we're well above that. And so once the Fed suggests they might be done, it's only natural for the market to price in cuts so long as the Fed says in normal times we think 2.5%, give or take, is the right place to be. We're close to 5% now. So I'm not surprised to see the market pricing in cuts, but it's just way too hard to tell how much this is going to slow down the economy, when it's going to break more things in the kitchen here, and how the Fed's going to react.
Yeah, it's going to be fun to watch, to say the least. Nick, I appreciate your time very much. Nick Timmerouse, Wall Street Journal.
Thank you, Scott.
Joining us here at the top of our show. We're going to get much more into this issue as well when we're joined by the former U.S. Deputy Treasury Secretary,
Roger Altman. All right, so you're above the 100-day. I got good news and bad news for you on EBS. Anybody want it? You guys like the video? We're 100 short of 2.5, but I love you, and God bless you, but I don't think EBS is going to be like Rita. So if you're looking for a Rita trying to play the PDUFA tomorrow, I don't think you're going to get that. Okay, that's the bad news. The good news is that the Narcan stuff could help it up, but it's not going to be a Rita. That's it. They have way too much going on. The company is too old. Even though they've been at a high price, it's good, but apparently their debt is all fucked up, and they have a bunch of government contracts. So they make a lot of money, and they've sold a lot of they even sold a couple of drugs recently. But it's just not. It doesn't have the Rita element to it that's gonna skyrocket them up. The PDUFA will help the stock, but it's probably not gonna be that. And then why everybody's just been downgrading the shit out of this thing for the last week, so that's why it is down so much. DEA, I've heard about it, but I think they've underperformed. And even then, I mean, government contracts are stable and good, but if you can't resecure them, that's your risk. And then if it's not as good, then there you go. Long live Longeveron James. He's a good guy. Good guy. Raymond James say AMC buyout would be a windfall. EPR properties rise. Oh. Bruh. That's the winner. No fucking way. Boom. That's your winner out of AMC. EPR properties rises 3 after Intersect reported Amazon is weighing possible acquisition. If they were to acquire, it would be a windfall for EPR, adding that AMC is currently EPR's second largest tenant at 13% of annual base rent. Says the purchase of AMC would eliminate increasing concerns about AMC bankruptcy and future lease renegotiations, which Milligan has said has likely been adding to negative sentiment on EPR. If Amazon were to dive into the theater business with the purchase of AMC either now or when they have burned through more cash, we see meaningful upside for EPR shares at the current valuation. 3 buys, 9 holds, 0 sells, average price target 44. Well, there's your AMC winner. So again, the 13% of that company's rent comes from AMC theaters. I closed on my house today. Shout out Josh and Cole Real Estate for the help. Love y'all and God bless that chat. Amen. That was a process. Oh, then you had to get rid of the other one too, huh? Let's go. God bless. Horna. We love real estate. We love it. That's good to hear, man. I love it. God bless you and congratulations. Woo. Woo. Gifted 5 stock market life memberships. Oh, Moses. He did it again. Are we about to do this? What's happening? Are we about to do this again? I didn't warn y'all. My bad. Let's go. Wrap it up, baby. You got 45 minutes. Bringing in the hype into close. Again, day 2 of kind of bank calm down. I don't know. Another Gasparano scoop. Someone close to First Republic says the bank as of now is not for sale for a variety of reasons, plus just 4 of its 270 brokers have resigned. Fox Business confirms others are seeking employment but may stay as the situation sorts itself out. Now he's pumping FRC. Gasparino, man. I don't know. Any hope for the dollar? There's a lot of hope for the dollar because the dollar will go back up if their banking crisis disappears. But then it doesn't mean the market will, as everybody now has to fight over inflation or rate hikes again. EPR. That one's interesting. I might make today's video about that. We're going to see. We are going to see. Energy Transfer acquiring Lotus. That was in the morning, right? Tesla, bonds. Bonds chilled out. That's it, but let's see. I mean, towards the close. FRC's pop. Again, Gasparino's tweet should make it go up. I wouldn't buy EPR yet, but that would be good. EPR is just pretty much like, what's it called? They're pretty much like MPW. Their second biggest tenant has a risk of bankruptcy. I think that tenant's worse. I think AMC's a worse tenant than Rogers or the other one they have to deal with, or what's it called, like Patrick's? I don't know what the other guy was. Market in France. The banks rated them, or like regulators rated France banks this morning. It was kind of a big deal, but not really. It just kind of shitty timing, considering everything else that happened. EPR X Divvy this week. That's kind of dope. When is it? Yeah, March 30th. Oh, shit. You have just till tomorrow, 2 days? It's not too bad. 9%. Let's see. We'll keep it on watch. 31 days this month. Yes. You need to open up Chad Bank. Stop using the Wells Fargo. Amen. We could. I don't know if that'd be easier. I got an update from the lawyer for the REIT. He was pretty much. He said we could do it. The fees are crazy. You know, like, so if we wanted to make the REIT, we would have to spend. It would be at least like 150 G's a year just for the fees. But he said we need. He said we need institutional. Like, we need a bank backing us. And then he said, if you're like, it kind of turned into a discussion of raising money. And then I was like, I don't want to. He said we could do it, but pretty much our lawyer gave us a different way to go about it. He says we should do a Reg A offering, and then we could still list the shares publicly, and then you'd still go public, but it would take longer to go for a traditional IPO. But even then, he was just saying, like, we need to either get one big bank behind us, or we could do it without it, but he said there's going to be a lot of fees and costs associated with it. I don't know what it would be like to make a bank. I know it's easier to do mortgage lending banks, but that's it. Well, this would be a REIT, not like a ETF is way different, or anything else. Like even the other Chad who IPO'd, the lawyer even looked at that, and he even just said it's a lot of fees to raise a small amount of money. So, like, if you're paying, what, 150, 200 grand a year to raise less than $20 million, I mean, that's actually a decent amount of money, not to mention any other fees or things that would be associated with it. That's just simply, what's it called? That's just simply, like, New York Stock Exchange fees. So, not auditing fees, not other lawyer fees, no marketing, no nothing else. So, pretty wild. But we're still working on it. I'm trying to talk to him a little bit more and see. But I do have somebody who's big, who's down to, like, run it up. But it's getting quite deep. Chad Suisse. I don't know if that's good or bad. Do you personally do hard money for a flip with LT as down payment? Like lending tips? What do you mean? Meet Kevin. Meet Kevin did an ETF. ETF, again, is completely different. ETFs, I think you pay like $250 to $1 million in fees to get it organized, depending on who does it. But it's not like it's not a real company. So you just pay an ETF creator to create an ETF, and then whatever you manage it with. But there's no, like, you don't have audited financials. You know what I'm saying? There's no other. It doesn't, like, it's not like a real company. It just it's an ETF that's not determined by supply and demand, and all it does is track whatever stocks, and then you pay the ETF 1%, 2%. So a real company on the exchange, it's a lot more. That's why when I showed him the Chad, my lawyer was just like, he said you could do it, but he said it's not like you're spending a lot of money and taking on a lot of liability just to not raise really as much, and it doesn't most people, it doesn't rationally make sense. Oh, long term without selling stocks? With long term, well, if I could get away from using my long term, I do. But, you know, if you can use the long term, or if you need to, I don't see a problem with that. ETF is designed to track stocks. So we talked about this yesterday. You should go watch my video. So like with Sal, the creator of wheat, this guy this guy was part of the ETF boom back in the 90s. Sal was responsible for a lot. Like he even, Sal pretty much was even part of the whole USO. The first time oil ETF was ever created, Sal was a part of that. Yeah, Sal is low-key a legend. Like ETFs have been around. There was a wave of it in the early 90s or late 90s, early 2000s. But an ETF is not based off of supply and demand. So if 1,000 people, 1,000,000 people buy an ETF, it does not change the value of the company. ETF can have a premium. However, it's not supposed to. The premium on an ETF should not really exist because the price of the shares should value and track what the ETF is holding. All right, let's try this. You could lose on this one, so be careful. I think $300 to $400 loss on this one, but you will get paid a dividend. I grabbed 100 shares of EPR, $36.85. I think this is going to be a very interesting one, and then you have dividend in 2 days. So you're either going to get clapped on ex-divvy, or if this rumor keeps holding people up, it could be interesting, or even positive REIT news. No, you could short an ETF if you believe the basket is the basket that the ETF is holding, if you believe those stocks will go down in value. But the price movement of an ETF is not based on supply and demand, right? And there's no price to earnings on an ETF. There is for the companies that are held within it, but if you think about it, an ETF, it's not like, so if people are like, oh, wow, I think this company, it's at $5, I think it's going to be worth $20. And let's say the company's really only worth $5 and everybody rushes in and buys it like AMC, the stock will go up based off of supply and demand and people willing to pay more for what it is, right? But let's say that you did that with the ETF, the price wouldn't go up just even if you had 1 billion people buy into it, because the only way it would go up is if the actual underlying stock went up in value. So you see what I'm saying? It's not supply and demand of shares and how shares catch premium and value. That's it. So like legitimately, if I made a REIT, right? Let's say I came out with a REIT. Wait, what? So let's say I came out with a REIT, right? And we IPO'd at, let's say, $20 a share, okay? Let's say we IPO a REIT and it's backed, $20 a share, and let's say it has $5 to $10 million of real estate already in there generating rents, right? Whatever it's doing. And it's at $20 a share. And then, 3 months later, 6 months later, a year, 2 years later, let's say we do very, very well. Let's say we keep acquiring properties, we get them at a discount, we're increasing our revenue, and it's overall doing good. And then a lot of people start to believe in it, right? And then everyone's like, I want to buy this. Let's say even if it only has $5-10 million of assets behind it, if a lot of people in a big institution and a bank came in and people kept buying it up, even though it's worth $20 a share, the price could go to $40 a share because people are anticipating the future earnings are going to increase into that. You see what I'm saying? That would happen if it's a normal stock. But if it is an ETF, that doesn't happen. The only way that could happen with the ETF is if all of the companies that the ETF bought, if that goes up in value. There's no way that you could forecast, a future projection on the ETF unless all of the companies that are being held go up with it. So SPY doesn't have supply and demand factors behind it? No. SPY is just literally the price of 500 companies going up or down. That's why a bunch of people could sell the SPY, but if Apple shoots up 4%, SPY is going to value with Apple going up 4 and then everything else doing their thing. The whole point of an ETF is to track the value of some sort of asset or commodity. That's why, like with wheat or bonds, you buy a bond ETF, it's supposed to track the price of the bonds rather than people buying in or out. So same thing with like even a commodity on there. ETF managers make money because they take a fee. So all you're doing is paying somebody 0.25% to 2% to put 10 stocks together and hold them all into one ETF. That's it. It's a management fee. So that's why it's way, way easier to make an ETF and to like even run it. But you're only going to make 1%, 2%, which is good though. Again, if you raise $10 million, you're going to get paid 1% every year. You raise $100 million, you're getting 1% of that every single year. So like Cathie Wood, all it is an ETF. All ARK is a bunch of different companies that she's added to it, right? And as the value of those companies go up and down, that affects the price of ARK. And then she goes and collects a maintenance fee on there, or what's it called, expense ratio or the expense fee, and is charging some sort of fee to do that service of putting 10, 20, 50, 100 stocks together that represent a strategy or a group of assets. What about SARK? Same thing. If it's an ETF, if you ever see ETF behind the letters, that's what that is. So ARK Innovation ETF is an ETF. SARK Daily ETF, that's what it is. So exchange traded fund. An ETF is something completely different than a stock. It is not a company. You do not own equity in the companies. You're owning a fund that bought those companies and is designed to track it. Let's see. Does it tell me the fees here? Early market on close, 211 to the buy side. Bro, Cathie Wood's middle name is Duddy. Catherine Duddy Wood. Cathie Wood. That's crazy. Duddy. D-U-D-D-Y. That's her middle name. I'm looking here. I'm trying to see the fees on ARK and how it is. But yeah, her middle name is Duddy. That's crazy. Her fees. I see the fund premium is 1/3%. So pretty much you're paying 0.3% higher to buy all of those companies packaged as one than the actual value they're worth right now. Characteristics. Oh, and then her expense ratio is 0.75. So Cathie Woods gets 0.75 a year on everything it's worth. So market cap is $7 billion, and then take that, times it by 0.75, 0.075. So 7.1 billion, right? Times 0.0075. 7.5, right? That's right. Yeah, that's a 7, not even 1%. She's still making $53 million a year. All to just buy and sell stocks and put them all together as a package. So she's making about $53 million a year. So that's why people do ETFs. So it's like straight up, like, the long term. So like, my long term, like the YouTube long term, what I could do is turn it into an ETF. I could go pay a guy to do it, pay him $250,000. He'll make me an ETF. They'll manage it. And anytime I buy stock, I will just buy that amount of stock. And as people buy into it, so if you put in $10,000 to the ETF, I take the fund naturally takes the money and then allocates it to all of the other stocks that are there. So that's all it is. But it's not a company. It's technically a company, but it's not like equity. You do not own any of that stuff. I'd buy that ETF, but I mean, if you wanted to pay me, you can, but it's just I've never really been a fan of them. Like, I don't even add ETFs to the long term. Like, that's why I've always told you, I just go and buy it myself. Well, I was giving an update on my on what we were talking with the REIT, and people were asking if it's like an ETF, and we said no, it's not like that at all. Buy the moderator shirt or invest in the ETF. Buy the moderator shirt. You won't do it. I could lose 88% on my own. Well, here's the funny part. Are you ready? This is where it gets crazy because I have Kathy Wood's ETF performance. So you would have been down 2.7 in 1 month, up 26% in 3 months. Year to date, you're up 20. 1 year return, 40% down. 3 year return, -4. 5 year return is 0.35. So out of 5 years, Kathy has made more money than the investors, unless they sold out at the high. But if you bought 5 years ago, held to this day, after paying fees and everything, Kathy's getting 0.75, and the fund has returned 0.35 after 5 years. Kathy, will y'all? Yeah, so let's see then. Since you guys keep asking about it, Mr. Meet Kevin's ETF, his market cap is $26 million. Let me see his expense ratio. Let's see. His expense ratio is 0.75. So $22 million. 0.66. Okay, times 0.0075. He's making $169,000 a year off of fees. So that's think about it. That's $20 million though of market cap. So it's representing that's people invested into it. Then they're buying, that's $22 million of holdings. 25% of it is Apple or Tesla. 13% is Apple. And that's all it is. It's just you're buying one stock that owns 15 other stocks. And they only have $65,000 in cash. So he has $65,000 in cash as of March 28. Damn. I'm looking into it right now. But it's not like, so all you're doing is you're paying 0.75 to buy these companies. So literally, if you went and just made a portfolio right now, brand new, and then here's your allocations again, by literally the net amount, put 25% into Tesla, 13% into there, and then here's the remaining. And again, there's the cash position, which is 65,000, and then that's it. That's all it is. So you're just buying an ETF that has bought in these 15 companies all as one. But then again, that expense ratio is not even like, I mean, to do that work and to take on that risk, liability, and all that for $169,000 a year, unless it like really blows up, it's not like, it's 50-50. Well, no, hedge fund, you share the profits. So that's the thing. Let's say Meet Kevin or any of the ETFs, if they go up, right? Meet Kevin's fee stays the same. It's all dependent upon the value and money coming in. Whereas a hedge fund, you're getting 2 and 20. You're getting 2% expense fee. Hedge funds they've lowered some of them, but you're getting 2% up front, and then you share 20% of the profits. There's no way to short squeeze an ETF. You cannot do that. Yeah, it's a good example. I mean, I'm not hating on it. I'm just giving the explanation because we're talking REITs, we're talking equity, and it seems like, honestly, it seems like a lot of people, this is what me and Sal focused on for like 20 minutes, 10 minutes. A lot of people just don't realize the difference between an ETF and equity. So you can't, like a short squeeze on ETF, you can't do that. Like it's impossible. That's why when everybody was trying to even short squeeze SLV, it's kind of funny if you really think about it. Yeah, if you go for the biggest holding, then that's a different story. So like let's say Tesla short squeezed and that's the biggest position in there, then boom, that's how you could get a squeeze. But then again, the whole point of an ETF is to be diversified, and maybe one wouldn't really go too crazy. Mm. 2 and 20 was born. I like 2 and 20. Some people do low. Some people do 3 and 20 now, and then some people do 1 and 20, which is weird. But hey, man, you got to get it where you fit in. And Micron's move, I believe, is 5%. Technical analysis doesn't work. It's based on supply and demand. I don't know. If I don't know that much about technicals to say it's off of supply and demand, but the whole idea of the ETF is to track the underlying companies. So the ETF is just it's a gauge that represents a lot more things underneath it than the actual price movements of what you're seeing on an ETF. What's that one I just got? EBR or EPR? Look at Renaissance. Fees are 5 and 44, but they have numbers behind it. It's not bad. It got really volatile. That little ETF comment. I mean, we've been bouncing back and forth, just hanging out at VWAP. Macron up and down. Metro Glass. Trump grand jury won't meet on the case this week. Twitter accounts that follow directly appear in your For You page, says Musk. Do you think San Fran condos are better for appreciation than houses? If they have a view, people like that because it's a city. But I always prefer a house, no matter what. I think just because you have a wider market. But San Fran, New York, Miami, places where there's a big city environment, there is some upside in the condos, but you need a nice condo. It has to have a view. It has to actually be some something that people would want to pay for in that area. But I do prefer property, like land. If you own the land, it's way better, again, because condos come with association fees, and it's a different market that you sell to. Yeah, EBS isn't going to be RETA. That's all I could tell you. You know what I'm saying? So like you could go for EBS, and the PDUFA may help out, but it's not gonna go up 1,000%. Okay, that's it. It's not gonna be a RETA. It's too old, and really their other drugs are more important than Narcan. Oh, Note is on the high. A little AI popper, huh? Buying an apartment. Yeah, apartments, condos, same thing. Usually apartments are just like, you can't rent them, so you can't even buy an apartment. It's like condos are the purchase version. By Lulu earnings, I mean, they could be good. I think Nike had theirs too. Nike just opened a Jordan store in Japan. That headline just came out. Bro, do you see are these real? Do you guys see these like obscure volume candles on the hour or within like 10 minutes of the hour? I saw this one. You just posted me the address. I'll take a look at it. And then we got, what, 15 minutes? I don't know the area, but that view is fire. It's a nice building. That's a nice property. But where's the area? It seems a little too good to be true. And then the homeowner's fee is $795 a month. That's super crazy. Oh, that's in Oakland, outside of Oakland. It's not bad, but that's a good view. I could see that being nicer. I don't know the comps in that area. It looks like it was just recently. At one point, it was 600. 2018, it was like $1 million, so it hasn't even appreciated that much. And then the guy was having trouble renting it for $5,000. That's the problem. His last rental was $4,700, and then he got it rented in March of 22 for $5,200, and now it's not even renting out at $4,900, and now he's trying to sell it. So you got to do the math on that. But like, I don't even think you'll cover cash flow. That's the problem right now. Nothing is cash flowing. Average soon. The UNG is coming soon. Bankers say First Republic is no longer for sale. Plus the real scoop, Amazon standing in theaters, why it's never pulled the trigger. I would just watch that real estate company. But once we get close to the pause, we need to see what this banking stuff does in that whole economic pressure on the SCP. But once we get close to what's it called, the pause, like, and actually could confirm it with the bonds too, then we go for UNG, even oil. But like, you gotta do the math on that one. So even if you put 20% down, yeah. So that condo, like I'm telling you, even like 2018, 2019, it looked to be worth like $900 to $1 million. If you buy it at 1.2, even if you put 20% down, your mortgage payment is $6,800. So that means you're losing about $2,000 a month based on the last rental that he couldn't even get it at $4,900 a month. So even if you put like, let's say you FHA'd it, which no one's going to give you an FHA loan on 1.2, but even then your payment, you would still, even if you did lower down payment, you're losing almost 30 to 50% on that. You can't rent it. You would have to live there and love the house. And then the reason why you would love it, it's a dope property. It has a view. Yeah, add HOA too. I forgot. Add another $700 on top of that, $800 a month. So you could live in it if you don't mind, but then that's the question is like, yeah, you could live in it, but then again, then you better hope it appreciates, but what's the other side of the coin is that you could just rent it out. So like, take a look at this. Where the fuck is Emory? Yeah, bro, that's crazy. There's no way. You could rent anything in that area for half the price. So, like, you could go and get this apartment in the same area. Is that the apartment? I don't know, but that's $5,300 a month. So, like, we're talking, you could go get a straight penthouse in that area. So it's like, why would you even buy there? Do you see what I'm saying? That's the problem with it, because like, so unless you really loved it and wanted to live there, I mean, most of the houses in that area, you could rent and get something way, way better. So welcome to real estate, Chad, because that's what's going on right now. Remember I was telling you how at one point it used to be way cheaper to rent, and then the prices all went up, and then mortgage rates were low. It was cheaper to buy than rent during 2020 to 2022. And then they started raising it, and now we're coming back to that because it should be like that. You got to realize that. When real estate's like normal, it is always cheaper to rent, and it should be. That's great. There's nothing wrong with that. It should always be cheaper to rent. But now if it's like, that's a dramatic difference. You could literally go and rent two houses for the same price as that one. Apple is, damn, that's another $1 even from when I sold it. Yo, Apple is running low key. That pop was decent. I think Apple is moving way, way better. What if you live there and then refinance? That could help, but but that's the whole idea. It's like, if you're going to pay more to buy it than rent, obviously you get to write off interest payments. You get a lot of things. That's 10-minute rigged on that candle too. Like, you get all of that other stuff, but like, you just got to make sure you actually want to live there. If you're actually going to stay there for 3 years and the spread isn't too big between renting, it's fine. You live in it and then you flip it in a couple of years or you refinance, but it's not like, you just, if that spread that Kirot just showed, that's way too big. Like, again, you're better off renting something half the price and then the appreciation on that property hasn't even gone up too crazy. All right, bouncing up a little bit. The other one. Oh, that one's sold. That one's just cheap. That's why I like it. That one I think is decent. Even historical value. Like, that one wasn't even that bad of a premium from when it last sold. But that one I think would just make more sense when you look. I don't know the area as well, but it looks like they all rent at that same price. Your mortgage would be like $1,000 higher. Maybe a little less, but you'd be better off than that other one. Bro, we're rocketing up here at close, man. 10-minute rigged Apple is about to go green. This is crazy. Where's Micron? Oh, Micron's about to go green here too. Cardinal Health said to move carve-out of nuclear medicine unit. Cardinal, they're kind of moving. They had a lot of volume earlier. FRC no longer for sale. You're getting a pop on that. I think this is the price that I bought in at 3 days ago, and it's held. ES 4,000. I mean, let's see what happens at the final 5. They want to burn the short. We did nothing today, man. Y'all have to be pissed. I mean, I think we had fun today, and I'm glad we got to, we got to listen to a lot. We got a lot of info. I think I've dropped a lot of random fun facts on you guys today, and it was cool, but this is a shit show, man. I'm glad I got to clean out some stuff with profit, but that's awful. That's it. Your final 5 is a pro, and I'm glad I sold that Meta. I hope you guys realize why. Remember, I was telling you in the morning this shit would have died. So even if Meta stayed the same price, they've robbed me. Meta's even on the high right now, but that's it. So I'm glad I got out of it. I could probably even rebuy back the shares if I really wanted to. Yeah, Meta's even coming up. It felt good. It is as good. We free ups. That's pretty much like every other week. That's what we got to do. That's why anything I bought today, yesterday, I'm holding them a lot quicker. I'm even if they go down, I'm going to try not to hold them there. That's why I feel bad I grabbed EPR, but the idea here is like little by little, we need to start pulling back until we could load, until we just find a easy target on the bonds and then call it a day. But this type of market, that's because this market sucks, because if you go for a swing and then you get caught on the downside, you could get stuck into it for a wild amount of time, and then it's just not worth it. Yeah, the PG one wasn't bad. PG, because you should have got, if you had 100 shares, you should have got like 110 in dividend. So really not that bad. And then I didn't you were paying like 70% margin on that. Not like interest, but to buy that play, you have to put up 70%, 80% of the 14 grand to hold the shares. A lot of new members included me. Shelby, you've been showing love, too, on the daily, so I'm glad to see you as a member, and thank you all, too, man. Thank you all, too. Let's keep going. I hope you guys are ready, because we got to make it to the middle of the year now, and this year has already flown by, so let's run it. Let's run it, but by the time we get everything, before you all know it, it will be June. It will be middle of 2023. A lot of stuff is there, and let's just stay in the game, and God bless you if you have thus far, man. Let's go, and don't forget about the long term. Our latest long-term updates was not only MPW, but cash. And that's been a fine little staple here of what we've been doing. Oh, shit. We are about to land. Oh, my goodness. Wow. Look at the time, bro. Look at the time. How did we get there? How did we get there? All right, ladies and gentlemen, we're making our final approach. As we make our final approach, you guys are holding on to any bags. Please stow them in the overhead bins above or firmly beneath your seats. We'll be coming through the house with a trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal in description. That's going to be your nightly watch list and main channel layover around 4 p.m. Pacific time. Then we're going to be taking off promptly around 6 a.m. out of sunny San Diego, California. So we make this final approach into San Diego International Airport. It's about 59 or 62 degrees and sunny. Not too bad of a day unless you thought the market would move again. Otherwise, you just got cucked. But we are no longer under COVID guidelines, so no masks are required. But we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate your guys' business. If you're interested in the Cole Rapid Awards program card, please flag down our flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the Colt, and hopefully have a wonderful evening. Let's go, baby. Bring it home. What a hype day. A lot to deal with, but it was hype. I had so much energy today. I think we had a lot of fun, a lot of good discussions. We got to talk about the dollar related. Now, we talked about a lot, but the market did nothing, Chad. So you got to wrap it up here. You don't have that much data tomorrow like we talked about, just pending home sales. I don't know if we're going to get day 2 of testimony, and then we got to see what else happens. If anything is going to lead us coming into tomorrow, it's probably going to be Micron's earnings after the bell. So keep that in mind. I will stay here for Micron if you want to hang out. We will get that earnings for you. But, man, I wanted to go over PHILO. So if Micron takes too long, we can't have PHILO. But if not, then we'll be good, because I need to take a dump. But, Chad, bring it home. Wrap it up. Not much time left. I think futures are above 4,000. You are going to close above the 100-day moving average. It looks like barely. But time to wrap it up. 1 minute. Go, 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 go. Ladies and gentlemen, boys and girls, it's time to bring it home. Finalizer plays. Are you playing the bank stocks? Are you playing the AMC? Are you going for Micron's earnings? Or are you going for more fear or more relief and healing out of the banks? You got to finalize it. Hopefully markets don't move too much. I don't think you even have that much risk to run, but it all depends on what you're playing. But you got about 10 seconds remaining, Chattadonia. So bring it home. Finalize the plays. Options, futures, shares. You better know what each one provides. 5, 4, 3, 2, 1. Ding 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 ding. Oh no, let's go, baby. Wow, we did it, we made it, we did it, we made it. Ladies and gentlemen, boys and girls, that's 7 hours in the books. I need a good game. GG, baby. Let's go. It don't matter if you made money or lost money. I know you learned something. All the people who contributed, baby. Good game. That's how you play. Way to contribute, and thank you. All the members, all the non-members, all the stream alerts. Let's go, baby. All the lovers, all the laggers, all the lurkers. Where you at? Let me get that GG. Why you being so shy? You made it 7 hours. That's no small feat, baby. Let's go. GG, baby. That's how you play. Are you ready? Middle of the week, halfway through, the end of March is already here. Good game. Let's go. I see you too, Twitch. There you go. They not being shy. Let's go. God bless you, Twitch. God bless you, YouTube. All the people that donated, all the new members, all the people that held it down, all my positive people. Good game. Let's go. I'm starting to yell. I'm getting hyped. Good game, baby. Let's go.
Opinions is thoughts, but they don't mean a lot. And my money on stocks, I can show you the top. Every bottom I pop, both the key and the lock. Don't believe me, just watch. Use my freedom a lot.
I need me to rock. You won't see me a lot. Monday through Friday, you need me, let's talk. Please. Allow me to introduce myself. Did the earnings come out? That's it? No, wait, hold on. Good game. But God, I was going to say God bless you, but God, lift is down. Hold on, I'm waiting for Micron. But Chad, I love you all. God bless you, for real. Thank you for being here. I don't have the other links up here, but seriously, if you spent time with us today, I hope I was able to infect you with energy and possibly a smile. I hope you enjoyed it, but for real, thank you for being here. Oh, you got a GG ad? Oh, maybe I should wait. Well, I'm waiting for Micron earnings, but for real, thank you, members, non-members, stream alerts, everybody who contributes and just overall brings a good vibe. I hope you know we appreciate you, and thank you for this opportunity, because it is a joy to be here, and it is a joy to be around some people who just treat it the same way, man. You know what I'm saying? So God bless you, and thank you, ladies and gentlemen. So get ready for Micron. I mean, this could be one that we could trade after the bell. So let me get it ready. Ba-da-ba-ba-ba. I'm going to have one ready for after hours. Limit. Push it to the limit. Yeah. Micron, there it is. Oh, whoa. Loss per share, 191. Estimate was 63. That seems really bad. I don't know why. I feel like they're going to try to scam me on that, but that feels really, really bad. They lost 2.31 billion. Uh-oh. Are they going to squeeze me? I went short at 57.60. I'm already down $1 per share, but that seemed really, really bad right there. They guided down on they guided on the low end and then raised the high end. Now it's starting to tweak out. I probably went too early. High end guidance, low end on the bottom side. Oof. Damn, bottom tick, Josh, on that case. Now it's pop. Oh, wow, they already squeezed me 3, but I went smaller, though, so that would have been a lot better. They just scammed with the range, but that EPS seems awful, and then it does not seem like their cost-cutting has came in here. So let's see. Wait for it. Wait. Only down $1 now, but I don't know. So they guided 3.5 to 3.9. Estimate was 3.75. EPS was a loss of 231. Estimate was a loss of 63 cents. That's why I went for it. And then adjusted loss was 199 versus 191. Estimate was 63 cents. So there it was. Should be really red. I would think so, but let's see. They see adjusted gross margin negative 18 to 23%. Estimate was 3.6. How is this up? Bro. They see third quarter adjusted loss $1.05 to 7 cents. Estimate was 84, so that's not bad. Bro, they just guided their margins to negative 20%. Oh, my God, I hate them. Could be worse. I don't know. That one's pretty bad. That one is, like, very, very bad. But they're up 1.8 right now. Again, they were only pricing in 5. They were already down prior. Man, I always get squeezed on chips. I'm down $3 a share, 153. But the numbers look pretty bad. I have no idea why it's going up. I think maybe third quarter guidance on EPS is better but then again, they widened every single range. Negative 20's fire, bro. Chips literally the word. We haven't seen no layoff, no nothing yet. And then Lululemon, they guided up. So Lululemon came out and they're beating. Yeah, Lulu pop of 5% on beat. NVIDIA popping. Intel's popping. All the dude, I'm telling you, those are really bad earnings. I guess it could have been worse, or maybe their range is just too wide, but nah, they're scamming on that. Got to pump it up. Pull the Intel. Intel did that initially and then it died, but nah, that one, dude, I've never seen an up candle on guidance of negative 18 to 23% margin when the estimate was a margin of 3.6. I don't even know how that's possible. That means they're expecting in the next quarter to lose 20% on everything. I don't know. The estimate was that they'd make 3.6%, but they're saying gross margin, not even operating margin, will be at negative 18 to negative 23%. Lulu did good, it looks like. They rise 3%. They guided up on revenue. They beat forecast, and they guided up EPS and revenue. Average down. I could, but I'm kind of a little shocked after that initial reaction. Let's see. I think it'll come down. But Micron doesn't always move too much. Intel, okay, Micron rises 2%. Sees third quarter adjusted loss 151 to 161. Estimate was 184. But then they also guided up to 7% positive on that. Oh, what? Why does Lulu go down? I'm so confused. Bro, Lulu is like an easy one. I love it. Okay, more Micron. Gross margin, negative 31%. Estimate was 8%. Dude, these Micron numbers are hideous. Bro, this should be down like 10% right now. Fuck out of here. Yeah, I'm getting back to it. I'm only down $1 a share now, but, bro, Lulu just guided up on EPS, guided up on revenue, and now they're tweaking out. And then, bro, even more bad numbers on Micron. Yeah, adjusted loss $2 billion. Dude, every headline is hideous for them. Operating loss of $2 billion. Estimate was a loss of $676 million. Josh is finally realizing the stock market is run by scammers. I mean, I usually have a margin of error. Like, my tolerance level is high because I've seen this for like 15 years, a little longer. But this one is awful. But, hey, I went with 50 shares instead of 100 just in case. So in the back of my mind, I know they're all scammers. But this one's bad. This one is like, I don't even know nobody is buying this except for a computer. But even then, my computer mind tells me to sell everything on that. That's awful. Everything is awful. Adjusted revenue came in at 3.69. Estimate was 3.7. But again, their margin, their EPS, operating loss is just hideous. It ends here with Micron. It's a really bad report. No, there's no way. I can't even tell you it could be worse because this was like Intel. This was bad. Like, this is bad. Oh, my gosh. Okay, now I'm about to go green on it, but shit. Scammers, dude. Micron, again, guided down. They see third quarter revenue, 3.5 to 3.9. Estimate was 3.7. What is anybody saying about this? This one's bad, bro. This one is, like, hideous. Let's see. So here's the full report. Third quarter forecast, 3.5 to 3.9. Estimate was 3.7. Adjusted loss of 1.5 to 1.6. Estimate was loss of 84. So that's 100% higher in loss. Adjusted margin, negative 18 to 23. Estimate was a gain of 3.6. Adjusted operating expenses, 885 to 915. Estimate was 891. And then for this quarter, revenue was 3.69 billion. Estimate was 3.7, down 53% year over year. Adjusted loss per share, 191. EPS versus 214 a year ago gain. Estimate was loss of 63 cents. Adjusted gross margin this quarter was negative 31.4 versus a margin of positive 47.8 last year. An estimate was a margin of 8%. Adjusted operating loss of $2 billion. Estimate was a loss of 676. Adjusted operating income margin was 56%. That's where it is. That's why they're up. Adjusted operating income margin was 56. Estimate was 22.4. It's accounting tricks. But that's not even bad, though. That's what's saving it. Cash flow from operations, $343 million. Estimate was $923. R&D, $788 million. Estimate was $807 million. And then adjusted operating expenses, $916. Estimate was $914. The guidance assumes a write-down of approximately $500 with inventory produced during third quarter impacted by GAAP and non-GAAP diluted by approximately 45 cents a share. Customer inventories are getting better, and we expect gradual improvements. Supply and demand, we remain confident in our long-term demand and are investing prudently to preserve our tech and product portfolio competitiveness. It's the operating margin saved them. That's what it is, and then it's all because of write-downs. That makes a little bit more sense. I'm not as mad, but still pretty shitty. So that's their operating margin was way better than gross margin, but shit, those numbers look hideous. Okay, fuck these guys. I'm closing it. I'm going to take a loss of 120. I don't want to deal with this shithole. Fuck them. It reminds me of last quarter with NVIDIA. I remember NVIDIA had bad earnings, and I thought China was going to open up red, and then everything opened up green. No, I'll take it. I'm not dealing with this. That stock should be at maybe $40. I'm not going to fight it. If, again, it's accounting tricks. It's just operating income or operating margin versus adjusted, and then they're blaming it on inventory and write-downs. So whatever that guidance comes out as, so they're probably going to come in with way better guidance than not. They have to. That's the only way you could keep this story up. Only way. Earnings, Micron. What about next quarter? All of it's bad, but they're gonna try. It's gonna be convoluted. They're gonna blame it on inventory, and then if you write down $500 million now, bro, you have 100% margin between your margins. You're telling me 56% operating margin, and then your gross margin is negative 37% or something like that? That's insane. That's a 80 to 90% range in terms of your margin and that doesn't make most people. Your gross margin doesn't drop like that, and then your operating margin skyrockets. But then that could be a sign of cost cutting, or it could be a sign of anything else. Or it could, yeah, you're right, dude. It could just be sound and resilient. I didn't really even think about that. You got a point there. You got a point there. Honestly, I didn't even really think about it. It could be sound and resilient. Of course, it drops now. It's a shit show. Nope, now it comes back up. Because Micron's up like 30%. That's what I'm saying. The stock should be at $50 maybe. But I'm out. I'm not going to try to play it. I'm not going to try to fight it. That's what I'm saying. This market, I'm not trying to fight. If I could get in, get out, and I'm lucky, great, give me it. But if that's the case, I mean, my mind is telling me that should be down 10, 15%. But it's not there. I'm not going to try to push it. But I hope you're doing good, Chad. Let me go pee, and I'll be right back.
Yeah. Come music. In your Benny, you bullish. But baby, I'm not from Chicago. Heard me talking about Ivy and dripping in bad. They thought that I came from the hospital. No, I just came back from trading. Just to the sun, no vacations. I'm really not trying to be flagrant when I tell you that most of my calls will be naked. Funny when I make a bad play, I get a standing ovation. It's like I'm addicted to antibiotics to try to get rid of this clap. But fuck it, I always come back in the AM to the GG. What's that stand for? I am not a drug dealer, I'm a landlord. On my Tennessee the roof, that Mercedes-Benz don't need one. I went from Bailey to Bel Air, from the slums to the Ville to the top of the hill to a street where you can't park a car without a parking pass. I'm trying to chill with my boys in the island off the coast, bar hopping like it's Alcatraz. Watching make moves like a salsa class. Plus I got so many bars like the 1 minute chart. I already know you can't handle it. You ain't making moves, you a mannequin. You ain't got that flame, that candlestick.
They ain't got that flame. Tell them it's a coat, not a game. Walk through the mud and the rain, just bring a little hope to the people in pain. I don't want lies, I want honesty. Negative vibes bother me. Stay up on your grind until you make it out of poverty. You ready? I'm ready. Let's get it, my bag on heavy. I'm zoom to Fetty. My pockets look full, not empty. You loaded, I'm loaded. We never gon' fold, you know it. That's fast right there, go quote it. It's coke, we goated. Different level, it's level, untold. They watching, we popping like options. You know, it's real, it's really real. Like PHILO time. Cause you can't help but make a meal if your people blind. Restless, cause I've been up grinding, I just want the lessons. Cooking up like I'm making breakfast. Oh, I'm eating good, but you know I had to bless it. Looked inside the mirror, told my demons hit the exit.
That was Benny, that was level. Fuck the demons, fuck the devil. Throw the pebble, be successful. You can't tell me code ain't special. I got rich, I made a stencil like a chair. It's really simple, the framework is intellectual. Like curry on the chain, my brother, you know, wait, I know you know name. You ain't never seen my face, probably watch us in the game. Did it with a couple plays, let me kick a little lesson. You ain't never get a chase. What's yours, you always get. So what I'm really trying to say. Longer that you on the stock, more that's getting safe. You like the shit I say, I ain't trying to make it stay. Hey, I'm hitting plays, I'm hitting waste. Your portfolio all day, mine's filled with mostly grace. Apple, Amazon, and Facebook. You probably know the names. You probably thought that you should wait, then went and bought a course to trade. Benny, Guess I'm closing by to close this shit. Clap them if they talking on some hopeless shit. Cause I've been there and going back. I told y'all that I'm focusing. I know they getting mad. The news is fair as well as motivating. Let's go and a shout out to the vets. Hit the players, then we sending in the jets. Don't be shy, you could send a pray request. And the list got everything you missed. Love y'all, baby. It's a cup. 2020. But talk to me in 2030.
You know what it is, baby. Cold music, 2020. We coming. Watch out.
On the radar. Tell them I just want the Lexus.
We out here making moves, baby. Let's go.
Strategy EDM. Buy when it dips low. Used to hit my bro when my ends low. Now his fingers up in the end zone. Chatadonia. Oh. Yes, it's PHILO time, bro. And I'm excited for this PHILO, you know. I might be giving it to you a little too early, though. You know why? Because I gave y'all some for the end. You know what I'm saying? I gave y'all some for the end, but, like, the end of the quarter. But, like, are y'all ready for this next quarter? Okay? That's it. I'm here for people who want to get ready for it. I don't know what you believe. I don't know what you think. I don't know what you think this is. But I'm just saying, does anybody... Well, are you guys ready to take control of this the rest of the year? Of course, but like I want to start off this quarter on some shit. You know what I'm saying? You know what I'm saying? I'm trying to. I don't know if you're ready. You let me know, but that's kind of the theme of all of this. Okay, and what I want to share with you. Micron says days of inventory peaked in Q2. That's a good sign, I guess. But oh man. But no, man, like seriously, one big thing, and I'm going back to it as always, you know, it's like a mix of like discipline, but this is going to be there's a lot going on with this PHILO. So I'll tell you how it started. I was looking into some PHILO, not like my other PHILO, but like philosophy, and Rene Descartes. And he brings up some interesting points, but there was something, I was reading some old Rene Descartes. It's talking about the passions. That's what he calls emotions. He calls them the passions of the soul. Oh, and it's very, very great. Very, very great. But there was, you know, and how Rene Descartes, you know, again, Rene Descartes, cogito ergo sum, I think, therefore I am. You've probably heard it. It's the basis of a lot of modern thinking. If you actually really go and look into it, a lot of people, you know, even Rene Descartes is crazy. Because the thing about Rene is like he'll say something, but like he always doubts himself and he goes over and over and over. And then he's like, well, it's like this, but it's not like this if this happens. And then if this happens, and then if this happens, and then it goes deeper and deeper and deeper and deeper and deeper. It's quite convoluted. But there's one piece of advice he gives, and I love it because he's taught, I think it was like Queen Elizabeth or something like that. This was in the 1600s. He's writing letters to this queen. And they're going back and forth, talking about morality, talking about this, talking about that, right? And one thing that he always refers the queen back to, as well as others, in other discussions in some of his work, he tells people to go and read Seneca. Ha ha! You know why I'm clapping? Because I've read you Seneca. I have read you Epictetus, the Stoicism approach. And that's why I even put it on that member post there. I said the PHILO of the day is just something to remember, is that you have to control what you can control. And that is like, it's funny because Descartes goes into some real deep shit. But it's funny how like when it comes down to practical advice, that's what he boils back down to. And controlling what you can control. And I don't know if people misinterpreted it, but like this is what Seneca even says. Do you realize a lot of things in life can be taken from you? I don't know if y'all feel me. Oh, come on, Chad. You know that, right? Things can be taken from you. Ask Micron market makers. No, I'm kidding. But for real, you know people could steal from you. Somebody could take your life. Like a lot of things everything you have can be taken. But the funniest thing is that nobody can take away your attitude. That is the only thing that cannot be taken from you, Chad. You realize that. Things can happen to you. Things can be taken from you. But how you respond in your attitude towards anything, that is simply in your control at all times, 100% of the time, no matter what. It's a really crazy concept. Because if it does boil down, it's like that really is the only thing. So that's what I want to really start this with. But then I'm telling you, this gets weird. This is what fucking happens if you go and read Renee, because this is all over the place. I'm telling you, it's all over the place. But he goes on and he talks about other stuff, and this one really just stood out. And he talks about the passions. These are emotions. And again, Renee is very important for separating the mind from the body. And the idea is the mind is separate from the body. But then he goes on to a very deep discussion about the union between the two. Even though they are separate, they work together as one. So I could give you, we could talk about this for days and go over a lot of it. But I like what he says in one little thing. And this is where you understand what is good and bad for you. And this is why I brought up discipline, because this is just where it comes down to. And, actually, before I even give you some of the punchline, the thing you got to understand is why both discipline and really taking any control of this is, and really understanding what is good, what is bad, the balance between the mind and the body, and letting them work together. There's something crazy about it, is because, and I'm going to just tell you this right now. I'm going to call some people out right now. If you do not figure out this separation, nor do you actually give it attention, my friend, you will be unproductive. And I don't mean that in a way like, get a side hustle, you're a piece of shit. No, that's not what I'm saying. I want you to genuinely look at this from your own perspective and just tell me that anytime you are thinking and worrying about things you cannot control, tell me it doesn't make you unproductive. Tell me that when you are worrying about this, it's called the unraveling ball of yarn. That you go through, you go to work with it, you go home with it, you take it everywhere you go. There's stuff you think about, whether it's in your control or not. It's like a ball of yarn, and you try to unravel it every time. And then what ends up happening is that if you don't find the answer to that anxiety, that stress, whatever it may be, that ball of yarn, it ends up leaving you with it. It's not fulfilled. And when you can't find it to be fulfilled, you become tormented by it. Or at the very least, you become unproductive, or even worse, you know what happens? You find something to replace it with. That is why, I'm going to bring this example up, but don't get mad at me, because I love it. But I don't think that it all depends how you use it. And I only bring this up because it's an easy example for me personally. Video games. Boom. Right there. Some people, you unravel that barn of yarn, right? You're going back and forth between the emotions, the passions of life, unraveling this ball of yarn, focusing on something that is outside of your control. You're not able to get the fulfillment to be able to find the answer. It torments you, and then guess what happens? How do you get away from it? How do you cope with it? You distract yourself with another behavior. But that's why video games, I would do that when I remember I got a root canal. I had fucked up teeth growing up. You know that? I would eat a lot of chocolate. I would eat a lot of candy. I would eat too much candy, and I got a root canal when I was younger. I got multiple root canals, right? And guess what I would do? I remember it vividly. I would tell my mom, I wouldn't even need a pain pill, because I would just go play Halo. I don't know if you feel me on that. I'm telling you, if I'm in physical pain, you put me in front of a video game, my pain level goes down 70%, 80%. If I'm really into it. Napping counts. There's a lot of behaviors. I'm just using an easy example. So I don't know if you feel like you haven't been unproductive. If you feel like you've not been productive lately, maybe think about this unraveling ball of yarn. And maybe stop trying to unravel things that are outside of your control and letting it lead to a change in control of your attitude, which is in your control. You see, because then this is the point that he says. This is why you got to separate mind and body, but they do work together. And this is the problem that Rene Descartes had a problem with, because there's certain things of nature. You know, Rene is a big guy in terms of the animal spirits. You know, a lot of philosophers, they recognize it's like your human nature, right? And animal spirits, right? That's why, honestly, like, y'all don't fucking get it. Like, Yosh is an animal spirit. I'm not saying I got some weird, like, demon shit like that. No. I'm saying it's like your reaction to stuff, right? It's like sometimes certain things come out. That's your animal spirit. Some people, I put you in a certain situation. Somebody says something to you. They say the right type of word. I put you in front of the right thing. I get you in front of the right girl. Whatever, something comes out of you, it's that animal spirit. You act a little bit. You act on something natural in you, right? I don't know. It's not a character I play. No, it's just sometimes naturally I will clap back at people. It's like, I don't know if it's like territorial, but it's like, come on, it's like, what, you want to beef? Some of us have it in us. Some of us have fight or flight. I would say Yosh is my animal spirit of fight. You want to fight? Let's go, run it. Some people it's flight. Some people it's run away. There's a lot of things. But yeah, ego more or less. And it does boil down to that. But this is what he talks about, is his animal spirits. And things come out naturally. And guess what? It's not bad all the time. You're right. This is now where the Christian logic and a lot of things, this is where people get like worked up on it, because that's where like some people like, no, it's bad, right? And this is where some people don't even want to read the Bible, because they feel like the Bible was telling them that all of these natural things that God even created is going against them, right? And they're saying, well, why would it be bad if I do this? Well, why, if it was natural? You know what I'm saying? And that's where people kind of slip up a little bit on this. But Descartes says these things aren't bad. But if you don't have any sort of limit or discipline or hierarchy to be able to say this is good or this is bad, this is my limit towards it, that is where it becomes a problem. That is where the balance gets out of whack. That is where the mind begins to affect the body, or the body will again affect the mind. So this is what he says, and this is what he loves, and I like it, because I hope it keeps it in mind for you with the passions, because that's it, the emotions, the spirits, right? These are he calls them passions. It's a great way to look at emotions. The passions of the soul is what it is called. But he says you got to separate them, and the whole point is to understand where they're not all bad, but there is a relationship. And with that relationship, sometimes what's good for the body is not good for the soul. And what is good for the soul is not good for the body. Oh, I don't know if y'all feeling me on this one. Oh, you got to add? Do I have to wait now? Should I give him a couple of seconds? Is this awkward now? This is getting kind of awkward. I want you to think about that if you heard it, though. We'll wait for everybody else to come back. We'll give them a second. That's very deep. I know. That's why I love it. And that's why I want to share it with you. So that, you know, like I'm saying, this is all about discipline. Like, seriously, I want you to have discipline on what you think is good for you. Or I'm not telling you what's good or bad for you. I'm not telling you what emotions or passion. I don't know what it is. I just want you to understand the relationship. Oh, y'all don't feel me, Chad. That's y'all. Some of y'all don't know what you think I'm doing, what you think I'm telling you with all that. You know what I'm saying? I don't care what you make that decision yourself, young man, young lady, old man, whatever you want. I just want you to understand the relationship between the two. That's all. You figure out your limit, whatever you think is good, bad, but I do want you to understand that this is how it works. And this, unfortunately, not everything is good for the mind and the body, the soul and the body. Sometimes there are things that are good for both. But the problem is that sometimes some things are good for the body, but they are bad for the soul. That's why some of the physical pleasures of life, like go drink some alcohol. Honestly, you could go do certain drugs. Your body will feel good. But how will it affect your mind and your soul? And how will it affect how they work together? But guess what? You know what happens sometimes too? Sometimes a real deep conviction and prayer and change to the mindset is very good for the soul. But sometimes it affects the body negatively. You get tired, you get exhausted, you start to feel guilt, and it's not from your soul. It could come from your body, like your body and other things, right? Oh, y'all don't feel me. Come on, man. So this is something to think about. And finding out your levels. I mean, pretty much that's why Rene Descartes says it's important to study the values. And it's important to study the features and to know the passions of the world. And to know what you value as moral or immoral. Or what you value as good for you or bad for you. And if you don't have that, then this mind-body balance starts getting fucked up. And then what happens afterwards? What ends up, this is the other part I really like. I already told it to you. The other part is that unraveling ball of yarn that we all deal with in our brains, depending on how much we let things outside of our control us or our attitude. Because if you don't take care of this relationship, you are more likely to feed an unraveling ball of yarn that keeps getting tangled, and it will lead you to find a different escape rather than focusing on the mind or the body to take control of it. Are you feeling me? So, it's pretty wild, Chattadonia. It is pretty wild, but I love this PHILO. And like I'm saying, it's kind of all over the place. I did boil it down to discipline and controlling what you can control. But it's like a discipline in the mind as well as the body, but it's like the discipline to know this is my limit. This is what I think is good. This is what I think is bad. This is how I will go about maintaining the balance. But that cannot happen without a discipline nor even an awareness of what these values or things are. And on top of it, I mean, the best thing I could give you is like, I don't know what anxiety or things you're going through now. And like I remember I told you that last week, and I was telling you how a lot of people, you know, it's like no matter where I look, it's like a lot of people are going through a lot of different, it's like weird right now. And this is why I'm saying just watch out for the ball of yarn. You know what I'm saying? I want you to be able to get around that. And it's just quite simple where if it's outside of your control, stop letting that add to that ball of yarn and stop, you know, weaving it in or there, because that is going to kill your energy. It is going to kill your productivity. It is going to get you away from the mission that you are on. So I don't know how spiritual or philosophical you want to take this, but even straight business mode. If it's not helpful, there's no point. If it's out of your control, you cannot give that any attention. But I think this is what's happening a lot, and it's leading, again, the mind, the body. Then we're doing something for our mind. It's hurting our body. We do something, giving it into our body. Then it ends up hurting our mind, and then now this ball just keeps getting crazier. And then you're like, I don't know why I feel like this. It feels weird. And then it's like, and then now, 7 weeks later, guess what? You don't even know why you're fucking stressing. That's what Rene Descartes says. That's what's part of it. Is that as it keeps getting tangled and tangled and tangled, you may be stressing out on something today that happened 3 months ago. Oh, come on. Do you understand that? Do you see what I'm saying? Seriously, something there, whether it was the mind-body balance, it could have happened 3 months ago. And then it's outside or something outside of your control, and then you're thinking about it. and then you didn't really answer it, and then it goes with you to work, and then you come home, you go make your trades, and then back of your mind, you get a little bit of free time. You're not, and then if you're not disciplined with your thoughts, right, you're not giving. That's why Proverbs says, fix your thoughts on the Lord. That's what I've even realized with it too, because if you're not sometimes, or if you're disciplined of where you are giving your attention, even if it's social media, you start thinking about something, and then but again, you keep stressing on it, and this thing happened 3 months ago. And then more and more, day by day, you start unraveling it. And then you add something else to it. And then something else is added to it. And it's like, wow, this anxiety. But it's like, why are you stressed? Where did it come from? What is really bothering your body? What is really bothering your soul? Is it in your control or not? But like the whole point is, it probably starts from something way, way back there. So it's good news and bad news, right? The best part is stop playing with the ball of yarn in your mind. Maybe try to figure it out what it is. Be real with yourself. Look in the mirror. Say, okay, I'm tripping on this. It was because of this. It was this thing in my life that got in my way. Simple. Okay. Is it what is in my control about it? Maybe I can't control the situation at all. However, I can control my attitude towards all of it. So try it. Let me know what happens. And just keep in mind, like I told you, the relationship. Mind, the soul and the body. In unison, sometimes some things are good for both of them. And at other times, sometimes it's good for the body, but bad for the soul. Sometimes it's good for the soul and bad for the body. Don't let that get out of whack too crazy, and just keep that one in mind. And I think you'll be good. But this is what I'm telling you now coming into this quarter. Because this is what I'm saying. I want discipline on this. You could do whatever you want. But this is, I'm excited by this. And I need to double down on this one. And bring, that's where it's control the balance. Don't give the energy to the things that are not going to get you there. Why add to this ball of yarn when all we can control is our attitude? There will be things outside of it. That's the beauty of it, because I know a lot of people in here, myself included, we have skills and abilities and talents, and we could do things. And it's not as if we are hopeless individuals with zero control over our lives. But just boil it down even with your attitude, and you will be good. And find a way to get in control of this and say, this is my limit, this is my discipline, and I am going to feed those things that are good for it. And then instead of, getting unproductive and wasting my time on the things that are bothering my body and mind and doing this, I will change the attitude. Or I will at least focus on setting a limit to what is good or bad for me. So, Chad, I hope this helps. I hope you're ready. And let's get it going, and I hope it doesn't confuse you too much, because it should confuse you, because even myself reading any of this shit gets confusing, and that's the nature of Rene Descartes. He's a crazy mother, you know what I mean? He loves cross-eyed hoes. That's a fun fact about Rene Descartes. All the girls he were in love with were cross-eyed. How do we know this? Because he writes about it. And then he even gets distracted very easily. And he would even, Rene Descartes was, I'll give you the other one that he talks about with fear and doubt. That my man is a genius. He's even responsible for even an early part of geometry. Yet the guy always thought he was stupid every time he would go to school. So he is really all over the place. So if none of this is sticking 100%, that's fine. But Rene Descartes would tell you to think about this. So just give it a thought. Maybe listen back again. Let me know what you think. But let's go. Let's see what we could do with this. And let's hopefully, I really, truly hope it inspires peace. And I hope it could give you more control and the control you deserve, and be at peace and stop letting the ball of yarn, unravel its way into a confusion that stops you from reaching the potential and the work that you could actually put out. Amen? Amen, baby. That is your philosophy. Woo! There it is. But that's it, Chad. I hope it was worth the 1-day delay. I hope you like it. I hope it wasn't too crazy or too confusing, because I'm telling you, man, you know what I'm saying? The dude goes nuts. There was a lot to take in right there. So I hope I didn't give y'all too much. You're like, what the fuck do I do with this, Josh? What do I do with this, man? I don't know what I do with it, but let's go, man. Get some control. And remember, man, you control your attitude. Just don't ever forget. And even Rene Descartes, if he couldn't even give you the easy answer, or if everything was too complicated, he would tell you to go read Seneca and say, control your attitude. That's the funny part about all of it. So, amen. Amen, Chad. But I got to get going now. I hope you enjoyed it. Micron earnings was BS, but we are going to be here tomorrow. Let's see what happens, but that is the day. Go read the books, Richest Man of Babylon, Proverbs, New Living Translation, and The Strangest Secret in the World. And Chattadonia, don't forget why we're here, why we keep going, man, why we got to exert this discipline, why we got to take care of our mind, our body, our soul, and even show love for each other, and why we even seek peace and productivity and working in general, baby. Why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. Woo! But Chad, I love you. I got to get going now. You have a wonderful evening. I will see you on the watch list, and peace out. Yeah, I tell you one and over. My mind, body, build back better body. We're gonna build a better body for the people. Listen, I'll tell you what. You want to know what I love? I love ice cream. Ice cream's great. I heard they had chocolate ice cream, so I came down here. Yeah, not a funny joke. You want to tell you another job? Okay, I gotta go, you guys. So I'll see you tonight, tomorrow morning, next month, week in the leap year. I'll see you on the leap year. Okay. All right, I gotta go. You have a good night, and I'll see you later.